500 call for 18 rupees a pop. People are taking a shot at that one. And the support has moved higher as well to around 26,100. That's the action that we see from the 26,200 put. So all ingredients are in place. The question is, when does the cake bake?
Hey, Manglam, baking the perfect Christmas cake. You're making me hungry early up in the morning, Manglam. My God, all that reference to cake, Rima.
Well, let's get on then with the equity calls for the day. Now, Gautam Dugar and Motilal Oswal Financial Services say that they have a positive outlook on the Indian equities and believe that the Indian markets are well poised to retrace the underperformance of calendar year 2025, supported by better earnings prospects, supportive domestic macros, and improved geopolitical situations. Valuations, particularly for large caps, they say, are not demanding, while earnings appear well poised to deliver mid-teens growth over FY26, FY27. Their large cap top picks are Bharti Airtel, ICICI Bank, SBI, Infosys, L&T amongst others, while the top mid-cap picks include Swiggy, Dixon, Suzlon, Jindal Steel and some more. Well, by the way, talking about domestic cues, yesterday the RBI made a very surprise and a very large liquidity move. So they announced 2 lakh crore of additional open market purchases, OMO bond purchases, plus $10 billion of a forex swap. Okay, we'll talk more about it, but this basically the RBI announcement could push the yields lower, which means borrowing costs come down, which is positive for credit and therefore positive for the equity sentiment as well. So that on the domestic front is the other big cue. But let's continue talking about the global macros where we're headed from here into the year end. Mark Matthews, Bank, Julius Baer & Co. is now with us on the show. Mark, thank you very much for joining in. Let's begin with how you expect the Santa Claus rally to play on. US markets have had 4 consecutive days of gains on the trot. More to go. What would be the year-end targets for next year, 2026, and the big bets?
I don't see why we won't get a Santa Claus rally. We usually do get one. And the news in the last 24 hours has been constructive. I was eavesdropping on your conversation and, for example, Treasury Secretary Scott Bessent talking about getting rid of the 2% inflation target. The GDP growth in the third quarter was announced at 4.3%. We haven't had that kind of growth in several years. And it seems like the AI/technology bull market is back on. So I think we can get a Santa Claus rally. And then moving into next year, the EPS growth forecast by the consensus for the S&P is around 14%. And the price-earnings ratio of the stock market is basically where it was at the beginning of this year. So I think it is possible we could have another good year. We're in a situation not unlike the late 1990s, which everybody remembers for the tremendous sell-off that followed it in 2000 and 2001. But we may be more like, say, around 1997 or 1998 than 2000. And if that's the case, then, we certainly can increase more than we have already.
Mark, hi, season's greetings to you. And wow, I hope you're going to wind up the day early, get set and steady for all the festivities. Thank you so much for being with us this morning. So, here in India, we've watched a lot of global markets rally on, especially markets in Asia, like South Korea, even Japan, Hong Kong, for that matter. We want to believe that 26 is going to be, in some ways, the year of India. That is a view that some in the market, for instance, Morgan Stanley shares that view. But what do you think?
I think so. I have to admit, I didn't think this year would be as pedestrian as it turned out to be for India. And I think in hindsight, obviously, you see things that you didn't see at the time, but I didn't see single-digit earnings growth for the Nifty, and I didn't see the big FII selling. But those are in the rearview mirror, and going forward, I think that with all the interest rate cuts and cuts to taxes that we saw this year, and a reasonably low base, we can look forward to earnings growth next year. Our own forecast is between 16 to 18% for the Nifty. And I think the FII selling should be completed. It was, in my opinion, to finance a reallocation to China after years of not being in China. Foreigners decided to go back to it this year. And the only emerging market they really owned in size was India, because you can't touch Russia. Brazil has some pretty strange politics. And all the other emerging markets are very small. So India was the natural place to take money out of to finance that China trade. So putting all of that together, and I think people looking now to diversify a little bit away from the mega cap technology trade, just in case for some reason it doesn't pan out. They're looking for other places to have some money. India, I think, is well positioned.
Right. You know, one of the things that did not do well for India this year was the lack of an option in the AI trade, which was doing extremely well back through the year. Now that the AI trade is coming undone, or people are realizing or bringing it back to reality, do you think that, you know, the erstwhile beaten up IT names in India, which were impacted by the AI trade, will perhaps come back?
Well, I actually think the AI thing has more to go. It might not be driven by the OpenAI ecosystem next year or Bitcoin, but I think it will continue. The sheer scale of investment that is going on in AI, I don't see it stopping, and I see increasingly corporate America bringing AI into its own architecture. And so demand for semiconductors and other hardware and software will still be very strong. Now, the Indian angle, I think, was the reason for the underperformance in the Indian IT space. Firstly, that a lot of what those companies do could be replaced by AI. And secondly, that they got caught up in the trade spat between India and the United States indirectly. Going forward, I think that nobody can predict the outcome with the trade relationship, but I suspect there will be some resolution to that next year, and that should help the IT space. And then whether all of those companies will be replaced by AI, I kind of doubt it. I think they'll find new things to do and new ways to participate in technology, even if it involves AI. So it is a sector that's derated, and I think it bottomed a few months ago, and definitely one to look forward to better days next year.
Very quickly, Mark, what's interesting is that US yields have been gradually kind of inching up, not too much, but I'm talking about the 10-year, the long end. And then these comments about we need to see who eventually heads the Fed, if the Fed is going to be far more lenient, if they do change that inflation mandate or not. What do you think of this and the way money may shift? Because a lot of money has gone into the precious metals market. So do you think some of this uncertainty will keep pushing gold and silver higher? But how much higher? I mean, look at what we've seen this year.
I would have had a temptation to start trimming on gold, but I said that a few months ago and I was wrong. It does look a parabolic, and typically when you look back at charts that go parabolic, they tend to roll over and go down very sharply. So my natural instinct is to be trimming on gold here, but even if it has a big retracement, ultimately I think the longer term direction is higher, because the real reason for the re-rating in the precious metals is that governments in developed economies do not seem to be able to write their budgets, and their deficits are very wide and show no sign of coming down. And so people rightly believe their currencies are less valuable. And there's no real light at the end of the tunnel for that. It's not just the United States, it's Europe, it's Japan. There's a long list of countries which are running deficits as a percent of GDP that are far above what the World Bank or IMF say is a sort of reasonable rate. And the United States, for example, its deficit to GDP, the debt to GDP, excuse me, is 120%. That's twice as much as the IMF says is a prudent level.
All right, Mark, thank you very much for joining in, and season's greetings to you once again from the entire team of CNBC TV18. Thank you very much for speaking with us. But getting back to the big RBI announcement, it was a surprise, and it's a very strong liquidity. So basically yesterday, RBI announced 2 lakh crore of additional OMO bond purchases, which will be done in 4 tranches. Plus, they announced a $10 billion forex swaps. This comes on the back of the 5th of December post-policy measure, where RBI had already committed to 1 lakh crore of OMO purchases and a 5 billion forex swap. So if you take it together, these moves will inject nearly 3 lakh crore of liquidity into the system. And even the timing has come in as a bit of a surprise, because most participants were anticipating action maybe to come in only in January, but not just ahead of the holidays. Now, in terms of an impact, it's positive for bonds because yields could soften further. Lower yields means more liquidity, which should reduce borrowing costs, which supports credit growth, overall keeping the market sentiment also very constructive. So that is the other big headline coming out from overnight, which will impact the markets. But let's also tell our viewers all the interactions that we've lined up on the show today. So first up at 8:35, we've got the management of Satwik Green Energy to discuss the 486 crore order win that they got for solar PV modules. 9 a.m. we'll discuss IT and the impact of the change in the H-1B selection process. Rakesh Kumar of BNP Paribas will join in. 9:20, Manish Sontalia of MK Investment Managers will be the market master for the day. 9:35, the management of Aadhar Housing Finance will join in to talk about their outlook going ahead. Towards the end of the show, we have a special discussion on the real estate sector. Vinod Rohira of K. Raheja Corp and Gulam Zia of Knight Frank India on how real estate is likely to shape up in 2026. Get into a break. On the other side, our list of top stocks is lined up. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a slightly positive start, and the Nifty is put behind itself. 3 days of gains, notwithstanding the jostle that we saw yesterday, but we still ended about 5 points higher. No real problem. So let's go straight to our list of top 10 stocks for the day. We do have our entire team, and Rima, obviously the big story overnight will be what came on the H-1B visa and the impact that it would have on the IT space.
Indeed. So US has announced a big change to the H-1B visa selection process. So they've moved away from a purely random lottery system towards a weighted system that prioritizes higher skills and higher wages. So earlier, all applicants, whether you're low-skilled, high-skilled, lower wages, higher wages, all had an equal probability of getting a visa, because it was random allocation and a lottery system. But because there were more number of applicants coming in from lower paid entry-level roles, they naturally secured a disproportionate share of visa. Now that is expected to change. Under the new proposed reform, the random lottery system will be replaced by a weighted selection mechanism. And based on the draft proposals, for instance, if you are at the highest level, it's called level 4, then you will be eligible for 4 entries. If you're level 3, which is the second highest, then 3 entries. While level 1, the entry one, will be allowed only 1 visa process. So basically, there is a higher probability of a higher skilled, higher wage person getting the visa. So this could, bring down the selection odds for entry levels drastically and increase the chances for a level 4 applicants, which is what the US wants. This will take effect only from the 27th of February. It will start applying with the FY 2027 H-1B registration season, and it also aligns with Trump's broader reform push towards H-1B, where they want to tighten the program. They want to stop the entry level, reduce the dependence on entry level, bring in higher skilled people. And if you remember, it also ties in with the $100,000 cap fee on H-1B visa as an eligibility condition. It's overall a sentiment negative for IT, but we've been asking the IT companies on their dependence. It's not very high. They have been reducing their overall dependence on the visa, but sentimentally it's a negative. But does it come as a big surprise? No, because the draft proposal had come out in the month of September.
Right, Rima, take that point. Thanks a lot for that. But Coal India and SGS Enterprises on our radar. Sudarshan tells us why. Sudarshan.
Good morning, Mangalam. So Coal India, we can very soon see 4 other subsidiaries of Coal India listed on stock exchanges. Company had already begun the process to list 2 subsidiaries, BCCL and CMPDIL. Now it has given the in-principle approval. Basically, it has got in-principle approval from the board of Coal India to list other 2 subsidiaries, that is Mahanadi Coalfields, which is known by MCL, and other is Southeastern Coalfields, that is in Chhattisgarh. And these 2 subsidiaries together form almost more than 50% of the Coal India's coal production in FY25 and FY26. So the updates on December 16, Coal Ministry had asked Coal India to begin the process to list these 2 subsidiaries. On December 23, Coal India board has given the in-principle approval. So what's next? Now Coal India will submit to Coal Ministry, and after that the submission will be made to DIPAM, and following that all the regulatory approvals will be taken to list these 2 subsidiaries very soon, and we are expecting the listing to happen in FY27. SGS Enterprises, it has signed tech license cum supply agreement with BOE Veritronics, that is a Hong Kong company, and this agreement is for optical bonding and assembly of automotive display systems in India. So SGS Enterprises will assemble and optically bond automotive displays for 4-wheelers, while BOE Veritronics will supply components and support localization. So I'm going with green for both Coal India and SGS Enterprises.
Okay, so 2 green stocks, potentially green stocks on Sud's radar. Thanks for that, Sudarshan. Let's get to Ekta. She's watching out for a couple of pharma names. Ekta, which ones are these?
Morning. I'll start with Ajanta Pharma. They've signed an in-licensing agreement with Biocon for marketing of semaglutide in 26 countries. So the geographies will be across Africa, the Middle East and Central Asia. The patent, remember, expires in most of these countries in March of 2026. The company is planning to commercialize products after receiving those regulatory approvals in late 2026 or early 2027. MCure is in focus because they've received an establishment inspection report from the US FDA for their Gujarat facility, which is indicated as no action indicated. So that means that they've given a green signal for that facility. Zydus Life has partnered with a company for the commercial rights for a Nifemco, which is basically a biosimilar to Lucentis, which is the name of that particular biosimilar, which is used for eye conditions, emergency eye conditions. So you could possibly see Zydus in the green as well as the other stocks.
All right, let's move on then to the other stocks which are in the news. Ria joins in.
Well, good morning. Let's start off with Vikran Engineering. They have received an order worth roughly 2,035 crores from Onyx Renewables for a 600 megawatt solar power plant. The execution period for this order is 12 months. Now, the order largely entails the execution of the project on a turnkey EPC basis, but the scope of work also includes the supply of key components such as solar PV modules and inverters. Moving on to GPT Infra, this one will also be in focus on the back of an order win. They have received an order worth roughly 199 crores from Northeastern Railway for the construction of a bridge superstructure. The execution period for this is 730 days, and the total order inflow for the company, including L1 for FY26, is now 1,759 crores. Nibe Limited will also be in focus. The board has approved a fundraising of 250 odd crores via a preferential issue of equity shares and warrants, and this is being done at an issue price of 1,248 per security. And remember, yesterday the stock closed at roughly rupees 1,125 on the NSE. The last stock that will be in focus is Bellrise Industries on the back of block deals. BlackRock Global Investment Series has bought roughly 70 lakh shares of the company from Sumit Tools Private Limited at a price of 153.7 per share. And SBI Mutual Fund has also bought 5.1 crore shares of the company. And remember, yesterday the closing price was 168 for this one.
Take that point, Ria. Thanks a lot for that. So that's a bunch of stocks on our radar one needs to watch. In fact, the stocks with positive news flow: Coal India, SGS Enterprises, Ajanta Pharma, MCure, Zydus Life, Vikran Engineering, GPT Infra, NIBE and Bellrise Industries, while IT stocks are likely to open in the red. But as we speak about the equities, can't lose sight of what's taking place in the commodities and currency space, gold in particular, and dollar index weakness. Manisha, as always, joins in. Good morning, Manisha.
Morning, and thank you for that. I'll start with the precious metals first, and the overall sparkle really seems to be coming in from this one. Silver is now trading nearly 150% higher in this year, and we've crossed above $72 an ounce as well. So very strong gains continuing as we see the silver ETFs do well. The physical buying is still in the premium when it comes to the U.S. markets, and that seems to be adding to the over there. Take a look at the gold prices, and 4,500 got taken yesterday in the New York session. We're actually seeing an all-time high of $45.25 an ounce for gold as well. And with these kind of gains, of course, it's been about portfolio diversification. It also is about central bank buying, which has been on the higher side, and the dollar index decline aiding this. But it's not just about gold and silver. Platinum is trading at an all-time high. We've seen 160% of gains in this year for platinum as well. As the demand for this one continues and the inventories have been on the lower side, platinum also is in the deficit for a third straight year. And then it's about copper, not too far away from its all-time highs. Remember, we have seen an all-time high in copper in the previous week itself. So we have seen further surge coming into the markets, inches away from creating yet another all-time high for copper as well. So precious metals, base metals continue to trade very firm, even as we are inches away from holidays and the year ending.
Okay, all right, Manisha, thank you very much for that. Indeed, no stopping the metals rally, especially precious metals out there. Thanks for a quick roundup. We'll take a break on that and we'll come back on the other side. The management of Satvik Green Energy will join in to talk about their recent order win. It was almost a 500 crore rupee order, the supply of solar PV modules.
Welcome back. We told you about the stocks which are likely to be in focus today on the back of news. Now let's tell you the stocks which brokerages are betting on. Sudarshan joins in with the brokerage calls of the day.
Good morning, Nima. So recently, if you would have visited any stores for the shopping, you obviously would have used Pine Lab platform to make the payment. Now there is another day, another positive note for Pine Labs. And today, Jefferies has come out with a note. It has initiated coverage with a buy call and target here is rupees 300 per share. That implies an upside of almost 30% from the current level of around rupees 233 to 234. What did it say? It says company is a leading digital payments at stores as well as in the prepaid cards, and it's building a share in online payments and international issuing business, and its network with brands, merchants and banks with tech platforms, and that is the key moat as far as Pine Labs is concerned. It can achieve 23% CAGR in revenue over FY 25-28, and operating efficiency can lift adjusted margin from 15% to 27% by FY 28. Now from Pine Labs to marine company, that's Knowledge Marine. Nuvama has initiated coverage with a buy call, and here target is 2,500 rupees per share, and that implies an upside of almost 40% from current levels. It says maritime industry is at an inflection point and company enjoys 50% order win rate amid scarce competition and high entry barriers. It delivers superior 35 to 40% margin and is diversified across the spectrum. And November 2025 order book that is up almost 2 times year-on-year with orders from major ports that company has received. It's baking in FY 25-28 revenue, EBITDA and profit CAGR of 58%, 62% and 71% respectively.
Okay, all right. Thanks very much for that. So we are going to keep all of those stocks on our radar. By the way, now let's take a look at some of the key movers yesterday. Big volumes, interesting price action. As always, we've got Hormaz joining in. Let's see what he's picked up on his radar. Hormaz, morning.
Morning, Surabhi. And railway stocks, we've spoken about them quite a bit all through 2023, a lot of 2024 as well, but forgotten after the downfall that they had after peaking out then. But yesterday, the stocks were up for the third straight day and very significant price volume activity in all of those names. Jupiter Wagons, of course, had its own news flow, but Ircon, Railtel, RVNL, IRFC, all of them ended off the day's high, but still saw significant gains anywhere between 3 to 5%. And take a look at the volumes as well. 13.5 crore shares traded on Jupiter Wagons, almost 6 crore shares traded on Ircon, over 1 crore shares traded on Railtel, and significantly higher compared to their 20-day average, which is anywhere between 10 lakh to 40 lakh shares. But the delivery volumes here are equally disappointing. We spoke about Jupiter Wagons yesterday as well, where only 6% of the shares were marked for delivery. Even in yesterday's session, despite volumes being 2x of Monday's trade, the delivery volumes were still lower. Only 77 lakh shares marked for delivery, only 50 lakh shares marked for Ircon, and only 12 lakh shares marked for Railtel. So delivery volumes ranging anywhere between 7 to 10%. No significant up move there despite the increase in trading volumes. Now Prism Johnson was once other mover yesterday. The biggest single day gain that the stock saw since September of last year. It closed above the mark of 150 for the first time after end of October, so almost in 2 months. Now Tuesday's volumes were the highest in 3 months. Close to 1.5 crore shares were traded, 20-day average of just 1.5 lakh. And out of those 1.5 crore shares, 12 lakh shares were marked for delivery compared to 20-day average of just 68,000 shares. Now, despite that up move yesterday, the stock is still down 10% for the year. And lastly, NMDC. Metal stocks continue to do well. Stock ended at a 52-week high yesterday. Tuesday's volumes were the highest since December of last year. So 12 months were the highest volumes. Close to 8 crore shares traded. 20-day average of 1.5 crore shares. And out of those 8 crore shares, over 3 crore shares were marked for delivery. 20-day average of less than 70 lakh shares. It's turning out to be the 4th positive year for NMDC out of the last 5. The stock is up 25% on a year-to-date basis.
All right, Hormaz, thanks a lot for that. So that's about a bunch of stocks which have delivery stats backing them. Let's focus on Satwik Green Energy now. The company is in focus for a couple of news pieces. They've received orders worth about 400 crore rupees from independent power producers and supply of solar PV modules. Alongside that, one of their plants also, the 2 gigawatt in-house EPE film manufacturing facility has been commissioned. So all of these, we have the management joining us right now, and we'll talk about 3 main points with them. Obviously, the order win run rate, the domestic solar module demand trends, ordering trends, and finally, the ideal top-line mix that the company would be aiming for between solar modules and inverters. We have Mr. Mathur, who joins in with all those details. Prashant, thanks a lot for joining in. Season's greetings to you, your family, your team as well. Let's start with the order inflow. Post the second quarter, in the third quarter so far, what have been the quantum of orders that you've received? And if you can split that up between modules and all the other segments?
Good morning, and thank you for inviting me on the show. So third quarter is normally a busier quarter than the first half of the year. So we are witnessing the same in the third quarter. So we have, if you would have seen, we have significantly increased our order book to 4.68 gigawatt. We have executed a lot of orders out of it in this quarter and added also new orders. So we will be declaring our order book when we declare our results, and I'll be back on your show.
Could you give us a rough range of where it is? Because 4.68 was at the end of September, and the third quarter, like you said, is busier than even the first half of this year. We've seen, some of the order wins that have been announced to the exchanges, roughly 400, 500 crores in the last 2 days. In this quarter so far, what's the quantum of order wins that you've gotten?
This quarter will be showing a good jump in our order book, is what I can tell you right now.
Okay, and you're still on track for 80% plus top line growth for FY26, right?
Yes.
Any disruptions in Q3? Because Q3, Q4 is typically a stronger quarter, but last time around there were weather-related and GST cuts, etc. So Q3, any disruptions?
No disruption so far. Obviously, the fog situation is there in North India, but Q3 looks much better, and we will be declaring our results soon. And this quarter is doing well. That's what I can say.
Okay, so 80-90% top line growth intact for FY26 and margins around 16% also holds.
Let's see. It's difficult to give a forward-looking statement. Sorry, but yeah, as we had said earlier as well, we will continue to grow with a CAGR of 88% is what we have grown so far in last few years. And we continue to grow this year as well.
Okay. How are the pricing trends in the domestic market? Because a lot of large players have entered. On the back of that, the per unit pricing, is it under pressure? What would it stand at now versus maybe 1 year ago?
Yeah, so pricing, this industry, the pricing goes up and down because this is the inherent, part of this industry. And so the prices have gone down because one is the GST impact as well. So the project pricing has gone down by almost 7-8%, which is actually good. If you see the first 8-month number, which has recently been published till November, India has done about 27 gigawatt of AC capacity, which if you extrapolate to DC capacity is almost 37 gigawatt has already been done in 8 months. So, and last quarter, and now we are going to witness actually a bigger chunk of the business is done in the last quarter. So I'm very hopeful that this year we are going to grow significantly. The market looks like almost over 50 gigawatt of installation will happen, which compared to last year is a significant growth. And this reflects in our books as well. And overall the market is growing at a good pace.
Right. Let's talk about a couple of other things now. Importantly, one is your revenue mix, and the second is capacity for you and in the industry at large as well. Currently, what's your revenue mix between modules and other segments, and where does this mix move?
So module still holds a large part of our business. Apart from that, EPC is there, pump business is there, and inverter business has recently started. And pump also incubated last year, and is a business unit this year onwards. So all of this gives us about 5 to 7% of our revenue so far beyond the modules. But we are growing into these segments, and you will see that this will quickly become almost about 15% of our top line.
All
And
right.
by when will the non-solar modules contribution increase to 15% from current 5-7%, which is your pumps, inverters, etc.?
We are targeting from next year onwards.
So FY27. Got that.
And on the capacity, the EPE plant that got commissioned, how much more margin accretive is that? Because I suppose that is a little more backward integration than revenue scale, right?
Yes. So, we are working on securing our supply chain. We are working on backward integration, cell, and further into ingot and wafer manufacturing. And EP is also part of that initiative. It's a strategic move wherein we get control on. So this is only 2 gigawatt as of now. Our current manufacturing capacity is 4.8 gigawatt, and we are expanding now in Odisha, so will be about 8.8 gigawatt of module. So 2 gigawatt from next year will be about 25% of our capacity, which gives us security on our supply chain, control on our quality, and we can quickly, as the business grows and we are more confident on EPE, we will rapidly increase our capacities on EPE manufacturing as well. But this is a strategic move, and also since EPE was mainly imported, there was not much of EPE capacity in India. It gives us better control also on our cost and also on the quality.
Got that. Take that point. Thank you so much for joining in and explaining the business up to us. You are on track for 80% growth this year. Let's see whether that continues over the next couple of years or not as well. But you do say that capacity is intact for you to, or the capex plan is intact for you to continue that growth path as well. We take a short break. Come back on the other side. Devin Choksi of DR Choksi FinServ joins in. Stay with us.
Welcome back. We've got Devin Choksi joining in. So let's get a couple of fundamental ideas going. Devin, good morning. Good to have you in. And season's greetings to you and your team. I want to start with financials because that's where a lot of the headlines are coming. On one hand, just, earlier this week, there was good news coming in from Shriram Finance. Yesterday, volatility and all kinds of, news flow around Chola. Chola investment, the company's come out and denied everything. The stock recovered. But what's your sense, and what would your advice be on Chola now?
Yes, Sylvie. Good morning and season greeting to you as well.
Thank
Well, I guess I think we have learned from the past that I think the kind of motives that these people have, I think behind producing such kind of reports which have been proved malafide. I guess I think the best thing that one should do is I think ask the company, and if the company denies it, then probably I think ignore such kind of report. That's what you do. Whether afresh, I think one should take a position in Chola or not. I think it all depends on I think how you see the overall environment. As we see it, I think the environment remains I think pretty conducive for most of the NBSE companies in particular. And that's where we believe that some of the larger ones that are having the consumer leg attached to it, I think are going to be the winners in this game. Sriram, of course, I think is a different story which you mentioned, largely also because of the fact that I think this particular deal in itself is giving them a balance sheet power, which possibly I think would give them the larger amount of footprint into the sector in which they are operating, along with some of the Japanese companies, I think, with whom they have basically affiliations. So, in my viewpoint, I think the overall the basket looks, I think, quite conducive. The likes of Bajaj Finance, likes of Sriram, they look quite convincing to us, I think, from the investment perspective.
So you would still go ahead and say fresh purchases can be made despite the rally. And most of these names, Chola, Bajaj, Shriram, everything's rallied between 40 to 50% this year.
That's right. I think there is an opportunity as I see it because the consumer demand is picking up. Discretionary, non-discretionary both are, I think, on the rise. And we see this particular trend continuing for next few many quarters. And that's where probably I think we'd like to consider with the companies which are attached to the consumer demand segment, which are these companies. Probably I think they are the better off in this entire aspect.
Right. What are your thoughts on the cement space, Devin? Because, post-monsoon construction activity typically picks up in the third and the fourth quarter. Now with, there is news backing with corporate restructuring taking place in a couple of the larger players as well. Is there any particular stock that you like, and what are your thoughts on the space at large?
Yeah, Mangalam, I think we have been maintaining some of the larger companies with a pan-India footprint, likes of Ultratech or likes of Adani Cements, where ACC and Ambuja combined along with now the Orient as well. So I believe that I think these are the companies which are likely to be the winners. ACC Ambuja, that is Ambuja Cement now, I think is basically appearing to be, I think, much better placed, largely because of, I think, their east-west corridor connectivity through the ports. And that's where probably, I think, we believe that they're likely to remain winners. Not too sure immediately whether I think the cement prices will go up in a hurry, but I believe that the demand scenario definitely remains, I think, quite upbeat and buoyant. So yes, I think at least for buying them into the portfolio, maybe around 15 to 20% upside can be ruled out in a span of around 12 to 15 months from now.
Okay. Devin, on the whole IT pack, what's the sense? The thing is that there is usually a lot of news and noise, and it's fraught with all kinds of regulatory risks. And this new H1B system, which is not going to be based on lottery, do you think it'll have any meaningful implication for Indian IT services, large stocks?
Honestly, I think we haven't examined, I think, that viewpoint, whether it will have any adverse impact, particularly on the large stocks, etc. But we believe that in general, the IT space looks, I think, quite compelling now. They've adapted in their backend the entire AI way of coding. That is the first important point. The other side, I think the customer segment, I think, is raising the new orders largely, I think, because of the AI-led disruptions which have started happening. And some of the companies like TCS, Infosys have been creating a separate kind of a module wherein they're creating the application for user industry. So in my viewpoint, I think they're looking relatively safer and better as compared to what they were before. So I agree that immediately, I think we are not seeing a very sharp rise in the order intake or at the same time, I think execution. So maybe I think if one is comfortable, I think between a higher single digit to the mid double digit, I think that kind of a growth is distinctly possible in the revenue stream of many of these companies. So keep an eye on that. Yes, I think the larger ones like Infosys and TCS looks relatively better placed today, given the valuation at which they are quoting.
Right. And what would your thoughts on the auto space be, Devin? Because, that's been one shining sector this year in an otherwise underperforming market. Yesterday as well, we had names like Ashok Leyland and Eicher Motors, big names, all of them hitting fresh highs.
Yes, I think leave aside, I think passenger vehicle, because passenger vehicle, you might see company to company some kind of an ups and downs, I think, in a given quarter. But commercial vehicle segment looks, I think, pretty set for a higher level of growth. On one hand, infrastructure-led push is happening in the economy. The freight corridors are emerging faster. At the same time, I think the industry expansions and the logistics-related activity, they are demanding higher amount of commercial vehicles. So certainly the likes of Tata Motor commercial vehicle, or for that matter, Ashok Leyland, which you mentioned, I believe are the ones I think which are looking relatively more safer bet at this point of time. And yes, I think the downside remains comparatively less at this point of time. So we remain bullish on this particular space.
Devin, so, okay, actually, let's take a break. We'll try and come back and we can give you this time to think. We keep asking you about so many stocks, but I think we want Devin's one or two stock ideas for 2026. We'll discuss that after the break. Take that break, come out, and we'll have Kumar Rakesh of BNP Paribas also joining in. We'll talk about the IT sector and the implications of these new H-1B visa rules.
Welcome back. So we let Devin, think for a bit, and now he's back with us as we, count down to the opening of the market about 20 minutes from now, and 5 minutes from now will be the pre-open. We get a couple of ideas back in. Devin, a stock for 2026, what would that be according to you?
Mangalam, I think we believe that the power and power ancillary segment is likely to fetch higher amount of, I think, demand growth. And within that transmission and distribution segment, I think looks, I think, quite promising. Given the kind of a choice that we have, we probably, I think, would like to consider an Adani Energy from a perspective of looking at not only for next 12 months, but I think next 12 to 36 months as well. Because I think the kind of new capacities that they are catering to, adding into the portfolio, for the transmission segment.
3M6 mission launch, carrying the Bluebird Block 2 communication satellite of US-based AST Space Mobile, marking a major milestone in India's commercial launch program. There she goes. That is the ISRO Bluebird Block 2 satellite which is launched.
सफलतापूर्ण उत्थापन द्वितीय प्रमोचन मंच से और अपनी उद्दिष्ट कक्षा की ओर बढ़ चला है LVM-3 M6 रॉकेट.
It's ISRO's heaviest ever launch.
6,100 kilograms. That's the weight of the communications satellite. And it's the heaviest payload to be placed into the low Earth orbit in the launch history. So quite an achievement, and it's zooming away.
Let's see whether the markets mirror that zooming up sort of move as well. Rocket launch. It's such a beautiful visual. You can just keep watching that and not go back to the markets. But let's go back. We have a job to do. Devin, you're still with us. You were speaking about Adani Energy. That could be your stock of 2026. And what, according to you, would be an underperformer in 2026?
Well, I think difficult to immediately pinpoint, but I think the larger space of mid-cap and small caps, which are valuing significantly higher compared to the growth that they are assuming, they could be the ones, I think, who could disappoint in this particular period. In my viewpoint, I think the mid-cap, small caps are required to have, if not a sharp price correction, I think definitely a time correction of a degree of around 12 to 18 months. Should that play out, I think in my viewpoint, this particular year, 26-27, should be the year dominated by the large caps. Mid-cap and small caps may have selective upside, I think, in some of the stocks, but otherwise, the large caps, I think, could possibly rule the next financial year, in my viewpoint.
Okay, all right, Devin, thank you so much. And, once again, season's greetings to you. Have a fabulous Christmas holiday, and, hope to see you again soon. Well, with that, let's turn our focus on to technicals. We've got Sudarshan Sukhani as well as Mitesh Thakkar joining in. As always, gentlemen, good morning. So the bulls have managed to prevail. It's not been an easy year, but in the last couple of days at least, maybe it's thinner volumes, whatever it is, lesser FPI selling. But, 26,100 has remained intact. So for today, at the index level, will you look at any fresh longs? Will you stay away? Or will you look at booking profits maybe? Sudarshan?
Yeah, good morning. No, I would stay long. See, we are going to see 5 or 7 days of very dull market activity. That's normal for the year end, but that doesn't change the short-term trend. So far as you said, that level is important. 26,100 is intact, and that also becomes your stop loss on a closing basis. Buy on dips, buy on consolidation. If you have positions, hold on to them. You may not see big gains because of that dull market activity, but you should be there in the market on the long side.
Okay, so remain long. That's Sudarshan's call. Mitesh, morning. What about you?
Good morning. Yeah, so I have a similar outlook. I think, very clearly the market is not showing any signs of weakness. And I did mention that, there'll be a minor hiccup at about 26 to 20. And yesterday we got a high of around those levels. The next target which I have, which is, I've talked about, is the rising resistance line, which is at about 26,380, 400 zone. So I think we might head towards those levels, given the fact that with that last 3 weeks of consolidation, most of the overbought indicators have pulled off and are now showing signs of moving up again. So the first target, 26,380, 400, and then a breakout beyond that could give you another quick 300-400 point kind of a move. So the bias is clearly on the long side.
Clearly on the long side. Any stops that one needs to watch for?
On the stock side, I have today, a mix of buys and sells, more calls on the buying side because the directional bias is on the upside. So I have a buy on ITC with a stop at 403. Look for targets of around 415, 416 here. Also buy on HDFC AMC. After correction, this is trying to give a bounce back. So buy on mild declines about 8-9 points around 2,700. Buy with a stop at 2,670 for targets of 2,765.
Right.
Then, sorry.
No, you're giving us stocks. I was actually asking also for stops on Nifty, the stop loss.
Oh, okay, sorry. I got it wrong.
No, it's absolutely fine. We were coming to you for stocks anyway.
So I just cover the Nifty first and then cover my balance two stocks. So on the Nifty, I think a trailing stop loss around 26,120 is what I recommended in the closing show yesterday. That remains, and on the upside, 26,380, 400 are the targets. And the balance two stocks, KFin Tech, that's a buy with a stop at 1,080 for 1140 as the target, and Axis Bank is the solitary sell call. Keep a stop at 1241. Look for targets of 1190.
Okay, all right, got that. Mitesh, Sudarshan, let's come to individual stock ideas with you as well.
Yeah. HDFC Bank is a buy with a stop under 982. Indian Hotels is a buying opportunity with a stop under 725. I have one intraday short, that's Cipla. Consider going short with a stop above 1525. And finally, my last buy is 361, which is a short-term buy. And also you could consider it as a positional buy with a stop under 1150.
Thank you, gentlemen, for joining in. We look forward to chatting with you through the course of the day. For now, let's turn our attention to the IT sector because the US has announced major changes to the H-1B visa program, the selection process. So the long-standing random lottery system has now been replaced with a weighted selection process, which will favor higher wages and higher skilled employees. To decode the impact on Indian IT and where the sector is headed, we have with us Kumar Rakesh, India analyst, auto and IT at BNP Paribas. Thank you very much for joining in. So first, let's begin. This change in the H-1B selection process that's been announced, what is the impact on Indian IT according to you? And which company is most adversely impacted and which one is completely insulated to your mind?
Good morning, Rima. So I think in the morning in your show, you were already speaking about that. The impact potentially will be very minimal. If you look at the exposure of Indian IT services companies' dependency on H-1B visa, it is now less than 1%, actually a few basis point exposure to H-1B visa. And if you check around, speak with any of the companies, industry experts, even the enterprise customers, they are very comfortable actually offshoring most of these work as well. And now incrementally what they are looking at, especially after the introduction of $100,000 visa fee, is call only those experts who are actually needed and for whom customers are willing to pay. And hence, in that regard, the change in selection process doesn't actually changes anything. Any which ways with that $100,000 fees, level one worker were not going to get H-1B visa or were going to be sent on site. It was going to be level 4 or really skilled employees who were going to be sent onshore. And hence this change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available, offshoring, which we already spoken about. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. And hence, using all these couple of levers, these companies should be able to largely mitigate. And hence, across the IT services companies in India, we do not see much of impact of this.
You say less than 1% of the global workforce or the overall workforce is sent on H-1B visa as of now?
For Indian IT services companies,
yes,
as percentage of their total workforce.
Of their total workforce. Got that. Yeah.
Right. And no, so basically I wanted to know, because the impact is minimal and the IT stocks have momentum behind them and they have seen underperformance, do you think because of this, it could actually turn out to be a positive move?
This was largely already known a couple of months back itself. So from that perspective, it is not an incremental lever to drive the market. What is some of the recent macro data point which have started coming on. Last night, US GDP growth came out, which was pretty strong at 4.3% annualized rate. More importantly, within that, it was driven by consumer spending, which was up by about 3.5%. Now, US economy is heavily driven by consumption. Almost 70% of US GDP is domestic consumption. So if that is growing at 3.5% in September quarter, and since then, if you would see how the holiday season has gone through, it is indicating that holiday buying was up by about 4.2%. So this strong consumption in the US has continued. Inflation seems to getting under control, hovering around 2 to 3 percentage point on a YY basis. And hopefully the Fed rate cut at some stage next year also continues to drive. put all those things together, we would expect that the enterprise spending should start picking up next year, and hence the macro data point becomes a far bigger lever for the sector.
Do you think IT has bottomed out? Because from October, IT stocks have been doing well. At an index level, there's been a gain of more than 15%. Are investors, you speak to domestic, foreign investors, turning constructive on the Indian tech sector?
So at start of October, actually, it was, I think, 1st of October, we had come out with a report explaining that the relative underperformance of Nifty IT in India compared to NASDAQ is at multi-decade low. We had seen through the year more than 30, almost 40% sort of underperformance relative to NASDAQ. We haven't seen that level of underperformance maybe during global financial crisis, internet bubble kind of era, but this was quite unique underperformance that the sector was starting to see. So from valuation perspective, from relative preference perspective, it started looking like it has reached a bottom. Since then, we have also been speaking about with investors that if you are incrementally getting worried about GenAI trade, it getting into bubble zone, within tech space, IT services is a good space to hedge against any GenAI concerns if investors are building. That investors have started reciprocating well. Within investors said, domestic institutional investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which we were talking about earlier, does indicate that sector should continue to outperform at least in the near term.
Okay. Right. You said in October, which was the start of the rally for Indian tech, valuations looked attractive vis-a-vis its extent of underperformance versus NASDAQ. Now, part of that has been corrected. How do the valuations stack up today?
So if you look at most of the large caps, let's start there, relative to last 10-year median, a company like Infosys is still trading at last 10-year median. TCS would be trading at -1 standard deviation to that 10-year median. HCL Tech would be higher, but that's also because their free cash flow generation has dramatically improved and payout ratio has also improved. And hence, if you look at from dividend yield perspective, many of these companies are still trading at close to their highest ever dividend yield. So from valuation perspective, the sector continues to look quite attractive. It's not something which this outperformance over the last couple of months has corrected that entirely. We still think that the first leg of outperformance, which has partly already started, will continue to be driven by a valuation re-rating, not so much from earnings upgrade. Or the other way to say that, if the companies continue to deliver in-line result, that is enough to deliver valuation re-rating.
All right, and your top picks in the sector would be from the large cap and the mid caps?
On the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue. There's already a decoupling between revenue growth and employee growth happening in that company. They have been using their platform, GenAI platforms they have built very strongly, and that's reflecting in the numbers. And that gives us comfort on Persistent System. Despite the high valuation, the kind of earnings growth that company delivers, can potentially deliver, does justify those valuations.
And what did you make of TCS post its analyst meet?
TCS has been trying to diversify itself and capture a bigger chain of value within the GenAI space. Data center is one of the initiatives that they have taken, and multiple other actions they are also taking. This year has been an year of underperformance, but that's reflecting in valuation. We like TCS as well, partly because of valuation, partly also we believe some of these measures that they are taking to recover their revenue growth should start fructifying from fiscal 27 onwards.
All right, Kumar, thank you so much for joining in and decoding the impact of what happened overnight, but more importantly, the IT space at large in your topics as well. Speaking about the sector, you believe that in the near term, there is some room for outperformance for this space as well. Will that continue today and in the very near future? Let's get across to Sudarshan and Mitesh once again for their 9-10 call. Sudarshan.
It's 361. Consider buying 361 with a stop under 1150.
And Mitesh, you?
I'll go with the buy on ITC for targets of 415.
All right, ITC and 361 Wealth are the two top picks at 9:10. Sudarshan, our Sudarshan, joins in for the brokerage calls of the day, and we do have a couple of more initiating coverages. This one is on Physicswala and LG Electronics, Sudarshan.
That's correct. So Goldman Sachs has initiated coverage on Physicswala and has a neutral call with target price remains around the current market price, and it's around rupees 135 per share. It says it's one of the largest edtech platforms with the equal mix of revenue from both online and offline platforms, and it forecasts 24% FY25-30 revenue CAGR versus 38% that company has seen in the last 2 years. And pricing structure allows the company to penetrate deeper into multiple new categories, and the business model has a negative working capital cycle, and it forecasts 100% plus free cash flow to net income for company starting this fiscal, that is FY26. Another one, LG Electronics, Avendus Spark has initiated coverage and coverage with a reduced call, and target here is 1536 per share. It says its extensive reach remains a key strength and moat, and its third facility in pipeline to cater to South Indian market and the export segment. But company might face the competition, and that may lead to market share erosion and also impact revenue. And the challenges might mainly come in the super niche category and the premium category that company may face, mainly on the basis of the new entry that the segment is seeing.
Okay, thank you very much for that. Moving on to the other big story, Cholamandalam Investment has dismissed allegations by Cobra Post on irregular cash levels, suspected related party transactions and other issues which were flagged by Cobra Post. Listen in to what the management had to say.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations by FY22 we started because the regulation also required, and we started including them. So that is they're playing on this regulatory requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
Okay, that was Chola Investments. Chola Investments in the pre-open session is absolutely flat. Let's actually recap, the list of stocks, starting with IT. You should look at IT names on this whole H1B visa overhaul. There's not much of red. It's actually just about 0.5% on most of these stocks. Infy is down about 0.4%, TCS about 0.1%, 0.2%. So not much on Indian IT. Now let's look at the other newsmakers, which were part of our top 10 list. So there's Coal India, which has a pretty flattish trend as of now. There's SGS, Enterprises, Ajanta Pharma. Not too much by way of these names. Just watch for Vikran Engineering, which won an order. That's the best performing stock from our top 10 list, suggesting a gain of almost 7-8% right now. Okay, let's start with the large caps then. 20 points higher, but then 8 points up. It's flashing. Not quite settled. Now 20 points lower, 18 points lower. So it's a little all over the place. Bit of a volatile start, you'd have to say. So let's see where the pressure is coming in from and what IT is doing. It is indeed IT, which is keeping the bulls in check this morning. HCL Tech about 0.7% lower. Wipro is down by about, again, 0.7%. Infy down by about 0.6%. TCS is down by about 0.3%. So cautious start for IT. What else is down? I can see Nestle towards the end of the Nifty tally. Sun Pharma is also marginally lower. Large banks like HDFC Bank and ICICI Bank flat to slightly negative right now. So you have a lot of red, you'd have to say. Look at that. almost 3 lines of red on the heat map. On the green side, Coal India, the news that Sud spoke about, the fact that they're looking to bring more of their subsidiaries to the market, listings for many of them, including Southeastern Coalfields. That stock's up about 1.5%. Shriram Finance continues its forward march. Gains now touching 67-68% for the full year. Axis Bank is defying the weakness in some of the other large cap banks. That one's positive. There's a bit of a shine on Hindalco, but then the good news for the Nifty pretty much ends there. We have started and we're settling with about a 20 to 25 point cut on the large cap index. What about mid caps?
Caps are more resilient than the large caps, one has to say, and it's a lot of the commodities names which are doing a lot better. So we have Hindustan Copper, Hindzink. Remember, it was a big rally that we saw in silver, $72 an ounce on silver as well. So Hindzink benefits from that, up around 1.5%. We are seeing some traction, as Horma has pointed out, in a couple of these rail names as well. So IRFC, RVNL, both of them fairly well bid in trade. In particular, a stock that we don't often speak about, JD Cables, is one of the bigger gainers. It was up around 7-8% in pre-open as well, but now is higher. It's got an order worth around 244 crores. Then we do have Endurance, which is marginally lower on the cybersecurity incident that took place. United Spirits marginally lower, Patanjali Foods lower as well. And we do have Omax, which is up around 6% after seeing a 20% gain yesterday. So big volumes picking up on that counter. And Yatra Online, as we move towards the end of the year, all these holiday-related stocks start doing well. And Yatra Online is one of them, which is up around 5% too. So mid-caps now back in the green, a lot more resilient than, say, the frontline index, which too has been flitting between red and green.
Well, let's just get to some of these new age companies. So Pinewala is one where Jefferies initiated coverage, target price 300. It had a good listing. We'll just let the rate come in on that. Physicswala is the other one where Goldman Sachs has initiated coverage, but here they have a neutral call on Physicswala. Their target price is 135. And the other one from the new age companies is LG Electronics. Investec has initiated coverage with a reduce. Their target price is 1,536. We spoke to Sathvik Green, and that stock has opened up mildly in the green, 1.5% up. And in the mid-cap IT pack, Coforge continues to see some amount of selling pressure ahead of the board meet on Friday, where they will consider a fundraise. So H1B overhang aside, here there is that fundraise announcement on Friday. So there could be that dilution risk. So that's putting a bit of pressure. But other mid-cap IT too, mildly lower. Birla Soft persistent, down about 0.5%.
And I was watching that announcement from Coforge, and I was wondering, they've chosen such an interesting date, right? 26 at 5:30 p.m. and people are just about getting into holiday, if not holiday, at least weekend mode. But
Really no holiday for the board of Coforge.
No, clearly not. Okay. All right. Let's take the conversation forward. Manish Sonthalia is joining in. He's our market master of the day. Manish, thanks so much. You know, human beings are optimistic creatures by nature, and more so if you play in the capital markets. You have to believe that the coming year is going to be better, right? So we start right there. But beyond the, the well-placed optimism, if you really look at the facts on the ground, valuations, if you look at how India needs to compete with other markets, we're not, an isolated story. It is a connected world. Realistically speaking, do you think that this sluggishness of 25 will finally end as the year comes to a close?
Yeah, good morning, Surabhi. Yeah, I do believe that probably you would have seen the worst in calendar year 25, and more so on account of the Indian rupee, which has been falling relentlessly. 91 is overdone, according to me. And, even the earnings trajectory would seem better going forward. Of course, Q3, we are looking at something like 9% revenue growth and maybe slightly lesser than that on the PAT front. But come FY27, things should look better, more on account of government impetus, and earnings should be around 13-14%. Suffice it to say, valuations are not very expensive. Even Nifty 50 earnings less than 2 peg, even if you believe 11-12% sort of earnings growth, 21-22 times, not very expensive. More so on account of the fact that even the mid and the small caps, particularly the small cap space, is in line with 3-year median valuations, 5-year median valuation. So saying that that space is still frothy, I wouldn't believe so. And earnings trajectory out there is going to be again 14-15%. So macros are improving, valuations are okay, volatility index seem to suggest that neither the bears nor the bulls are in a hurry to sell or buy. There's total complacency, and all of that would mean that you would have a big trigger either on the upside or on the downside. Markets would wait with bated breath for next 3 months on account of the trade deal to get signed. And so that's how I would believe that the positives weigh more than the negatives.
So Manish, fair enough. Fair amount of factors on both sides, positive and negative. And I want to leave FPIs out of the equation for a bit. We'll come back to the FPI question. Let's talk about domestic flows, right? And that's what supported the market. Now, again, we work with an assumption that the SIP flows, the mutual fund flows will remain steady, and they have been. Between 25,000 crores on the downside in a bit of a weak month to about 35,000 crores in a good month. Now, assuming that remains steady, what is the rest of the local money doing? The so-called local smart money, the family offices, the HNI, the UHNI. Is that money fully deployed? Is there some waiting on the sidelines that could then propel the market higher? Is it going overseas because global markets are doing better? And you have a lot of options coming up in GIFT now, right? GIFT City, to invest in overseas markets. So what is the so-called local smart money doing?
So the very recent fancy for the UHNI family offices is gold and silver. So that has really caught the frenzy, and because markets have been very, sort of.
But Manish, that's not smart, na? Then they're chasing the price, much like how you say that new investors or novice investors do, simply chasing returns.
Whatever it is, they are chasing bullion.
Okay.
That is my observation. The unlisted portion has lost some of its sheen. We saw unlisted shares fancy in the last 2 years, but since the listing, many have listed at a discount to what the unlisted prices were quoting at. That has lost a bit of its shine. And, so it's unlisted, it's basically new IPOs, listing gains and bullion, which is basically driving the market for the UHNIs and that segment. Of course, out here, I would believe that because interest rates in the system are very, very low, this permanent shift from debt to equity is a given. And in time intervals, you'll see the movement between different asset classes. Currently, it is basically favoring bullion.
All right, take that point. Meanwhile, just, our team was alerting us on VIP. There was a large trade on VIP Industries, around 26% equity that changed hands. My sense is that this would be an inter-promoter or a promoter-related, deal itself, because no one else holds that kind of equity. And it may be perhaps an intra-promoter transfer where, maybe DGP Securities would perhaps give it to the multiples private equity guys. So we'll monitor how this pans out. But as of now, the stock has been a rank underperformer below the deal at which, the business was sold as well. So right now, post this last trade, we've seen a bit of a spike.
You remember that price, Manglam, off the top of your head?
Off the top of my head, no.
Okay.
I just checked that around. It was closer to, I think, where we are right now, after this up move that we've seen.
388.
388 was the price.
Stock
Yes,
hasn't really
kind
of taken off even after the multiples.
So, yeah.
And the deal happened in July of 2025. So 6 months in, the stock is where it is. And this is after the up move today.
Yep, that's after the up move. So which is why, the belief that it was an underperformer before this up move, and now it's pretty close to where it was. 388 is where it is. Manish, the travel and tourism space, and also the luggage space in particular. There's VIP, there's Safari in the listed end of things. Safari has obviously crossed VIP in sales, market share, and market cap by a long distance. But right now, what we're seeing is this is ripe for disruption from other new age brands as well. There's Mokobara. There is, at the upper end, Ethos has brought about some of the luxury brands here. What do you make of this space and many such which are ripe for disruption?
So we own VIP. So very positive on this space. Mind you, the luggage industry is a duopoly.
Yeah.
To say, maximum market, or let's say 3 players, Samsonite, Safari and VIP. And the majority of the market share is basically by these 3 players. VIP got it wrong where they were late in moving to the online space, ceding market share to Safari. And Safari has really done well. Samsonite has been a laggard so far. They have, today's news suggests that they are upping their capacity in Nasik by 7 lakh units per annum. But, the luggage space is becoming very, growth intensive. 6 lakh passengers traveling by air, around 1 million passengers traveling by road. 1 crore passengers traveling by train every day. And it's no longer just carrying luggage. It's more of a fashion statement. The Gen Z millennial will look at luggage also to be changed during time intervals, not the usual 10, 15 year. Now it is replaceable every 3 to 4 years. Now, having said that, 1.4 billion people in India have that recall value of VIP. Everybody understands VIP. So I think with the change in the management, their undoing of the previous strategies, following a consumer centric, moving to online. Last quarter, they had a kitchen sinking quarter whereby they basically loaded all the expenses and the write-offs. That is why we saw the stock dip below 388, which was the open offer price. But at this market cap, and given the fact that it's only a matter of time when they could claw back their market share. And mind you, the unbranded guy, the D2C guys, this is a category which requires a lot of expenditure to build traction on top line. It's not a very easy category to penetrate. So yes, you may have newer brands come through to find top line, but it's a loss-making proposition for a very long period. So how many of them would survive really is the key. But on the whole, I think there is value in VIP, even at these levels, albeit Safari is doing very well in the current circumstances. They'll also do well. So quite positive on the luggage space as a whole.
Manish, what about Shriram Finance? 6th consecutive day of gains now, and the stock is trading well above the deal price of 840. Where does it go from here? Are you positive at this level?
Shriram Finance, the valuation difference between Chola and Shriram is quite big even now. I think we own Shriram Finance, and I think the cost of funds will come in lower because 40,000 crores worth of capital infusion will definitely reduce cost of capital, and their funding costs are going to come down. They'll apply for a rating upgrade, and they will have better leverage on the volume front. And the valuation difference between entrenched players like Chola Mandalam seem to suggest that there's even more upside from the current.
So Manish, to sum it up, if I were to ask you your top 3 themes for 2026, what would they be?
So I would believe that discretionary consumption, and more so premium end of the discretionary consumption. And mind you, out here, one little insight is that brand salience today is getting diminished, except for 4 categories, which is basically automobiles, jewelry, real estate, and one more. So all these sectors would have salience on the brand salience, but others like consumer durables, etc., are losing their relevance on the brand sanctity. So out here, premium end is where we'll be focusing on. Capital market as a theme looks very, very entrenched even going into the next year. And rate sensitives as a whole, currently automobiles is leading from the front, but other rate sensitives like banks, insurance, real estate, they will also continue to do well.
Okay, so you're saying discretionary consumption, more the premium end, the rate
Capital
sensitives
markets.
and capital markets. So there's a fair amount of a financial mix out there. Yeah.
No, I just wanted to know his thoughts on some of these new age players. We've had, Lenskart, Meesho, Physicswala, all these. There was an initiating coverage coming in on Nykaa the other day as well. Eternal, quick commerce, always in focus. So what's your thought on this entire space?
So I was fortunate enough to buy into, let's say, Pine Labs and Grow on the first day. These are very good companies, according to me. You could have technical factors of float adjustment in these initial days of listing, but I think the growth in Grow is likely to be 35-40% for the next 2 years, according to me. A 2,000 crore net profit this year translating and going forward into the next year, maybe a 3,000 crore profit on the back of a 15% top line growth. Half of that coming from subscriber addition, half of them coming from ARPU increase. That should give us a massive operating leverage translating into 3,000 crores of PAT. And going into the next year, around 4,000 crores of PAT. So around 35-40% CAGR growth rate in profits with a very high very high ROEs. And mind you, the profit growth is going to get channelized into building businesses like distribution, margin trading, and all of that. So I think 26% market share in active trading accounts on BSE and NSE, and the turnovers are only going to grow over a period of time. These guys have an entrenched moat. The tech capabilities, because these are ex-Flipkart guys, they understand technology much better than the phygital brokers, and that would give them the UI UX interface advantage, ease of navigating through the apps. That stands as a competitive advantage. Pine Labs, again, is a play on upscaling of consumption. It's a payment aggregator, of course, straddling both online and offline, moving into international markets, and out here also is a growth parameter because margin expansion due to high operating leverage looks good, and trading at a valuation discount to peers, Zaggle or Paytm, etc. So these are the two names that we own. Others, I don't find the valuations very lucrative, but some of these businesses are good, but valuation may be the only hindrance. But many more companies in the new age area is going to come for IPO in calendar 26. We'll keep a tab on them and evaluate.
Okay, so Pine Labs and Grow, two of the new age listings that have met the mark for Manish. Thanks for that. Manish, before we let you go, last 10 seconds on the conversation. Some of the poster child or the poster boy, poster girl sectors of the market, they seem to be under a cloud as we're closing this year, and EMS probably tops that list. There's a big debate on EMS now. Some feel that after a big correction, 25-30% correction, the stocks are again looking good. Some feel that maybe still overvalued and it's too closely linked to PLI and whether you have PLI or don't have PLI. Where do you stand in the great EMS debate?
So some of these players have run up quite a bit and probably discounting FY28, FY29 numbers. Currently, the apprehension is that rupee depreciation is going to hurt margins quite a bit. And that would be the key monitorable, because these are low margin businesses. They have a lot of volume, visible volumes come through. That is not a problem. PLI is not a problem. Valuations are a problem on the back of margin concerns due to depreciation of the rupee, because imported raw material as a portion of your bill of materials is still quite high. So from that perspective, valuations may go out of sync. So that is the apprehension currently.
So you're not buying the dips in EMS? Okay. All right, Manish, we'll wrap it up on that note. Thank you so much for joining in. Great conversation as always. Let's also take this opportunity of wishing you a very, very Merry Christmas, a very Happy New Year. May it be a positive for you, your teams, your family in every way. Thank you for joining.
Very happy Christmas to you and CNBC and all your viewers, Surabhi.
Thank you. Thank you so much. Have a great day. Okay, speaking of a great day, one stock that's having a great day is definitely Coal India. Let's pull it up back on the screen. The rest of the market is actually, even the Nifty's turned around. It's flipped 50 points up now. So there's some buying happening at lower levels. And it's inching higher, 26,227, 228. So we're practically 100 points away from the all-time high milestone. 26,325 was the previous all-time high. I'm just about 100 points away from that. Let's look at Coal India, 2.5 up. Sud had alerted that, their whole plan of listing more of their subsidiaries, that seems to be rolling along. And Sudarshan, the market is taking note of that. So let's revisit the news.
So it's a top Nifty gainer for second straight day, and the reason on expectation of the listing that company is planning for its 4 subsidiaries in FY27. It had already begun the process to list 2 subsidiaries, and names are BCCL and CMPDIL. Now the latest update is that Coal Ministry on 16th of December had asked Coal India to begin the process to list other 2 subsidiaries, and those are Southeast Coalfields and Mahanadi Coalfields. Both these companies are, one is in Chhattisgarh and one is in Odisha. And remember, the listing of these 2 subsidiaries would be very important, as these 2 companies together form more than 50% of Coal India's production. And because of the listing, it can be seen as the major value unlocking as far as the Coal India is concerned. Now, what will be the next process? So yesterday, the board has given in principle approval for the listing of these 2 subsidiaries. Now, Coal India will take this process to Coal Ministry, and after their submission will be made to DIPAM, and following that all the regulatory approvals will be needed for the listing. But the expectation is that all these 4 subsidiaries will be listed in the upcoming fiscal, that is FY27, and on the back of that we are seeing a big move in the stock for the last 2 trading sessions.
A big move indeed. Look at JBM Auto. That's another one which has moved higher, up around 9%. And VIP, something that we just spoke about, up around 8% post that block deal. It's crossed or closer to the 394 mark. What we understand is that the stake, obviously, which was held under the promoter's name, which was controlled by Multiples. Now, maybe Multiples wants that in their books, so which is why we saw that bit of a intra-promoter sort of transfer that took place. The street is taking note of the fact that the stock has done nothing. And with the new owners, can they breathe fresh life into VIP or not? Hindustan Copper, another one where we spoke about, the silver prices doing well and commodities doing well. Hind Zinc and Hindustan Copper, both of them have spiked. Hindustan Copper 5.5%, Hind Zinc around 3% as well. Nuvama Wealth is the other one. I think 361 was one of the calls that came in from Sudarshan Sukhani, and Nuvama Wealth is another one which is doing well, up around 3%. But Sud, you also have Pine Labs with you.
So it's another day, another positive brokerage note for Pine Labs. It's the recently listed company. Just last month this got listed. It was a strong listing for Pine Labs and stock has been moving higher. And today Jefferies has initiated coverage with a buy call and target has given is of rupees 300 per share. Yesterday there was a positive note for Morgan Stanley, which had a target price of almost 260%. The stock is moving higher today as well. It's up currently more than 4%. Jefferies says company is a leading digital payments at stores as well as the prepaid cards and building a share in the online payments as well as the international issuing business. Network with brands, merchants and banks with tech platform is the key mode for Pine Labs, and it can achieve 23% CAGR in revenue over FY 25-28. Even operating efficiency can lift adjusted EBITDA margin from 15% to 27% that Jefferies believes that company can achieve over the next 3 fiscal, that is by FY 28. And valuations are a discount to peers and can re-rate if company delivers the consistent growth that it has been seeing over the last few financial years.
All right, Sudarshan, thanks a lot for that. That's about Pine Labs up around 4% right now. But the other stock on our radar, Aadhar Housing Finance. Next management on the show, stock surged more than 13% in 2025 so far. Expects strong AUM and disbursement growth as well. We're now joined by Rishi Anand, who's the MD and CEO of the company. Obviously, will the AUM cross 30,000 crore in FY26 with the third quarter disbursement trends and spreads with regards to their business, the net interest margin, will that expand or not? Would be some important points that we would be speaking with the management on. Thanks a lot for joining in. Rishi, season's greetings first to you, your team. If you could give us a sense on how the third quarter disbursements have been. When you joined us after your second quarter results, you said that the second half of this year could see 18% disbursement growth. Do you think that would happen? Are you on track?
Morning, Mangalam. Morning to you, Surbi and Rima too. Yes, season greetings to all of you. Yes, I remember, speaking to all of you on our disbursement trends and H2 being much better than H1. Are we on track? If I were to answer that question, I would say yes, we are on track. And as always I've been indicating that for the current financial year, we will be looking at an AUM growth of anywhere between 20 to 22%. So disbursement will translate to AUM, and we are completely on track.
What were the October, Rishi, hi, morning, Rima here. What were the October and November disbursements run rate? Because in H2, to get to that full year guidance of 18%, you need to do about 23-24%. So at least for October, November, can you share the disbursements run rate?
While I can't give you the exact numbers, Rima, you understand why, and good morning to you. But are we on track upward of 20% on incremental disbursements? Yes, we are.
Okay, so incremental disbursements in excess of 20% from the start of Q3. What about the cost of funds? The RBI has delivered an incremental 25 basis points of rate cut in the December meeting. Have you passed on? What's been the extent that you've passed on so far? And what is your cost of fund as we speak now? And you'd spoken about an exit rate of 7.75, 7.8%. Is there going to be a change to that given the rate cuts?
Yes, Rima. So the way it works is for the calendar year in question, total of 125 basis points repo cut has happened. Now, if I look at the way our borrowing is tagged, close to about 20% of our total 18,000 crore borrowing is linked to repo rate. The balance is linked to MCLR. So have we got an impact on repo rate borrowing, which is 20% of my borrowing? Yes, we have. The balance is yet creeping in very slowly on the MCLR borrowings. As
and as we move ahead, the moment we get substantial impact on the cough, that's when it's going to be passed on to the consumers. The way we look at it, by end of Q3 sometime, the pass on should happen to the consumer. As regards our cost of funds, incrementally, you are right. We are looking at closing the year at about 7.75%. As we stand today, we are at a 7.8% cough.
Hi, Rishi. Morning. Great to have you in. Season's greetings.
Hi, morning, Survi. Season greetings to you too.
I have a very different question. I'll get to that in just a second. Let me just complete Rima's point on, just with the way margins and spreads will move. I think last time we spoke after Q2, you had indicated that a range of about 5.75 to 5.8% should be expected in this year, I believe, for spreads. Is that pretty much where you are at now?
So Survi, right now, as we speak, H1 exit has been at 5.9% spreads. I don't see too much of contraction happening. So a 7.75, 7.8% is the right number to go with.
Okay. All right. Got that. Now, Rishi, the thing is that I think Christmas came very early for the NBFC sector. And Santa is coming in from all directions, from Japan, from West Asia. Yeah. You know what I'm getting at, right? I mean, checks are being cut for $3 billion, $4 billion. So how are you viewing the landscape? And I mean, I don't think that you've spoken about this in the past, but because Indian NBFCs seem to be looking so attractive to these foreign investors, I mean, are you beginning to have some thoughts? And how do you view what's going on? It seems to be a great environment to raise fresh equity capital for Indian non-banks and banks.
That's right. And what better timing, Surbi? Yes, things are looking good. Whether it is Japan, whether it is Singapore, whether it is UK, we are seeing a herd of investors looking at interesting options within the NBFC space. As far as we are concerned, Surbi, I think we are kind of capitalized to the extent that for the next at least 2.5, 3 years, I don't think we are going to be needing any capital infusion. So are we looking at any capital infusion from the flux that is happening today? No. So it is already Christmas for us when we did our IPO.
Got it.
Okay. So at your current capital adequacy levels, and I'm not now talking only FY26 end. I mean, what is the next because you're saying you're well capitalized for the next 3 years.
That's right.
So what is the next 3-year growth runway that you're working with right now? Will it be 15%, 20%? What do you have in mind?
So growth run rate, we are looking at anywhere between 20 to 22% for the next 3 years. So we'll keep that trajectory up and running, which means we will effectively double our AUM in the next 3.5 years. The way to look at our business is, what kind of levers are we sitting on? Debt to equity. That's how we measure ourselves. We are today comfortably sitting at about 2.55%. I think the capital requirement is going to be when we hit a 4.5, close to 5% lever. And that's 3.5, 4 years away.
Right. But, capital gets you the best value when you don't need it. That's when people are chasing you as against you chasing people. Let's see whether that happens or not if the check is tempting enough. But what I also wanted to understand is the underlying demand for housing by and large, because we, will view that from your lens right now. There has been both monetary, fiscal easing, the GST cuts, all of that has happened with people, having a little more money in their hands. Is that going towards consumption? Are we seeing any sort of increased demand for housing?
Okay, so Bangla, the way to look at it is, the moment GST cuts were announced, I think the entire industry pounced on, is something more being left in consumers' pocket. It doesn't work like this. It takes a couple of quarters for things to move on. More than GST cuts, we had income tax benefits flowing in this year.
Yeah.
We had PMAY 2.0 announced. So there are, and the larger piece was the Swami 2.0 fund announced, which was 10,000 crores. 3 crore additional housing coming under the affordable housing projects. So these are substantial things that are happening by both central and state government. The regulator NHB, the supervisor NHB, the regulator RBI are playing their own bit. So there is little too much happening both on supply and demand side. And I don't see any reason why, things should slow down or there is no demand. Yes, we all as an industry became a little cautious when the tariff issues came around, primarily on 3 sectors, but it hardly, and as we look at it on hindsight, there was hardly any impact.
So demand's good. I'm not talking about demand slowing down. I'm more looking at demand accelerating.
That's right.
Is that happening?
I meant that. Even I meant that. And yes, the only yesterday we were at Lucknow. The entire housing finance fraternity was in Lucknow. Our supervisor NHB had organized a CEO's conference. And we happened to meet some of UP's secretaries at the housing department, and we could figure out the kind of development that is happening. 60,000 plus, affordable housing units up and running and available for grab by end users. Similar is the state in Uttarakhand. Similar is the state in Karnataka. Similar is the state in Andhra Pradesh, Telangana. So there is the demand, and you can see the demand coming in. These are actual end users who've taken the units, and they're looking for facilities now.
Got that. That explains why you're confident about a 22% growth runway for the next 3 years, which will double your AUM. Rishi, any pockets of stress seen in the industry in Q3? Because earlier there were regions in Kerala, East India, Calcutta, etc., where there was some stress. Not you in particular, but generally, how has the asset quality been? Are there any pockets of stress? And what is your guidance on cross NPAs for your company?
Okay, so I'll take the second question first, Rima. The guidance on GNPAs for the year as we end will be anywhere between 1.15% to 1.1%. That's what we've been delivering for the last 3 years, and I don't see any reason why the numbers should go up. We are stacking in perfectly okay. That also answers your first part of the question: is are we seeing any activities across multiple states which should be of any worry sign? No. The trend has been, if I were to pick up the last 5-year trend, whether it is, you spoke about East, you spoke about Kerala, the trends have been similar. The consumer behavior has been similar. The good part is that we've started getting a lot of legal support from the judiciary. That's what helps us a lot.
All right. And what about competition coming from the PSUs? Because while we're worried about money from other parts of the world coming in and that causing some sort of competition in the space, the PSU competitiveness has picked up as well. I mean, 2 or 3 of the HFCs did speak about it in their second quarter earnings too.
Yes, Mangalam, you're right. It depends on what kind of HFCs you're talking about. But the moment it comes to low-income housing, that's the sector I cater to. The good part is, everybody's created their own niche, whether it is public sector banks, private sector banks, larger HFCs, and people like us who operate in the low-income space. We do something called, non-income based lending, cash flow based lending. That's where I think we have a niche over, all the public sector banks or the larger private sector banks. Do public sector banks want to get into cash flow based lending? I don't think they're going to be getting there in a fizzy or a hurry. Do they still need these kind of consumers? Yes, they would need these kind of consumers on their books to comply with the priority sector norms. And that's the route that they take is something called direct assignment from people like us. So are we seeing any real competition from public sector banks? I will not term it as competition. I think it is all healthy, but there is definitely an overlap of 3-4%, but that's about it.
Okay, so it doesn't seem to be of a magnitude that is concerning you. As of now, you seem on track, sounding as confident as ever. 20% plus growth expected this year and maybe the next coming 2-3 years as well. Rishi, pleasure having you on the show today. Thank you so much for joining in. And once again, wish you a fabulous end to the year. Happy Christmas and a very, very happy 26.
Merry Christmas and Happy New Year to all of you and all your viewers, please.
Thank you. Thank you so much. Bye-bye. Have a great day. Bye-bye. Well, we'll take a quick break on that note. Coming up on the other side, we've been talking equities as of now. Need to look at the bond market as well because the RBI has announced a big bazooka move. OMO's worth 2 lakh crore rupees and a very, very large FX swap as well. What does this mean for the bond and the currency market? We'll ask Lakshmi Iyer for Bajaj Alternate Investment Management. Also with us will be Dhaval Dalal of Edelweiss AMC. Welcome back. You're putting the spotlight on the money markets now. The Reserve Bank of India has unveiled a fresh set of liquidity measures. It has announced a 2 lakh crore rupee additional OMO bond purchases and a $10 billion USD INR foreign exchange swap line. We have with us Lakshmi Iyer, Group President, Investments and CEO at Bajaj Alternate Investment Management, and Dhaval Dalal, President and CIO, Fixed Income at Edelweiss AMC. Ladies and gentlemen, thank you so much for joining in. Season's greetings to both of you. So it seems that the news headlines are not abating, even though holiday season is setting in. Let's get your sense, because, I mean, while in the policy, the RBI did indicate, but I think in the policy, Lakshmi, they announced OMOs worth about 1 lakh crore. Yesterday, what we got is 2 lakh crores, and it's coming in bam, bam, bam. I mean, throughout, January. Is it because the market was getting tight? There's been a lot of talk about how there's a lot of supply, there's a lot of, state debt that's being sold in the market. Your first thoughts?
Yeah, hi, good morning, Surbhi. So definitely the bond markets were actually behaving like Ranveer Singh in Durandar. They were they actually behaved
rising
like
and rising, yeah?
No, they were actually living the moment ghayal hu isliye ghatak hu. So I think,
Wow.
they were wounded and therefore they were behaving lethal, and enter Santa Claus, or should I say Mr. Sanjay Claus, where he just opens up the bag and hydrates the bond markets, which was so much needed, because two parts to it. To your question, the bond markets were rising relentlessly in terms of yields because there was an inherent demand and supply mismatch. Point number one. Point number two is even the durable liquidity in the system was getting a little bit challenging, and given that the CRR as a tool has already been invoked, there needed to be another primary infuser of liquidity, which is the OMO and the swap. And of course, it does have the intent of cooling off the yields, which almost, I would say, flirted with 6.7 levels as of yesterday. And then we saw cooling off. So I think it is much intended, cooling off required in an era of climate change. This is a much welcome move.
You're in some mood today. There's Durandar, there's Sanjay Claus, and then there's climate change cooling off. Let's see whether Dhaval also, resonates with that sentiment as well. Dhaval, with the kind of cool off that we've seen, a slight one, where do you see these levels settle and, maybe move from here on?
So obviously, Lakshmi's legendary comparison notwithstanding, I think the bond market has been a little soggy, if I may use the word. And it's like probably the probable uncle who's unhappy with the wedding. RBI pumping so much of liquidity in the last month. I think the bond yields continue to trend higher, presumably because the Reserve Bank of India did not announce any OMO for the January. And I think also the higher than expected SDL auction, I think that was the these are the two triggers which pushed the bond yields higher in the first and Monday and Tuesday as well. So I think in response to that, the Reserve Bank of India has come out with a very big bazooka OMO bond purchase and a $10 billion swap. I believe that this should calm down some of the nerves in the bond market who has been asking for more and more. And I think this is a very, very good level of injection. I think from 1.5 trillion to additional 3 trillion. This should be sufficient, in my view, from the bond market's perspective to stabilize the bond yields and bring them lower to a fair value. I think in the last couple of months, we have seen the yield curve experiencing a little bit of bear flattening, where the short-term yields have trended higher, particularly 5 to 7 year segment has been the biggest hit, and while the long-term yields have actually trended lower. So I think some amount of respite is needed at the short end.
Sure. Sure. Both of you are on a roll, right?
Someone told me on the 24th at 9:50 you'd be discussing bonds, and suddenly someone spoke about Durandar, Uncle at the wedding, Santa Claus, and Ghatak, Ghayal.
So
those things,
I think it's very, very colorful. Maybe I can add on. It's rubbing off on me as well. So that uncle, we'll call him Uncle Scrooge, Dhaval. So that's how the bond market was behaving, not getting into Christmas festive spirit. But then Sanjay Claus stepped in. I must apologize at the outset.
Grinch.
In case anyone from the RBI is watching, this isn't just, this is in jest. It's holiday spirit. So please excuse us.
I think we should change it to Grinch, right? Because it's the Christmas season. So that is the really grouchy person.
But, just to complete that point, and, I leave it to either of you to take it up. So a couple of factors which were leading to these higher yields, right? The higher supply, the SDL auctions, like you mentioned. I want to understand to what extent was this unprecedented rupee fall and whatever little the RBI was doing to support. It wasn't doing much, but some sales were happening in the market. Did that also exacerbate the position? And during that time, there was some chatter about whether FPIs will start selling in the debt market as well. They're anyway selling in equity. So there was some fear around that. So where are we on the whole rupee front and the rupee bond tango then? Lakshmi, you want to take that?
Yeah, so Surbi, if you look at the month of December, the FPIs have actually net sold even in fixed income. Up until now, they've sold about 12,500 crores. Of course, for the entire year, we'll be closing in closer to about 56,000 odd crores, 1,000 crores positive. The rupee depreciation and the resultant intervention also exaggerated the liquidity deficit in the system. So as of this early start of the week, we were in a marginal deficit. And I think that's where the governor has played true to what he mentioned in the policy, that they will ensure that the liquidity in the system is not hampered. And with this announcement of the swap, INR swap, we are coming back into the region of plus minus that 1% of NDTL or net demand and time liabilities. Is it that the rupee depreciation is leading to a spike in yields? That's not clearly the establishment, but of course liquidity was definitely a challenge, and I think that has got addressed to
Okay. Lakshmi, what would be the impact on the 10-year bond yield? Where does it settle, assuming there are no more shocks or surprises that come in, based on this announcement, and then even, say, over the next 3 months, FY26, the end of fiscal year 26?
Rima, our view is clear that this is a good and a very positive move, much intended to bring some cooling off on the yields. You could see yields receding towards the 6.5% region, but incrementally will banks continue to support? See, they've been tendering in OMOs. Have they been really buying in auctions? I think all of that will set the narrative for it to decisively breach the 6.5 level on the lower side and stay there. So I think there are going to be multiple and our view is that this may not be the last of the measures. So I think bond yields are going to be in check, maybe closer to 645, 6.5 lower end, higher end of 665. I think the lid for the bond yields have been done for now, unless some other bazooka unfolds.
All right.
More measures are expected, according to Lakshmi, to keep the yields in check.
Let's see whether that happens or not. That was just a word on the correlation between the way the rupee weakened and the impact of the bond on that. Now we've seen the dollar weakness obviously come by over the last few sessions. So that's stabilized the rupee a little bit. Where does that go from here?
So our analysis shows that there is a correlation through the cash term rates. And what we have observed that during the swap days, first swap of $5 billion, we saw the cash term rates moving all the way up to 7.5% to 9% in some days. And as a result of that, we saw banks taking advantage of the higher cash term rates and try to issue bank CDs in a higher quantum in month of December. And that has resulted in a slightly higher short-term rates. We also saw some redemptions in the system that all has contributed to some amount of selling from mutual funds in GSEC as well as in corporate bond market, and that has pushed rates higher at the short end. So these are the confluence of factors which has resulted in some amount of higher yield in corporate bond and GSEC. And now in January, Feb, March quarter, we have to see how much of the SDL supply comes in, because that's the one last bridge to cross as far as bond market is concerned. If SDL supply is lower than feared, then I'm sure that the 10-year will clearly go below 6.5.
Having by the way, a positive rub-off on many of the NBFCs.
So NBFCs is doing very well.
Very well. If you look at the top two Nifty gainers, it's Bajaj Finance and Shriram Finance. And outside of that, you've got a Manappuram Finance, of course, aided by the record surge in gold prices. But in M&M Financial, also up and about, L&T Finance, Poonawalla, Sammaan Capital, Edelweiss Financial, across the board, I think that is a sector which is leading today. And it's aided by the moves and the announcements seen by, in the bond market by the RBI.
Absolutely. Who says there was no green in the Indian equity market? Just look at what happened to these financials and particularly in some of these NBFC stocks. What a move on them this year. And it's continuing as we wind up the year as well. Final question to both of you. So the other issue for the market, will the RBI cut or not cut? Are we done with rate cuts? Where do you stand on that? Outlook 2026, Lakshmi?
I'd say that the incremental scope of significant easing from here is not there. So we would probably push our luck and max maybe see one more rate cut. But beyond that looks very, very difficult. And timing, I don't think it's a slam dunk that we'll see it in Feb.
All right.
And Dhaval, quick 10 seconds, your call.
See, our view is that inflation is likely to surprise us on the lower side. So the RBI will have a room to cut. But whether they cut or not, it's immaterial. I think the 10-year will clearly go below 6/4 in 2026.
All right, gentlemen, take that call. As we speak, we're speaking about the festive season. A couple of stocks that, deserve mention. Sula has been, again, a rank underperformer. Sula has been down, 44-45% this year. A big cut from its post-IPO price as well. Currently seeing a gain of almost 7.5%, maybe the season of mulled wine this time. But the other one is VIP, as sources tell us that, the entire deal with Multiples is complete right now. Remember, when the deal was struck, Multiples was to buy 32% stake of the company at 188 rupees per share. The Piramal family has earlier transferred about 6% stake, and with today's 26% stake, 32% stake from the Piramals transferred to Multiples, and that stock up around 5.5%, hasn't moved much from the price at which the deal was struck. But good time to get in a technical view on the market. Nagaraj Shetty of HDFC Securities joins us now. Nagaraj, your thoughts on the indices? We've recovered a fair bit from the lows. Where do we go from here?
Hi, good morning. Market has been a strong uptrend, no doubt about that, after a sharp up move recently, showing some sign of consolidation. Technically, this consolidation more often leads to a uptrend continuation pattern, and I'm believing that to true this time also. And market is likely to move further. At the higher levels, 26,300 to 400 is likely to offer some resistance for the market, and eventually Nifty could reach towards the 26,600, which is the initial near-term target for the market. Second, stocks, I have two stocks, one UPL and NMDC. UPL chartically was moving in a larger consolidation band and recently witnessed a decisive upside breakout of around 770, 780 levels, currently trading higher. Overall chart pattern is looking positive, and RSI and volume breakout is also seen on the charts. So currently trading around 780, one can look to buy at this point of time. Initial target would be around 820, and one can place a stop loss at 760. Second one is from a metal front, NMDC. NMDC was moving in a larger range-bound action over the last few months and before witnessing a sharp breakout in last two sessions. And the overall chart pattern is indicating the sharp upside momentum is on the way. The rise in volumes during breakout is indicating more upside could be there in the near term. Currently trading around 81.48, 81.50. One can look to buy at this point of time. Immediate target would be around 86. One can place a stop loss at 79.
Thank you very much for joining in. Let's talk about some stocks which are moving around smartly. Ajanta Pharma right on top, 4% gain. Ekta is here to tell us the news. Ekta.
Well, yes, Ajanta Pharma is in focus because there is an important deal which they have struck. They have signed an in-licensing agreement with Biocon. This is for marketing semaglutide, which is basically the generic molecule of Wegovy as well as Ozempic, which is the weight loss drug by Novo Nordisk and which is going off patent in multiple countries come next year. That includes Canada in January as well as emerging markets, including India, in March of 2026. So this particular licensing agreement is with Biocon for around 26 countries, and it is exclusively across most of them and semi-exclusively in 3 geographies. It is across Africa, the Middle East and Central Asia. Now, the patent, like I mentioned, expires highs in most of these markets in March of 2026. So Ajanta Pharma plans to commercialize the products after receiving regulatory approvals, which they expect in late 2026 or early 2027. Remember that many such companies are looking to do such deals. We are probably going to hear a lot more of it as the patent expiry does come closer. So for this, Ajanta Pharma has a strong presence within the geographies such as Africa. So for them, it would be easier to market a drug such as semaglutide more extensively.
Thank you very much for that. Get into a break. On the other side, Manisha Gupta will join in to focus on commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in, and Manisha can't stop talking about the rise in gold and silver.
Well, absolutely can't. And that's exactly what gold and silver are ensuring as well, with all-time highs continuing on to this one. I'll start with silver first, and we've seen an all-time high of $72.7 an ounce for this one. Now, if you look at the overall this year gains, that stands at 151%. So it's more than doubled is how we look at the silver prices. I want to take you through on what we've done through the year in sense of gains here. So we started this year with $29.50 an ounce. It was somewhere in June that we saw $30 pass and go up to $37 as well. $40 crossed in September, and then you saw $50 cross in October. Well, this is the first time that $50 was hit since 2011, and $50 was an initial all-time high as well. $60 and $70 got done in the month of December itself, and we're not even done with the whole month right now. So from where we're standing right now, it has been a 40% of gain in case of silver prices in last 1 month itself. For the Indian prices, we've crossed above 2,20,000 rupees a kg right now, with strong support continuing from the ETF buying for the Indian markets, and the international markets have seen 4,000 tons of holdings for ETFs therein. It has to do with the strong industrial demand. The conservative demand continues to be there, the conventional that is. And then apart from that, you have the AIs and the data centers and EVs and green energy, and silver is getting used in all of that. And then this is about disruption in case of, or dislocation rather, in the international markets. So a lot of LME inventories have continued to decline because a lot of silver is getting shipped to US, and then ETF demand is, that is where silver is getting logged as well, weighing onto the prices there. Hedge funds were caught short, and we have seen them coming back into the markets as well. There is a deficit that continues because mine supply in last 10 years has declined around 80 million ounces. So 1 billion ounce of a supply is what we are looking at in this year. Apart from that, markets also believe that some bit of a crypto money also seems to be coming into the markets. Silver is part of the US critical mineral list as well. So everywhere that you look, there is no reason to go short. There could be some profit taking because people are holding silver, but no shorts absolutely coming in for this sector there. Not just silver, gold is trading at an all-time highs as well, $4.525 an ounce onto this one. And for this year, we are up by nearly 72% into the markets there. Take a look at the chart on how gold has performed in this year. We started this year with 2950, 3000 got taken off in the month of March, an all-time high of 3500 in September. 4,000 is what we saw in October. Now, this is a string of all-time highs that gold also continued to do, and 45.25 is what we're looking at this point in time. So the last $500 of a jump up clearly came in the last 45 days itself. For gold also, this is the strongest annual gain since 1979. It has been 51 record highs that gold has done in this year. And then Indian gold prices have surpassed above 1,38,000 onto this one. A lot of geopolitical tensions because you have US, Venezuela, Iran, Israel, and that it also is about Russia, Ukraine. All of that have been quite supportive. It also has to do with a very strong central bank buying that we have seen, investment, institutional buying, portfolio diversification. All of that led to strong gains coming in for gold. And then the rate cut expectations going forward have been supportive. And finally, I want to talk about platinum prices. And they have outperformed gold and silver as well. $2,385 an ounce onto this one. And we've seen 163% of gains on for this one for this year. This chart should come in on your screens as well. And this is going to be very, very surprising because we started this year with sub $1,000 an ounce. So we were trading at around $910 in the month of January. And then we've seen $1,000 cross in May, 1,500 cross by September, and 2,385 of an all-time high standing in December. I mean, this is something you see perhaps in once in a lifetime, the kind of run-up that we've seen. 170% of gains come in. So tight supply conditions, strong investment demand, inventories continuing to decline. This is a third straight year of deficit as well. European Union demand is expected strong. Chinese platinum demand has been very, very strong. So if you look at the China platinum bar and coin purchases, that stands at 418,000 ounces. You know, interestingly, China has not bought any diamonds this year. They have bought gold, silver and platinum, and it clearly shows. And the launch of platinum futures in Shanghai Exchange is yet another thing. So people are buying it in physical, in futures, everywhere. So China clearly buying a lot of this, and so is India.
All right, when China buys, we see a big price move, and when India buys as well, we see a big price move. All the money from diamonds perhaps going into platinum, gold and silver. With all the financialization of these assets, a big move is what we're seeing. Thank you, Manisha, as always, for telling us what's taking place out there. Just monitor Grow. That stock has been doing extremely well. Just the last few minutes or so, it's seen a massive spike up around 7%. There have been a couple of brokerage initiations on this stock over the last two sessions. The one that came yesterday was actually a sell report that came in. So the stock obviously, is mildly off its post-listing high, but seen a big move in the last 7 days itself, up over 21%. 361 WAM as well, which was one of the technical calls at 10, has seen a bit of a spike. That stock's moved higher, and we continue to see some traction in a lot of these NBFCs, which continues from the word go. Manappuram Finance for now up around 5.5%. What we'll do is take a short break, come back on the other side. A special discussion on REITs with Vinod Rohirov of Knight Frank. Welcome back. Now, let's talk about the REIT space because it was one of the most notable trends in 2025. The increased focus on real estate investment trusts, also known as REITs, or basically, making real estate investment acceptable or agreeable or palatable for small ticket sizes as well. India saw its 5th REIT list on the stock exchanges. The market cap now stands at around $18 billion. So to discuss this space and the landscape, joining us now, Vinod Rohira, MD and CEO at K. Raheja Corp. We'll also have Ghulam Zia join us shortly. Thanks a lot, Mr. Raheja, for joining in, Mr. Rohira, for joining in. On the REIT space itself, 2025 has seen a lot of regulatory changes, some more expected in 2026. What else can be done for you to make, from your side and from the regulator side, for REITs to be a little more attractive?
Hi, thanks for having me on your show. Good morning and wishing you a Merry Christmas in advance. So I look after in my role on the development part of the business, which is residential and commercial real estate. I can tell you that the markets finally are understanding the intrinsic value of the capital value behind the annuity of assets like grade A commercial real estate, and which is the reason why you're seeing the interest in REITs going up. And of course, SEBI has helped understand the investor that this is more of an equity instrument than just a debt instrument, and it's got a long-term value to it. And it's an intrinsic value-driven asset, which is focused on dividend and total growth. So all of these aspects are now penetrating deeper, and you're seeing much larger interest in having a share in investing in commercial real estate. I think this is only going to keep going up because it's going to be far more stabler as an instrument, far more accepted as an instrument, and it'll do phenomenally well in the years to come.
Raheja Corp, between commercial, which is similar to REITs, the annuity kind of a business, versus the pure residential space. I mean, what is the current breakup? In 2025, what have been the kind of returns that you've generated from both these assets? And will you be shifting more towards commercial then?
I think we are set to blaze guns in all of these directions. We see a lot of potential for grade A plus commercial real estate. We see a lot of potential for the most aspiring aspirational luxury in every market segment, and we want to really scale that up. You will see us announcing a lot of projects that are on the drawing board getting started in the next few quarters. So we are very, very bullish on prime real estate for residential as well as commercial across all the prime markets in India. We've seen a great year, and I think 26 will even further be a strong endorsement to trust and brands that are delivering quality of a different level. You will see the consumer asking far more, and those who can stack up will actually do really well.
So what is the incremental addition seen in the industry this year in commercial versus residential?
I think the returns have been phenomenal in both cases. You've seen a huge demand from large institutions wanting to buy annuity assets, which was not the case up to 2 years ago. So any assets that coming out to sale, very few grade A plus assets are really available. And if they're available, they're being bidded at crazy prices because people want to acquire those assets which are already giving you annuity returns. So that you're seeing yield compressions take place, and you're seeing assets being appreciated if they are grade A plus plus. Similarly, if you see the consolidated space the commercial real estate has, the marketplace has very few reputed players who are developers and asset managers combined. And in that space, in grade A locations where you're building grade A plus plus, the demand is far outstripping supply. And that's really the advantage you see if you're really aggressively building, because the tenants you want to lease to are not happy with starter title. They don't want to see broken up assets. They want to see someone who they can call 24/7 to look after the experience and the asset. And if you have a combination of those going, you have a runway to be able to deliver quality assets and get the best tenants in. And we are seeing that runway play out in 25. You will see that play out in 26 as well. Similarly, for the residential play, the shift is towards quality, timely delivery, and a different level of experience you're offering. The consumer's changing, mind you. In the next 5-7 years, the Xenials will start dictating what they want in their homes. You have to pre-plan those kind of assets and build them. And if you're right up there, you will see a massive demand surge because the client is willing to pay and wants a lifestyle.
All right, massive demand surge is what is expected from a consumer standpoint. But let's go back to the investment question. Ghulam Zia also with us right now. Ghulam, it's Christmas time. Everyone has their wish lists, right? So from a REITs investment standpoint, what would be on your wish list from the regulators for the next 1 year? What can make it a lot more attractive than what it is already?
Good morning, everybody. Good to be here sharing this space with Vinod. He is an expert on the subject. The point we have been wondering is, this market has to expand, with barely less than half a dozen of REITs. I would want to see this whole market expanding more. And that's where we wish to see at least 3-4 more REITs coming on the block, giving more options to investors to select from. And that's something which is actually in sync with where we stand as far as India is concerned. We have already crossed, as far as offices are concerned, more than 1 billion square feet of space is already with us, and we are going great guns. So this is high time we expand the portfolios, get more REITs out there, give more options. Obviously last year has given us a great investment opportunity for people. The growth has been fantastic. The returns have been outstanding. So we want to see it continuing and more options, more REITs to come on the block.
What is India's current penetration in terms of REIT in listing versus the globe? And what is the expected addition to REITs in the next 3 to 4 years, Gulam? You speak to everyone in the industry. Where is the industry headed?
Well, the way we look at it, not even 20% of A-grade office stock is right now in the portfolio with REITs. So there's a huge runway. We have a huge opportunity ahead of us. So where we see it, even if it is only office market where it is doing exemplary performance, it's a great runway ahead of us. On the other side, whether it is retail or hospitality REITs are also coming up, and of course, warehousing also gets to be a part of infrastructure domain. So whether it is REITs or InvITs, I'm not too very clear, but then warehousing is also a huge domain. So as far as real estate connects are concerned directly, a lot of these options exist, and we do see in next 3 to 4 years, I would love to see at least half a dozen more REITs knocking coming around the block and giving more options for our investors to participate.
All right, we have 5 already, and you expect a half a dozen more to come by as well. Just a final question to Mr. Rohira. Mr. Rohira, you spoke about residential, you spoke about commercial. Let's speak about hospitality. That's another very attractive, opportunity for builders like yours.
Absolutely. So as a group, we are very clear on the drivers for growth. We see hospitality to grow tremendously in the right locations. And there's a separate team in Chalet that runs this, and they're constantly giving you feedback on what they see of the marketplace. As a group participant, I can tell you that there is a tremendous opportunity in hospitality, in retail, in prime residential, as well as commercial. And there are other asset classes that are emerging, which need scale, whether it's healthcare, whether it's education. All of these will play out dramatically in the coming 5 years, and you will see a lot of that deciding how value grows and how infrastructure plays out.
All right, gentlemen, thank you so much for joining in and giving us your perspective on real estate investments, the real estate trends, and the drivers for the growth for the sector. Let's see 2026 brings you the kind of returns in real estate stocks and real estate investment trusts as well as we speak. With that, out of time on this edition of Bazaar, we wrap up with the good news. The market is up almost 50 points for the Nifty. The Nifty Bank up around 125 points, with mid-caps far outpacing the frontline indices. The advances around 1700. Take a short break, come back. The team of Chartbusters on the other side.
Shares of state-run Coal India spiked for the sixth straight session after the company's board gave an in-principle nod to list two of its subsidiaries, Mahanadi and Southeastern Coalfields. Stock turns positive for the year and is now on track for the fifth straight year of positive returns.
U.S. Department of Homeland Security tweaks H-1B visa rules, replacing the random lottery method with weighted selection, giving greater priority to skilled and higher-paid individuals. Muted moves across IT counters following the announcement.
Shares of Pine Labs spike on an upbeat brokerage note. Jefferies initiates a buy with a target of 300 rupees, citing cheaper valuations versus peers. Valuations and a potential re-rating on account of consistent growth.
Ajanta Pharma inks an in-licensing agreement with Biocon for marketing semaglutide in 26 countries. Now, company plans to commercialize products post-regulatory approvals by late 2026 or early 2027. Shares surge 4%.
VIP Industries in focus. The promoter sells 26% equity in two block deals as it undertakes the previously agreed to transfer of stake to a multiples PE-led consortium.
Hello, good morning. You're tuned into Chartbusters, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Ekta Batra as well. Today we're seeing again some bit of a green, about 26,200 levels, Ekta, as of now. And at the day's highest point around is what the Nifty is trading at. So no complaining a day before we have the holiday. The broader end of the market, like you can see, is also doing well in today's trading session.
Hi, Vinny. Yes, absolutely. No complaints which have come in for the markets at this point in time. We have the Nifty, which is up around 0.2%, but really consolidating. Yes, we are virtually just about 100 points away from that all-time high for the markets. But one needs to see the type of stock performance that has come through this year. But nonetheless, for the mid-cap index as well, up around 0.3%, we have the advanced decline ratio, which is in positive terrain. It was positive in yesterday's trading session. So that momentum has continued today as well. So definitely the festive cheer seems to have sprinkled a little more for our markets, or continues to sprinkle a little more. So let's get in Chandan Taparia from Motilal Oswal, who's going to give us some technical calls on the market. Chandan, hi, welcome to the show. Well, season's greetings to you. The Nifty is holding with a gain of around 52 odd points at this point. What's your call?
Yeah, good morning, Ekta. Thanks for having me. Season's greeting to you and entire team and all the viewers. So talking about the market, the Nifty has been making high rise, high lows from last 4 trading session, and the supports are gradually shifting higher. We are just 100 points away from its all-time high, and the data setup are also turning positive. We have seen that India VIX is now at 9.4, holding below 2-digit level, which clearly indicates that declines are being bought. Put-call ratio has seen the surge and supports are intact in the market. We have seen some recovering in FI's long-short ratio, and the immediate trend is intact. So I believe anytime we can see the fresh breakout to cheer the festivity. And I believe till Nifty holds about 26,100, index has potential to extend towards 26,325 and a fresh rally towards 26,500 marks. Talking about Bank Nifty index, it has been consolidating a range from last 27 trading session. Recently, it has taken support at the lower end of Bollinger Band, and now supports are slightly shifting higher. I believe it has immediate support near 59,000 until it holds above. It also has potential to see the rally towards its all-time high of 60,000 to 60,100 marks.
Okay. Hi, Chandan. Good morning. This is Vinny joining in the conversation. Chandan, which are your individual picks that you're looking at?
Yeah, Vinny, good morning and season's greeting. Talking about the stock-specific idea, first that is buy on L&T Finance. Nifty Financial is really doing well and one of the strongest sector in the entire year. And here we are recommending to buy on L&T Finance, which has been making high top, high bottom on weekly, monthly chart. In fact, one of the strongest counter is all set to start the next leg of rally. Rollers are positive, longs are intact. Put call ratio is surging upwards. So we are recommending to buy with support of 301 for an upside target towards 321. Second trading idea, that is buy on Muthoot Finance. We have positive view on the precious metal, including gold, silver, and we believe that gold is likely to glitter more apart from shining of the silver. So Muthoot Finance is one of the strongest counter, which has really seen good momentum in the last couple of months and now all set to start the next leg of rally after the recent consolidation breakout. So one can buy with support of 3,800 and Muthoot Finance can head towards 4,000 marks. Last trading idea, that is buy on National Aluminium. As mentioned that we are positive on most of the metal name, whether we talk about copper, zinc, silver or gold. And National Aluminium looks good. It has been making higher top, higher bottom. In fact, the weekly chart is quite positive and put writing is visible. Rollovers are better with better roll cost. So one can buy with support of 290 for an upside target towards 312.
Okay, all right. We're going to let you go on that note. Chandan, thanks very much for joining in and speaking with us. Well, for the markets, it's holding up very steadily at this point in time. So let's get in our special segment where we get you a few ideas for profit from Money Control Pro. We have Anand Chaudhary of moneycontrol.com joining in to now talk about a stock that he's tracking very closely. Anand, over to you.
Today, I want to highlight Bikaji Foods International as a compelling stock idea in the FMCG space. It is India's third largest ethnic snacks manufacturer with a strong portfolio across bhujia, namkeen, sweets, papad and western snacks. We like the company for its robust distribution of 1.25 million outlets and a shift towards being a diversified total foods company. It is aggressively expanding into focus markets like Uttar Pradesh and Punjab, which grew by 26% in Q2. The company recently infused capital into its US subsidiary and is targeting 40% plus growth in exports. Following the acquisition of Ariba Foods, Bikaji is moving into high margin frozen business. It is one of the very few FMCG company consistently delivering double-digit volume growth. Though its operating margins remains volatile due to sharp fluctuation in palm oil and edible oil prices, which is 25% of the input costs. Though management has demonstrated resilience by passing these costs through selective price hikes, recently achieving a 5-quarter high EBITDA margin of 15.4% in Q2. At current price, stock trades at 55 times on FY27 earnings. Bikaji represents a business aligned with India's evolving consumption story, making it a stock worth tracking closely in 2026. With that, I close by wishing all the viewers a very happy new year.
Thank you so much for that. But on that note, we're going to slip into a very short break. But as we slip into the break, hear out what Mark Mobius, chairman at Mobius Emerging Opportunities Fund, had to say on the outlook for the AI theme, Indian software as well as hardware companies and the Indian markets for 2026. Listen in.
AI has been pushed and pushed and pushed by so many people that it's quite bubble-like territory. But at the same time, you must remember that AI is here to stay and is expanding. More and more people are adopting AI systems. I myself, I'm using AI almost every day. So there's no question that the AI revolution is here to stay and will continue. But some companies have been emphasizing their AI expertise. And that really may be a little bit too much. Some of these companies are not really into AI directly. And so I think we have to watch it and pick and choose those companies that are really into AI systems and developing AI. Where we would want to focus is on the software companies as well as the hardware. In other words, computer hardware companies, which I think will be growing at a very fast rate going forward. Now, of course, many of these are not listed yet, but as we go forward, this will be a good development area. Well, I think a company like Infosys is a very good company. I'm looking at companies that are doing the hardware for Apple, companies that are not yet listed, but are going to be listed going forward. That would be a very interesting area to develop. I still like gold. I think gold should be part of any portfolio. I hold 10% of my personal assets into gold. And I think going forward, gold will continue to be very, very good. Now, it doesn't mean that it's going to go up in a straight line. There'll be corrections along the way. But there's no question that in US dollar terms, at least, gold will be doing very well, simply because of the proliferation of dollars around the world. And now with AI, you're going to see a lot more development in terms of literal gold. In other words, gold that is not necessarily hard, but soft gold embedded in some of the currencies. So this is going to be a very interesting development going forward. As far as we're concerned, India is number one. It's the most important market in emerging markets, not only because of its size, but because of the youth of the population and because of the developments that are taking place in India, that will be revolutionary, very, very important.
Welcome back. You're still tuned into Chartbusters on CNBC TV18. Well, it's turning out to be quite a steady session, you'd have to say, but quiet, you'd have to say. So positive consolidation at this point in time. But a lot of specific stocks are in focus. So, for example, KNR Construction, that stock is up 8.5% and moving on good volumes. We have a couple of others such as Titagar, which has been moving this entire week on the back of those rail fare hikes which have taken place and this capex which has been announced by the government. So Titagar is up around 2.5% and it's gained around 9% this week as well. So good going for that particular stock. KNR also actually has moved very smartly for the entire week. It's gained around 17.5%. So just watch out for specific stocks. Even CSB is not doing too badly. CSB Bank is up around 1% today, but it's gained around 5% for the entire week. But one stock which has been on a tear is Coal India, which is surging for the second straight day. Vivek joins in to tell us what's keeping the stock active. Vivek.
Well, that's right. So Coal India, yesterday was the top Nifty gainer, continues to move higher. This on the back of the fact that the street now expects significant value unlocking, and on the back of the fact that the company, that has quite a few subsidiaries, is looking to list quite a few of these subsidiaries separately on the stock exchanges. So now, the latest news is that the board approval has been received for listing of MCL, which is Mahanadi Coalfields, as well as Southeastern Coalfields. So now, together, both of these entities account for 52% of Coal India's productions. Not only that, remember, Coal India has already initiated listing process for its two other arms, which is Bharat Coking Coal, as well as Central Mine Planning and Design Institute. So overall, the four large entities that Coal India operates, they're looking to list it separately, and this, the street believes, could lead to value unlocking. In terms of timeline, on December 16th, Coal Ministry had asked the company to take steps for listing of the two subsidiaries, and on 23rd December, that is yesterday, the board gave an in-principle approval. Now, what is the way forward? Number one, as far as MCL as well as SCCL listing is concerned, Coal India will now communicate to the Coal Ministry for submission to DIPAM, post which listing of subsidiaries will be subject to all of the regulatory approvals, including DIPAM, which is the Department for Disinvestment.
Okay, Vivek, thank you so much for that. Holding on to gains of 2% as of now is Coal India. But let's talk about Pine Labs. Now, that one is surging in trade today. Why? We have Jefferies that has initiated coverage on this one. Buy rating, target price of 300 rupees per share. Obviously, what Jefferies views, given that Pine Labs is a leading digital payment at stores as well as prepaid cards, they believe that's a positive because they're already the leader there. They're building in terms of the share in their online payments as well as international issuing business. Network with brands, merchants as well as banks with tech platforms is the key moat for the company going forward as well, is the highlight coming in from Jefferies in this brokerage note. As well as they said that they believe the company can achieve a growth of around 23% CAGR growth in the next couple of years. Operating efficiencies that is expected to lift the margins of the company from 15% to 27% by FY28 is what Jefferies is estimating. And they believe valuations are currently at a discount to its peers and can re-rate with consistent growth if that continues for the company. Do not forget, up post its listing in November, the stock is down almost 2-3%. Today, the stock is surely managing to hold on to gains of 3 to 4% in the trading session as of now.
Okay, all right. So that's on Pine Labs. We need to take a short break, but we'll get you a lot more in terms of specific stocks on the other side. Stay tuned.
Welcome back to Chartbusters on CNBC TV18. As of now, the Nifty is still holding on to 26,200 levels, 37 points up in today's trading session. But Cholamandalam Investments, that's the one we're putting the spotlight on now, because the company has dismissed the allegations by Cobra Pose on irregular cash levels, suspect related party transactions and other issues flagged by Cobra Pose. Listen in to what the management had to say.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality, and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations. By FY22, we started, because the regulation also required, and we started including them. So that is they're playing on this regulatory a requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
All right, so that's the clarification coming in from Chola. We're seeing follow-on buying in today's trading session as well. 2025, however, turned out to be a landmark year for India's financial regulatory landscape. Under Governor Sanjay Malhotra, the Reserve Bank of India has rolled out one of the most far-reaching reform agendas in over a decade. On Rewind 2025, CNBC TV18's Ritu Singh explains what changed, why it matters, and how the RBI's regulatory philosophy itself has evolved.
2025 is going to be remembered as the year the Reserve Bank of India fundamentally rewired how Indian banks operate. Under Governor Sanjay Malhotra, the RBI did not just tweak rules, it dismantled and rewrote them, merging many and simplifying more. In all, we saw more than 80 regulatory changes in a single year, all aimed at the single objective to free up bank balance sheets, to revive credit growth and prepare the system for India's next investment cycle. At the heart of these reforms lies a clear shift in regulatory thinking. Governor Sanjay Malhotra has argued that Indian banks today are far stronger than they were a decade ago, better capitalized, better governed, and more resilient to shocks.
Always the aim will be to promote the stability while at the same time improving competitiveness, encouraging and enhancing growth of the economy.
One of the most consequential changes came in M&A financing. For years, banks had faced tight restrictions on funding acquisitions and promoter buyouts, which was a hangover from the excesses of the last credit cycle. In 2025, the RBI recalibrated those limits and opened the doors for acquisition financing by banks. The signal was clear. Consolidation and capital reallocation are now seen as part of economic efficiency, not excess.
So there was a period of time when we thought acquisition by one company of another company typically is a hostile route. And now, in a completely different context, I believe the Reserve Bank has done the right thing to open it up because it's an excellent avenue of business for banks.
Linked to this was a broader easing of rules governing bank loans against shares, IPO financing and structured credit.
These announcements are, I call them as banking reforms 3.0.
Yeah.
And these reforms are, for a long-standing demand from the banking industry.
Prudentially, the RBI chose sequencing over shock therapy. The expected credit loss framework was deferred, allowing banks 4 years' time to adapt systems and capital planning. Older project finance norms were withdrawn and merged into a simple, unified credit framework. Another major cleanup came through the removal of overlapping and legacy frameworks. The RBI consolidated a total of 3,809 circulars into updated master directions and scrapped another 5,673 obsolete circulars to ease compliance. Liquidity coverage ratio norms were relaxed and external commercial borrowing norms were liberalized, giving firms greater access to offshore capital while retaining safeguards on maturity, currency risk, and end use. These reforms extended beyond large banks. Risk weights on lending to NBFCs and MFIs were restored, co-lending norms expanded, and priority sector rules eased for small finance banks. Parallelly, the RBI addressed the cost of credit. Through 2025, it delivered 4 rate cuts, taking the repo rate from 6.5% to 5.25%. Loan reset norms were reviewed to ensure faster transmission to borrowers. The governor exuded confidence.
Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period.
But the clearest signal of confidence showed through in bank licensing. After a long hiatus, the RBI granted a full-fledged banking license to AU Small Finance Bank and also approved Fino Payments Bank's transition into a small finance bank. The other significant shift came when RBI signaled greater openness to foreign capital, paving the way for Japan's SMBC to invest in Yes Bank and Emirates NBD buying a stake in RBL Bank. Taken together, the RBI's actions in 2025 mark a decisive shift from crisis-era regulation to growth-era regulation. Now, this is not deregulation without discipline, but the tone has changed. The RBI is no longer regulating for the last crisis, it is regulating for the next investment cycle. In Bengaluru, Ritu Singh.
Okay, Ritu, thank you so much for that. Surely a year that we will be remembering for the banking and financial side in terms of the FDIs that have come in as well. But on that note, we're absolutely out of time on this edition of Chartbusters. Thank you so much for tuning in. Up next, you're Trading Up.
Hello and welcome. You're watching us here on Trading Hour. We come to you live from the CNBC TV18 Motilal Oswal studio. I'm Mangalam Malu. With me, Hormaz Fatakia. We're in Christmas colors, as you can see, red, green, white. All of that happening. The market's largely in green with a few hints of red. What's actually perking up today are all these commodities-based names. So you have, Hindalco doing well. You have Hindustan Copper doing well. Alongside that, Hinzing doing well. But at the same time, the NBFCs as well, the bazooka that was delivered by the RBI yesterday when it comes to open market operations, the announcement that came in for 2 lakh crores and an additional $10 billion worth dollar-rupee swaps, all of that infusing about 3 lakh crore of liquidity in our markets has done well, not only for the banking names, but more so for the financials, which have already been on an up move, but continue their rally. For instance, something like Shriram Finance, now up around 2.5%. In the broader markets, we are seeing traction in names like IIFL Finance and Manappuram Finance as well, which is further benefited by the rally that we've seen in gold prices. All in all, a decent day of trade so far, put on by the bulls in front of the Nifty on the back of a 3-day rally that we've seen already. So 26,200 and a little more and counting. Let's go across to Hormaz now with a spotlight on all these stocks that are buzzing around this hour.
Decent day for the markets, even decent for a lot of these broader market stocks as well. And JBM Auto is leading that pack. It's the top gainer on the Nifty 500 today, almost 11% higher on the stock. It's the fourth straight day of gains, the biggest single day gain in 3 months as well for this company. You've had close to 75 lakh shares that have been traded on the stock. The 20-day average is only 85,000 shares. So compared to the 20-day average, significantly higher volumes on JBM Auto. The stock has moved above its 50-day moving average and the 100-day moving average as well now, which was at 635. The next level on the upside is the 200 DMA, which comes at 643. So important levels to watch on JBM Auto. Has been an underperformer this year, down 16% so far despite today's up move. Man is set for its first negative year after 2020. Now Manappuram, as Mangalam was highlighting, a lot of these commodity driven names, gold prices at record highs, 6th straight day of gains for the stock. The stock is also at record highs of its own, and the volumes today are the highest in over 2 months. Over 1 crore shares have already been traded in the first 2 hours of the session, and 20-day average is just 7.5 lakh shares. So moving higher on significant volumes, and the stock remains above its key moving averages. For the year so far, the stock is up nearly 70%, and it's turning out to be the best year the stock has had since 2019, when the stock was up 90% that year. And since we are in Christmas cheer, stocks like Sula Vineyards are reflecting that sentiment as well. And that stock too trading with gains of well over 7% as we speak now, extending its gains almost 8% higher on Sula. The biggest single day gains since June. It's gained in 3 out of the last 4 trading sessions, but had been an underperformer until then. 18 lakh shares have been traded on Sula so far. The 20-day average at this time of the day is less than 93,000 shares, so less than a lakh. The stock still remains below its key moving averages, and the stock has been, the underperformance has been such that the stock still is down around 36% from its IPO price of 357 rupees, Mangalam.
All right, thanks a lot for that. That's about a bunch of stocks which are buzzing around, but it's the IT pack which is on our radar. The US has announced major changes to its H-1B visa program, replacing the long-standing random lottery system with a weighted selection process. Rima joins in with more. Rima, you had earlier pointed out that this is a slight negative for the IT space, but from lows we've seen a recovery because perhaps the impact may not be as much.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
Rima, thank you for that update there. Some of these IT names are recovering from the lows of the day, be it TCS, be it Infosys, and even Coforge, for that matter, has recovered slightly from the day's low. In fact, earlier we spoke to Kumar Rakesh, the India analyst of auto and IT at BNP Paribas, on the impact of these H-1B visa norms on the entire sector. Listen into what he had to say.
This change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. Investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which does indicate that sector should continue to outperform at least in the near term. Among the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue.
All right, let's talk about VIP Industries now. That's the stock that is on our radar. It's up around 5% this morning. There was a large trade on the stock. In fact, now as we speak, the stock is up 7%. The transaction with multiples has completed today. So Dilip Piramal has transferred 26% of his stake to multiples private equity, where around 3.7 crore shares or 26% equity changed hands in two block deals. Remember, it was in July 2025 where, the deal was first announced, where promoters agreed to sell 32% stake to multiples and others at around 388 rupees per share. And as part of that deal, multiples also had to go ahead and announce a mandatory open offer for additional 26%. Now, as norm has it, that the 26% worth open offer money has to be deposited in an escrow account for minority shareholders. So that is what multiples did. So they had their monies worth 26% deposited in the escrow account, and they bought 6% stake from Dilip Piramal in the first tranche in September. Thereafter, the entire minority shareholder sort of open offer got over, and yesterday they got the money back in their account. And the first thing that they did with that money is buy the 26% that was promised from Dilip Piramal, and that's exactly what happened. So in September, 6% transfer. Today, 26% transfer with all that 32% deal to multiples and others has completed. And after this, Dilip Piramal continues to hold 20% stake in the company. Importantly, now what we have to look at from here, the stock has been an underperformer, a rank underperformer. Before today's move also was below the offer price of 388 rupees. And now that the deal is done, at least the agreed upon part of the deal is done, all eyes will be on the turnaround strategy for VIP. The underlying industry is fairly strong. Can VIP regain its past glory, competitiveness and swift growth or not is something that the street will be watching out for, along with multiples' own investment tenure, any further capital investment that they do in the company, and any further management changes as well. Because from the announcement of the deal to now, the MD, Neetu Kashiramka, has also tendered her resignation. So that's about VIP. That explains the 7% move that we're seeing on VIP.
Doing well, VIP. Well, of course, as Mangalam highlighted, it's an underperformer to say the least. So, be interesting to see what is the road ahead now for the company, with multiples now having a significant stake in VIP Industries. But the other mover today has been Vikran Engineering, and the stock is surging because of the order that it won. 11% higher on the stock now. The order win size is almost equivalent to its market cap. Vivek is here with more details on that. Vivek, tell us more.
Well, that's right. A large order win coming for Vikran Engineering, 11% higher, among the top gainer as far as the broad end of the market is concerned. Good volumes as well. So what is the order win? Like you mentioned, it's a large order win. Order worth over 2,000 crore. In fact, 2,035 crore. This is from Onyx Renewables, and this particular order pertains to EPC works that the company has to do for a 600 megawatt solar power plant execution. The total execution period will be over the next year. So next 12 months is when the company will be able to realize the dues that it will get from this particular project. Now, this particular order entails execution of the project on a turnkey EPC basis, and the scope of work, remember, also includes supply of key components such as solar photovoltaic modules as well as inverters. So large order win for Vikran Engineering, keeping the stock higher in the session today.
Right, Vivek, thanks a lot for that. With that, we'll slip into a short break with the news that a couple of these stocks are doing well. Apollo for one, the NSCI nod for merger comes in, and that's no observations from them. So good going for that stock too. Take a short break, come back, focus on the bond market with Manisha Gupta on the other side.
And India Bonds presents Bond Street.
Well, on Bond Street today, we discuss about the big moves that the bonds really seem to be making in the Indian markets right now. So when you look at the overall space, the Indian bonds have rallied the most in last 4 months. And this is after the benchmark 10-year yield bond have seen a decline of nearly 8 basis points there. This is the biggest decline, by the way, since 14th of August there. Now, RBI has announced measures to boost the banking system. And this is what we've seen reaction in sense of reaction to these bonds and yields there. So the RBI has put out also government bonds. It would buy government bonds and do foreign exchange swap therein. This is being done to calm the bond market bond yields there. What the RBI would do is that it would buy $2 trillion worth of bonds, 2 trillion rupees worth of bonds in 4 transactions over December and in the month of January. What the RBI would also do is that it would conduct 10 billion worth of foreign exchange swap for the month of January as well. If you look at 2025 so far, we have seen RBI inject nearly 6.5 lakh crores through various OMOs there. Now, this is the highest annual record that we have seen happening from RBI therein. Interestingly, RBI has had to step in because this has been quite a challenging year, really, because one, you have seen seasonal factors. Second, it has been about the tax outflows. Then you also have seen RBI's forex interventions weighing on liquidity as well, is the reason RBI had to continue to come into the markets to reinforce the impact of recent rate cuts as well. So with all of those factors is the reason that we have seen RBI come into the markets more often than and look at that big amount as well for 2025. But with that, let's go for a short break. When we come back, we'll talk more about markets and stock specifics.
CNBC TV18 and India Bonds presents Bond Street.
Welcome back. Still around 30 points higher on the index and not doing significantly much as they continue to remain in a very narrow range. And some of these stocks that are doing well in the broader markets today, and Sula Vineyards, of course, we just spoke about that. And in line with Sula Vineyards, GM Breweries is also now surged to the highest point of the day, 9% higher now on the stock. Of course, Christmas cheers heading towards the new year as well. So all of these spirit names doing well for themselves in today's session. Sasken Technologies is another name, 8% higher on the stock. And Deccan Gold Mines, whose rights issue is currently open for subscription, that too is up almost 8% in today's session. The other one, the big talking point in yesterday's trade was Cholamandalam, and that is after the company dismissed allegations by Cobra Post on irregular cash levels and suspected related party transactions and other issues that were flagged. Now listen in to what the management had to say on the analyst call that was held.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality, and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered, by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations by FY22 we started because the regulation also required and we started including them. So that is they're playing on this regulatory a requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
The management of Cholamandalam there on the earnings, on the analyst call after the allegations that were surfaced yesterday. By the way, LG Electronics has now slumped to the lows of the day now, with the initiation coming in from Investec with a reduced recommendation, actually from Avendus Spark, I beg your pardon. Avendus Spark has warned of a market share loss for the company, 1.5% lower on LG Electronics. But today being the Sensex monthly expiry, it's a good time to get in what the FNO trends are looking like. Mangalam has hopped across to the FNO desk, but Mangalam, it's been very range bound. Does the FNO data indicate a similar trend towards closing as well?
Well, that's what it seems like right now, but it is positive and consolidatory. That's the kind of stuff that we are getting in from the FNO space. Why do I say that? Because, the first couple of hours of trade, they've gone to the bulls. The market's been doing fairly well. The Nifty is up 40 points. From the lows, it's seen a recovery. The Nifty Bank is doing well. The advance decline firmly in favor of advances. Mid-caps doing well too. And the Nifty Bank, as we speak, is holding up, comfortably holding up above that 20-day moving average. The question is whether it closes above that or not, because it's been a bit of a, resistance sort of move for the Nifty Bank to stay above that 20-day moving average. Financials are doing well, so the RBI OMO helping not only the banking names but financial names in particular. Manappuram Finance further aided by better gold prices, IIFL Finance doing well, PNB Housing, and we have M&M Finance, all of them fairly well bid in trade. The other important imponderable to track right now would be how the IT index pans out, because remember, it's got a fair weight on the index. There was that news that came in the morning overnight about the H1B regulations. From lower levels, the IT index saw a bit of a recovery, but now is going lower once again. So where does that go would determine the course of action for the frontline index, for the Nifty itself, and whether it goes by and crosses that earlier high of 26,325 or not. Up until that happens, the street is bracing for a range. What is the range? 26,200 call writers, fairly active, premium of almost 115 rupees, telling you around 26,300 or earlier all-time highs. There would be some supply coming in. But the resistance has, there would be some resistance coming in, but the support has moved higher. So we have 26,200 put, which is also fairly well bid right now, around 70 rupees in premium, telling you that the support has moved higher from 26,000 to 26,130 right now. So that would be an important level to mark out for. A lot of stocks on our radar. We have Bharat Dynamics, which is seeing a lot of short covering, and we also have Hind Zinc, which is seeing a lot of long positions added, understandably, on account of the big move that we saw on silver.
Indeed, a lot of these commodity plays, right? Hindustan Copper, Hindustan Zinc, all of them doing very well. They continue to do so. Hindustan Zinc has now gained in 10 out of the last 12 trading sessions, and Hindustan Copper too, trading at the levels last seen in 2010. So it's the kind of moves that you're seeing in a lot of these metal names. Jay Thakkar from ICICI Securities joins in for a quick chart check. Jay, good morning. Thank you for joining in. Well, you're seeing at least some bit of consolidation now on the index. So what's your call here? Do we continue to move higher, slowly but steadily? And your stock recommendations as well for the morning.
Hi, good morning to you, Urmas. And see, we have seen a good breakout coming back in Nifty above the levels of 26,000. I mean, for this entire December series, almost I would say that 26,000 strike has been quite active. Okay, among relatively other strikes, because below these levels we have seen Nifty slipping into the consolidation of 26,000 to 25,700, which has acted as a very critical support, 25,700. And about 26, on most of the occasions we have seen the index bouncing back or inching towards 26,300 a couple of times we saw Nifty creating that lifetime highs also. Now, the kind of put additions which we have seen now at 26,000 strike, about more than 1.5 lakh contracts, and rather we have seen more addition today in 26,200 strike as well. Clearly indicates that Nifty is heading towards 26,400 to 500 zone in the near term. I think the overall trend should be positive. Of course, Nifty IT is looking witnessing some selling pressure now after a good rally coming in last month as well as this series, both series. So Nifty Bank has been a relatively underperformer, or maybe it's consolidating within this band of 59 to 60,000. IT moved up, bank went sideways. Now maybe IT is correcting a bit, and a bank would lead from here on and maybe inch towards 60,000 plus levels. So is what I'm expecting, and hence private sector banks should be back. FI net shorts have reduced from 1.66 lakh contracts to 1.34 lakh contracts since past 3 days, which is also positive. So I think that overall, looking at the index net shorts of the FI, which started covering, and Nifty trading about 26,000 almost, I think that it's heading towards 26,400 to 500 levels in the near term. And we have seen stock specific short covering happening since past 3 to 4 trading sessions, maybe public sector stocks or maybe most of the beaten down names, wherein there were huge shorts. So that clearly indicates that until the monthly expiry, that is next Tuesday on 30th December, till then this short covering should continue, and probably we are seeing this pre-budget rally. Now within the stock ideas, I think Ultratech Cement from these levels looks really positive. It can reach towards the levels of 12,200, 12,500 in the near term. So there we are bullish. One can place a stop loss below the levels of 11,600 and go long on Ultratech. And secondly, Indus Tower looks positive from current levels. We have seen the telecom stocks or overall sector relatively positive in the near term, and there has been positive sentiment out there in any stock related to telecom. So Indus Tower, I think, almost is heading towards the level of 440, 440. At least in the Jan series is what we would see, likely see these levels. And on the downside, 410 is a critical support. So with that as a stop loss, one can go along on this. As a disclaimer, we would like to say that this we might have recommended to our clients, and our clients might have a position in this, but I personally do not hold any position in these stocks.
All right, Hormaz just spoke about LG Electronics. Jay, just stay with us because while LG Electronics, the brokerage believes that there could be some sort of market share loss, could the market share come to Voltas? That stock's moving higher. Voltas has moved to the high point of trade. And another Tata Group stock is Tata Power. I don't know, what's happened to this stock. It's been consolidating this entire year. The move has been just 4.5%. Typically, such kind of consolidation, if you pull out, the longer term chart as well, this month, 4.5% of the last 12 months, just in that 377 to 415 sort of range. Typically, Jay, when such a long consolidation happens, it is followed by a big move on either side. Do you sense the same for Tata Power?
I think so. See, Mangalam, first of all, good morning to you. And we have seen the power sector overall being one of the underperformer, and is one of the place wherein, or one of the sector wherein we have seen the FI outflow in calendar 25. So that's been one of the highest, biggest decline is what we have seen, or biggest consolidation is what we have seen in this year as far as relative to other sectors is concerned. And power stocks or power finance stocks, Mangalam, if we see, may it be REC, PFC, I mean, they have started seeing or witnessing short covering. Now there were shorts added there, but as far as Tata Power is concerned, we haven't seen more of the decline because of short buildup, but it is more because of long unwinding. And relatively now the the open interest or the leverage now in the future segment as far as Tata Power is concerned is relatively quite low, and the stock has been taking support around the levels of 370-60 zone, which is the lower end of this range. So yes, as you said, if at all we are seeing short covering in the power finance names, and if if Nifty bounces back from these levels, I think power stocks would perform from here on, might see some long build-up or short covering, because of which we can see Tata Power can inch towards 430, 440 levels in coming series as well. And budget round the corner, we have seen those stocks which were not participating, Mangalam, have now started to participate.
All right. Thanks a lot for that. We'll take a short break, come back, discuss market fundamentals with Shahzad Madon from TCG Asset Management.
Welcome back. Continuing our conversation on the market, Shahzad Madan from TCG Asset Management is now joining in. Shahzad, good morning. Thank you for joining in. Compliments of the season to you and your team as well. You know, I was looking at your holdings. We spoke about DV Corp the last time you were here. You also spoke about Intellect Design. You know, Equitas Small Finance Bank is another one, right? It's among your top holdings. With a lot of these major mega deals that you have seen in the financial space, now, do you believe that these small finance banks also now are next in line to become the larger banks, as the way AU Small Finance Bank has now graduated to become a large one?
Sure. So firstly, good morning, Hormaz. Thank you for having me on your show. Wonderful to be here. And season's greetings to yourself, all your team, and all your viewers. So regarding Equitas Bank, our perspective on the stock is as follows. This is a very good quality bank. A lot of the book is secured. There was an element of the unsecured part, which was obviously under stress over the last, let us say, 15-ish months. To our mind, the worst appears to be behind in the MFI space in general, and in particular also for this bank. Consequently, our view at the current valuations, which are very reasonable relative to whatever else is available in the market, as well as to its own history, that is a good story. Things should go well. And, just again to remind that the MFI portion of this book is rather small at this point in time. The bulk of it is secured in terms of the NPAs, very, very much under control. So look forward to good growth going forward. I must mention here, what you mentioned, the way we're seeing it, we're not seeing it in terms of that there could be some potential corporate action. This is the way we see it is strictly from a perspective that this bank merits on a standalone basis a place in our portfolio.
All right, on a standalone basis. I just wanted to understand a little about, your investment in DB Corp, because newspapers, one wonders whether, that's a space to be in from a growth standpoint, with the digital areas not yet as sound in terms of cash flows, despite the growth coming in.
Well, hi, Mangalam. So let me touch upon this. The newspaper industry or the newsprint industry, firstly, the newsprint industry in general is a winner-take-all industry in the sense it's in a bit like a platform space. So when you look at DB Corp, they are dominant in certain geographies and in the Hindi heartland, also in Gujarat, Punjab, in addition to whatever is there. Threw up a lot of cash, so cash flow positive, strong cash flows, cash on the balance sheet, fairly good ROE. That's one part of the business. That part of the business continues. You've seen even over the last 5 years, which includes the COVID period, a very difficult period, you've got an earnings growth, which is low single digit. You have a high dividend yield of roughly 6%, but that's not the story. The story comes now. When you look at DB Corp, what's happening is they've invested very, very heavily in the digital space. They've got wonderful digital assets. I'm not sure how much you are aware of it, but that's one part of it which is going well. That's the job. It's all expensed through the P&L. But the very interesting thing is what's happening going forward. When you look at the, let's say the media industry, one of the things is, okay, let's put it this way. Let me change it. If you need any information, what do you look for? You go to Google. You search for something. And you'd go and read a news article written by somebody else. Who gets the advertising dollars? As yet, it was the search engine. But things are changing. Even in India, at this point in time, search engines have to pay the content provider. You actually seen that happen. There is legislation in most countries, even in smaller countries like Indonesia, etc., where there is a lot of legislation on this front. That said, you're going to see even on one more front, on the AI front. Just recently, TPIIT put out a discussion paper where they're talking about that. What do AI models use? AI models use content from underlying agencies, including yourself. The agencies need to, the content provider needs to be paid the compensation. So the way we see it is as this, and that's some part of the way we invest, is that we're looking at companies available at reasonable valuations with a reasonable growth outlook and an optionality. And in our view, what's priced in is exactly what you said. that the industry is growing nowhere. That's why the stock is available at the valuations it is, which is very, very cheap. And the way we see it is that there is potential upside on account of what's happening on the entire, call it the AI space, as well as what's happening, like the search engines have to provide the content providers compensation. So our sense makes a lot of makes good value, offers good value to us.
Shehzad, one of your higher allocations in your portfolio is auto and auto components. Now, where among it does your preference lie? Is it auto or is it auto components? Because I see SJS as part of your holdings, I see Carraro as part of your holdings, ZF Commercial. So your tilt is more towards the auto ancillary space. Now, does that mean that since the outlook for the industry is good, there are some reports about the CV cycle turning as well going into next year, does that keep you bullish on a lot of these auto ancillary names for going forward as well?
Horvath, we are bullish on auto and auto ancillary. In this portfolio, specifically because every portfolio is managed to a certain mandate, we're looking for certain types of stocks, as the name suggests, the transformative growth type, which are typically some of the mid-ish cap companies where we believe have outsized growth potential. So there is the auto anks fit in. On all three of them, we do believe when you look at what they've delivered in the past, as well as what's the outlook for the future, right? For all three of them, we are, I would say, optimistic. We believe that they offer very good value. Just add, in some cases, like in ZFCV, you also have the upside of, again, regulatory tailwinds. You would be aware that there is, let's put it, for commercial vehicles, right? You are by FY 2027, you will have norms which mandate that you need to have greater amount of safety systems. Now, what that means is a higher amount of ticket size for ZFCV. In Carraro, another very good company which we've seen, the way we saw it is post IPO, which is a very recently listed IPO. Stock is corrected meaningfully. Valuations are very reasonable. Benefits significantly from the tractor upcycling, and more specifically in the tractors, it's in the heavy HP tractors where it makes transmission as well as the system. So makes a lot of sense to us. Both the stocks, SJS is of course doing very well in the in the aesthetic space, also expanding and being one of the let us say star performers over the last few years, and we expect these companies to do extremely well, and that's why they find a place in our portfolio.
All right, Shehzad, thank you so much for joining in and explaining the rationale for a whole host of companies on your portfolio, stocks and sectors to bet on. Wish you, your team, your investors and your family a very happy new year and season's greetings as well. Take a short break, come back, more on the markets on the other side. Welcome back. The market's holding up right now, though we're marginally off the highs. The Nifty is below that 26,200 mark. Be very interesting to see what are the sectors that are causing that sort of decline. Is it the Nifty Bank? Pull up the Nifty Bank right now, and pull up the IT index as well. Both of them currently it's the Nifty Bank, which has now gone closer to the 20-day moving average once again, and the IT index too has gone closer to the lows of trade so far. So those are the couple of engines which have dragged the Nifty lower. And the third wheel would perhaps be Reliance. Let's pull up the intraday chart of Reliance and see where that one goes as well. So, if Reliance too is at the low point of trade, understandably, we are seeing, the Nifty move lower as well. So the Nifty Bank has seen a bit of a knock. We've seen the IT index go back to morning lows and Reliance. So all three big weights of the frontline index currently lower. The Nifty Bank now perhaps is below the 20-day moving average as well, and the IT index too around the 38,900 mark. But we spoke with Mark Mobius earlier, the chairman, Mobius Emerging Opportunities Fund, on the AI theme, Indian software and hardware companies, the Indian market, as well as his outlook for 2026. Hear him out.
AI has been pushed and pushed and pushed by so many people that it's quite bubble-like territory. But at the same time, you must remember that AI is here to stay and is expanding. More and more people are adopting AI systems. I myself, I'm using AI almost every day. So there's no question that the AI revolution is here to stay and will continue. But some companies have been emphasizing their AI expertise, and that really may be a little bit too much. Some of these companies are not really into AI directly, and so I think we have to watch it and pick and choose those companies that are really into AI systems and developing AI. Where we would want to focus is on the software companies as well as the hardware, in other words, computer hardware companies, which I think will be growing at a very fast rate going forward. Now, of course, many of these are not listed yet, but as we go forward, this will be a good development area. Well, I think a company like Infosys is a very good company. I'm looking at companies that are doing the hardware for Apple, companies that are not yet listed but are going to be listed going forward. That would be a very interesting area to develop. As far as we're concerned, India is number one. It's the most important market in emerging markets, not only because of its size, but because of the youth of the population and because of the developments that are taking place in India that will be revolutionary, very, very important.
Welcome back. 2025 has been a landmark year for GST in India, characterized by sweeping reforms, simplified tax slabs, stronger collections and a major shake-up in how tobacco and sin goods are taxed. Timsy Jaipuria has the details on what has changed.
Well, let me take you back to Independence Day 2025. Since Prime Minister Modi took charge, he's reserved his 15th August speech for some big bang announcement. And this year was no different.
मेरे प्यारे देशवासियों, हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे।
The Finance Ministry went into hyperdrive after this, and Finance Minister Nirmala Sitharaman was able to deliver on what industry had been demanding for years: a simpler, cleaner rate structure, much ahead of schedule. She announced the changes on the 3rd September and set the 22nd of September for the biggest GST rate rationalization since the tax was launched in 2017. The old 4-slab structure of 5%, 12%, 18% and 28% was the first to go. In its place, we have a simplified 2-rate structure, a merit rate of 5% and a standard rate of 18%. We also have a special rate of 40% applicable only on sin goods. Of course, this meant a ton of goods had to be moved to new rates. So many key commodities like butter, ghee, biscuits, pasta, namkeen, etc., especially those categorized as basic and essential goods, were brought under the 5% slab. Remember, many of these were earlier taxed at either 12% or 18%. Goods like cement and paints, which were classified as standard goods, were moved to the 18% bracket. Most services remained to this rate slab. A major category here is basic 4-wheelers and 2-wheelers. These have been brought down from the 28% plus cess bracket to 18%, making them more affordable. Similarly, a bunch of consumer durables like TVs, refrigerators and washing machines have been moved down to the 18% slab from the earlier 28% slab. The council also cleaned up the list of items in the luxury, sin and demerit goods category. Now this list is limited to a few items like aerated drinks and luxury cars. So in the case of aerated beverages, the tax incidence has been kept the same but made simpler. Instead of 28% plus cess of 12%, these attract a flat 40%. Similarly, luxury cars also attract a flat 40% GST instead of the earlier 28% plus cess. Medicines were the other big impact area of this exercise. A host of drugs were brought down from 12% to either nil or were zero rated. This made these drugs cheaper. GST on essential services like health and life insurance premia has also been brought down from 18% to nil. So that's the much needed relief for these insurance customers and a long-standing demand from both the populace and industry. The government's confidence in pushing through and implementing this major reform came from two sources. One is the fact that there was a need to re-energize the consumption cycle. The other was a trend of strong GST collections, which were averaging at nearly 2 lakh rupees a month for most of the financial year. As you can see on this chart, there is a slight dip in the number announced at the beginning of December to 1.7 lakh crore rupees. This is the first collection where the full impact of GST 2.0 was felt, and the government is of the opinion that it is still indicating overall GST revenues as remaining robust. And so that's a strong sign that the simplified slabs, a rise in consumption due to cheaper goods, and improved compliance under GST 2.0 are helping sustain tax buoyancy. But there's one area that's yet to see a change in slabs, and that's the levy on cigarettes, tobacco products and pan masala. The GST Council had held off making any changes to these products as the compensation cess these brought in was still being used to pay off the loans taken to compensate states for the losses due to COVID-19 pandemic. Currently, these goods attract 28% GST plus cess. But we do have some clarity on how these will change once the loans are repaid. According to two bills introduced by the government, the Health Securities and National Security Cess Bill 2025 and Central Excise Amendment Bill 2025, the government plans to replace the quantum of compensation cess levy on cigarettes, cigars, gutka and other tobacco products and pan masala. Under GST 2.0, these products are expected to fall under the new demerit slab of 40%, and the gap in the tax incidence will be made up by the new taxes. On pan masala, for instance, tax will be 40% GST plus Health Securities and National Security cess. On cigarettes and other tobacco products, we are looking at 40% GST plus a higher rate of central excise duty. Effectively, this will retain the overall tax incidence on these products, preventing any sharp drop in government revenues while keeping prices steady. So, for the Goods and Services Tax 2025 has not been just a year of routine tweaks. It's been a year of evolution into a leaner tax with simpler slabs, stronger collections and sharper enforcement, while keeping consumer prices in check and setting the consumption cycle rolling again. In New Delhi, Timsi Jaipuria.
All right, MC, thanks a lot for that. Well, not particularly great news for the market from a bull standpoint as we moved off the highs, and the Nifty Bank too is back below that 20-day moving average, the mid-cap index, which is right above my head, in mild red right now. Whether this dip gets bought into or not is something that we will leave the team of HTR or Halftime Report to decode.
Stocks trade in the green after US equities gain on renewed tech buying. Metals, financials and industrials notched some gains, while FMCG and IT drag.
Following advice from the Ministry of Coal to list subsidiaries, Mahanadi Coalfields and Southeastern Coalfields, Coal India's board has given its in-principle approval to the listings. The news lifts the stock.
RBI claims the bond market with a liquidity bazooka of rupees 2 lakh crore of bond purchases via open market operations in 4 tranches. It also announces a $10 billion rupee swap. Experts welcome the move and see yields tapering.
Gold scores its 51st high of 2025, stamping $4,500 an ounce and clocking its largest annual gain since 1979. Silver too surges past $72 per ounce to a new high, and platinum records a new all-time high over $2,385.
And in a departure from the earlier pure lottery system, US will issue H-1B visas based on a weighted lottery method that prioritizes qualified and higher income applicants starting from February 27th and has seen limited impact with the move on Indian IT majors. Welcome to Halftime Report live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Ekta Batra and Vinny Motiwala. Hey girls, we are in the perfect Christmas colors. Actually, all of them are here on the screen as we speak. But for the markets, looks like it is in a bit of red and green. We have, of course, come off from the highs of the day. For the Nifty, it's an 11-point uptick, but we are almost off around 50 points from the day's high as well. And the mid-cap index, that too has slipped into the red. It has been quite volatile since we started the day and is now at the day's low. Did see some recovery from there and is off from the highs again. Bank Nifty absolutely flat with some positive bias, and we do have some stocks or some sectors like Nifty Realty. We do have the small cap index which are in the green, but overall the markets have come off sharply from the highs of the day. We'll have to see whether this dip gets bought into or not. For now, the texture of the market volatile and off the highs.
Well, yes, absolutely. Consolidating at this point in time, we just about have the Nifty, which is up by around 16 odd points. We have the Bank Nifty, which is just about higher by around 40 odd points. So just about biding away time, considering that we do have this entire vacation season. Even yesterday, the markets just about consolidated, and that seems to be continuing today.
Absolutely, that seems to be continuing, and seems like FIIs also continue to sell, because yesterday also FIIs were sellers. Advanced decline ratio, though, you can see that line, Ekta was also mentioning, it's nearing, maybe we'll see a crisscross through the day, but that's something that we'll have to watch out for. A lot of movers that are coming in from the broader end of the market. Individually, you have JBM Auto that's managing to hold on to strong gains of 10%. Apart from that, look at Hind Copper, 5-6% of gain there. We have the gold financiers that are trending away in today's trading session. So the star that's missing, or the glitter that's missing on the Christmas cheer or the Christmas clothing right now, gold financiers surely are doing the job. Manappuram Finance, Muthoot Finance, keep an eye out on those names as well. And seems like we've seen some bit of an up move. Obviously, Ajanta Pharma on the back of news flow is also managing to hold on to gains. But, to take us through more individual stocks which are buzzing around in trade today, let's go across to Vivek for that.
Well, thank you so much for that. When you're looking at the broad end of the markets, the advance decline ratio continues to remain quite favorable, especially when you're looking at the advances. NSE 500, quite a few stocks moving higher, and decent volumes in some of the, the better traded names. In terms of individual stocks that we're tracking, can't look past VIP Industries, almost 26% block deal happened. The Piramal family has trimmed stake as per our sources, and that particular stock higher almost 7.5% today. Vikran Engineering, a large order win coming in after a while. Almost 2,000 crore worth of orders is what the company has received today. That particular stock, one of the top gainers in the broad end of the market, so 12.5% higher. Coal India, up for the second straight session yesterday, was the top Nifty gainer. Today, higher by another percent, on the back of the fact that there could be value unlocking. That could happen on the back of the fact that you're seeing listing of 2 of its subsidiaries. JBM Auto, like you just mentioned, top gain on the NSE 500 index. Volumes very strong in this particular name. And Muthoot as well as Manappuram Finance. Manappuram Finance in particular doing very well. Remember, gold prices continue to surge to record high levels. Manappuram up over 6% today. On the other hand, quite a few laggards as well. Well, you can't look past the IT names. A lot of things regarding H-1B visa and how exactly the approval process will now go about. whole host of names under pressure. Coforge down for the second straight session. Sun Pharma, yesterday we did highlight the fact that one of its largest drugs, Ilumya, could come under a bit of a pricing cloud. On the back of that, Sun Pharma has extended its decline today, down over 1.5%. Avanti Feeds, one of the top laggards as far as the NSE 500 index is concerned. And Kajaria, remember, last couple of weeks has been extremely volatile for this particular name. Today, 2 down on decent volumes.
Okay, all right, Vivek. Thanks very much for that. Well, Ajanta Pharma is the first management on the show. And remember that they are in focus. The stock is up around 4 to 5% as the company has signed an in-licensing agreement with Biocon to market semaglutide, which is basically the generic version of Ozempic as well as Wegovy, which are the blockbuster weight loss drugs by Novo Nordisk. This is in 26 countries, which is across Africa, West and Central Asia. To talk more about it, we have Yogesh Agarwal. He's a man that you don't see very often on television, the managing director of Ajanta Pharma, joining in. Mr. Agarwal, thank you very much for taking the time out. Well, definitely good news that you've signed up with Biocon with regards to semaglutide and to market it. But how much are you expecting to potentially make from this particular tie-up? The reason I ask is that, yes, there is, it is going off patent in March. You do have a very strong holding in the countries that you do have a tie-up for. But semaglutide as a whole is possibly taking a back seat. One, you have Mounjaro generic, which is, Mounjaro, which is possibly seen more efficacy. Plus, we have the oral version of Wegovy as well as Ozempic, which is now going to possibly hit the markets as well. So in that context, what are you anticipating in terms of competition?
Okay. No, thank you, Ekta. Thank you for having me. We are truly very excited about this partnership with the Biocon. We all know that GLP-1s, which is semaglutide, which is Ozempic and Mounjaro, they are currently the blockbuster drugs. We have seen the demand like no other product in the history for these two compounds, which are for diabetes and weight management. Already the semaglutide is almost 26 billion globally. Mounjaro, which is almost 30 billion. So $55 billion market, growing at mid-teens to high teens. So in 5 years, possibly, this market we are looking at doubling. So it could be $100 billion market globally. So it's a huge opportunity, and we are truly excited about this partnership with Biocon for a very large number of countries where we have a ground presence. Just to share with you and your viewers, we have 2,000 plus medical representatives outside of India, which are spread across Africa, Central Asia, Middle East, and Southeast Asia. So we have a very wide reach. So that is what Ajanta brings to the table. And we plan to start filing the dossiers for this product in the quarter starting April. Hopefully, we should start getting some approvals toward the end of the year for the FY27. But I think the bigger uptake on this product, which we'll see, is in the FY 2028. So still, the semaglutide is one of the most preferred GLP-1s in the market. The oral tablet, which you have mentioned, that is still about 8 to 10% of the semaglutide. So still the preference is towards the injectable dosage form. So we are really very, very excited about this partnership.
All right. Just give us a sense in terms of the financials for this particular tie-up, as well as whether it's exclusive to you all. Or can you tie up with other companies? Can Biocon tie up with any other company?
So for out of the 26 countries which we have tied up, for 23 countries, we have an exclusive tie-up with them. And for 3 countries, it is semi-exclusive, so which means they can either come themselves or give it to one more people. So it is not that for those 3 countries also they can license, they'll be able to license to many players. So to that extent, we feel that it should remain exclusive to Ajanta. It's a very complex product. It requires a dedicated facility. It requires a device which has to be approved by the FDA and regulatory bodies. So we feel that going forward, there are only less than a dozen companies globally which will have this product. So in the emerging markets, we feel where we are present, it should remain a limited competition kind of product. And since we have such a large ground presence in this market, we are looking forward to getting a good market share for this product in these countries. As far as the commercials, they are confidential, so I'm not able to share much light on the commercials of the tie-up.
So, Mr. Agrawal, actually, that was going to be my next question. Is there a royalty in place? Will there be an upfront payment that you'll have with Biocon? I know you cannot give us details, more details there, but if you can give us an idea whether you will be making some payments to Biocon, considering the big market share that you're talking about here.
Yeah, there is a composition. Of course, any type of like this, it has milestone payments on signing of the agreement, on the approvals of the agreement. So there'll be some milestone payments. And then after that, there are certain other commercials which we have structured, which I'm not able to share with you.
Okay. Mr. Agarwal, you spoke about the global, market size of semaglutide and how you expect it to grow to 100 billion. But for the markets where the 26 countries that is there right now in terms of this tie-up, what is the market size over there potentially? And also, how are the pricing in this market? Is it any different? And, you said not much competition, but innovators, what is the presence there?
So innovators are present in these markets, and we see they are growing very, very fast. They're exploding, I think, in all these markets where we are present. So since there are not a very deep IQR data which are available, our estimation is it should be $1 billion plus market which is there for this GLP-1s in this market. So that is where we are looking to capture this market.
Okay, so Mr. Agarwal, you're not going to be making semaglutide on your own. You're just going to be a marketing partner.
That is right. That is right.
Okay.
So Biocon is an excellent technical expert company. They have this product.
No, what I mean is that
are
you going to eventually produce the molecule, say, for any of the markets on your own? For example, have you filed for Canada? Have you filed for India? Or will you just be a marketing partner to, say, other companies for their molecule?
Correct. That's right. That's right. We will be the marketing partners for the company, for Biocon, for the emerging markets.
All right. What is your plan for India and the semaglutide launch in March?
So India, the product is going to go off patent in March 26, which is just 3 months away. And we plan to be one of the first wave launches in the country.
Okay. And what about Canada? Because that goes off patent on the 4th of Jan. Are you participating in the market in any way, maybe even as the second filer?
No, Canada, we don't have a tie for Canada or any other market. So this is mostly for the emerging markets where we have a ground presence, and it will be a branded generic business.
Okay. And are you looking at generic versions of Mounjaro, which you would possibly be filing for on your own?
That is still a bit far away. I think the product, the patent for that product is going off patent around 2033. So we are still looking 8 years out. Our plan is to be day one in the market and launch on the day one when the product goes off patent. Whether we will tie up with some other company or whether we will do it with ourselves, I think that is yet to be seen. But we definitely will be there in the Mounjaro also on the day one.
Mr. Agrawal, from an investor perspective, if somebody is reading that news, they would like to understand what is the impact on PNL. You did say that it will contribute significantly in next 3 to 5 years. When do you start expecting the revenues to hit into your PNL? And what kind of margins will you see versus the existing portfolio that you have?
As I said, I think end 27, we should be starting getting some approvals. And since the tie-up is for 26 countries, the approvals will start trickling in 27, 28. So it's not one country where we have a tie-up and we'll have one big market. So as we get the approval, we'll start launching. And for the branded generic business, it takes a little time for the ramp up. So we should start seeing the benefits in the 27, 28, then further going out into 28, 29, 29, 30. I think the 27, 28 onwards, next 3 years is where we should start seeing the benefits of this product in the PNL as well.
Okay, next 3 years is when you start seeing the benefit. And, there are some commercials or some terms that are there, but anything in profit sharing that you will start with Biocon, or is it just going to be milestone payments?
I think that is too granular of a detail. I wish I could share with you. I think let's leave it at that. Yeah.
Okay. All right, Mr. Agarwal. Are you sticking to your guidance then for FY26, or are you possibly going to exceed it based on tie-ups that you're seeing?
No, 25, 26, already half year is gone. We have, I think, delivered good set of numbers. We have posted the mid-teens kind of growth in top line and bottom line, which is the guidance we had given at the beginning of the year also, that will deliver the mid-teens kind of result for the whole year as well. So I think we are on course to deliver that kind of numbers for the current year.
All right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in. Well, definitely the market continues to just focus on the semaglutide opportunity and all what is taking place within that in the next couple of months. That will be the big talking point. Thanks very much for joining in and speaking with CNBC TV18. Well, for the markets, it's absolutely flat, but we have Ajanta, for example, which is holding up with a gain of around 3% and other stocks which are, buzzing around. So we'll do one thing. We'll take a short break. Up next, we will connect with Sandeep Gogia of Equirus Capital as the US scraps lottery system for H-1B visas. More on that once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. Now let's put the spotlight on IT stocks, right? And this is coming after US has announced a major change to the H-1B visa program, replacing the long-standing random lottery system with a weighted selection process. Rima is joining us now to first give us details on this front. Rima?
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
Thank you so much, Reema, for joining us with all those details. So let's discuss more on this. We are now joined by Sandeep Gogia, who's the MD and Sector Lead, Tech and Digital at Equirus Capital, to understand the larger impact on the sector and, if any, individual companies as well. Sandeep, good afternoon. Thank you so much for joining in. Well, we heard the commentary coming in from IT companies as well. Minimal is a word used by a lot of them, 1%, 2%, not more than that on H-1B visas. What's your take on this change that has come by? And do you think it could impact the industry, if not these big companies, but the mid and small size IT companies a lot?
Hi, good afternoon. So I don't think it'll have a kind of a very large kind of impact, and I'll stick to that minimal that you also heard earlier. So look, what will happen is that a lot of these companies will start hiring locally, right, rather than kind of using this route to send people outside. And second, I see a lot of work getting offshored, right? So I think with a mix of these two, I also believe that the impact won't be kind of a meaningful or a material impact on the margins for the whole industry.
All right. Well, Sandeep, in terms of the statistics, TCS only had around 500 H-1B travels in the year gone by. Infosys also said it was a minority. Wipro said over 80% of the US workforce is localized. How much of that trend do you expect would possibly now increase? Does 80% go to 100%? Does 500 go to, say, 100? What are you expecting now in possibly FY27, FY28?
So look, this will reduce further. There is no doubt. And as I look, if you look at both the 2 points that I made, A is more work will get offshore, so that reduces the requirement to actually have more H-1B visas. And second is if you hire locally, right, in US, green card holders, citizens, so that further kind of reduces the need, right? So I think both of these put together, overall the industry will kind of start reducing their dependence on this visa.
Okay. Sandeep, do you think specifically when you look at Emphasis, they have said that very minimal, right? And even Persistent has said that they were never dependent on H-1B visas. Do you think that mid-tier IT companies will have an upper hand over large-cap IT companies? Overall impact is minimal, but comparing the large and the mid-cap size then?
So yeah, I don't think it'll have a meaningful impact on either of those two set of organizations, right? Because the mid cap, let's say, is now still about billions of dollars of revenue, right? They're meaningfully large organizations now, and given their scale, I think they have the flexibility to kind of manage this successfully with little or no impact.
So Sandeep, just an industry-wide conversation on that then. Do you think Indian IT companies will invest more in upskilling talent because now it is basis skills, it is not a random system anymore, and that is where most of their expenditure would go?
Absolutely, and that's already happening, right? And then AI in any case is a driver, one of the drivers for that, wherein both the mid-tier as well as the top-tier organizations are kind of spending a meaningful amount in terms of upskilling, training their employees to get them up to speed with the new age, the requirement of using and embedding AI in the work that they offer, because the client is expecting some productivity gains and then passing on some of those gains to them, right? So as a result, there is active kind of spend, right, and engagement happening on that side.
How are you placed then, Sandeep, for IT stocks going into FY27, where we would possibly get more structural leads in terms of where the winds are blowing? when it comes to the Trump administration as well as AI?
So I think there are green shoots that are emerging. If you look at, let's say, the CY26 or the FY27, right, we see that the banks, which is the BFSI sector, they've already started to open up their wallets in terms of their budgets, and with clarity emerging on the tariff side, gradually, right, even the manufacturing sector is expected to kind of follow suit. So the growth will stay muted, but the expectation is that it will be better than the last couple of years, right? Both of which have been pretty muted, right?
Okay, better than the last couple of years. So maybe a mid-single-digit growth, I believe, is what one could see coming in, right?
Yes, mid to high single-digit growth.
And also, what is your pecking order in the IT pack, large cap, mid cap? How are you looking at the IT?
So look, the mid cap is obviously they're more nimble-footed and they're more specialized in terms of their offerings. So yeah, I would therefore kind of pick a mid cap over a large cap today.
Okay. Sandeep, last question before we let you go, because the next big talking point has been AI. But the other grouse, I would say, that the industry or the market generally has, that there are not enough AI investments made by IT companies right now versus what we are seeing abroad, be it the US or be it rest of Asia, versus what's happening in India. Do you think this is something which the market will be watching out for, the kind of investments that are being made by these companies into AI, and that could be the next trigger to watch out for in the industry as well?
Yes, I kind of agree, and I see why this has not happened so far is because the adoption of AI on the enterprise side has been limited as compared to the adoption on the retail side of things, right? And there are data privacy concerns, there are hallucination concerns, there are cybersecurity risks involved, right? So as the enterprise clients start adopting that kind of to a higher degree, I see kind of in parallel that will happen right on the IT kind of side of things as well. So both of these have to go hand in hand, right? And then second is the capex that is happening on the AI infrastructure is large, and then that will follow the services cycle, right? The investments on the services side of things, right? So with these two, I believe there is a strong upside that we will see over the next 2 to 3 years, right? With the adoption of AI, increasing adoption of AI by enterprise clients.
Okay, all right, Sandeep, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us that perspective on the IT space. The stocks are not that perturbed despite the changes which have taken place in terms of the H-1B visa, simply because they have been reducing the amount that they utilize the H-1B visa for in the US. We'll take a short break, but up next, Sudeep Shah of SBI Securities will join in. He has some trading strategies on the other side. Stay tuned. Welcome back. You're still tuned into Halftime Report on CNBC TV18. Just wanted to point out that the two stocks which are under pressure in today's trading session are Sun Pharma as well as Dr. Reddy's. So Dr. Reddy's is down around 1.3%. Sun Pharma has also lost around 1.4%. Remember that the big development which is going to take place is semaglutide is going to go off patent on the 4th of January in Canada. So the street was awaiting possibly any kind of news in terms of an approval, considering that we are going into Christmas break and then, it's closer towards the 4th of January. I think the street is a bit cautious in terms of what could happen. Remember, Dr. Reddy's, it was already known in the month of October that they have received a regulatory update from the Canadian authorities, which was negative in terms of an approval for their version of semaglutide. So the street was already expecting a delay for Dr. Reddy's, but maybe now there is a fresh renewed amount of a sentiment negative as the date for semaglutide going off patent is now coming closer. But now let's go across to Mangalam. He joins in. He's going to give us an update in terms of what's taking place on the F&O desk. Mangalam, over to you.
Well, the market is off highs, and at high levels we are seeing some supply coming in, even as there is support at the lower levels. That's the kind of texture that we are in right now for the market. So the Nifty Bank, the mid-cap index, all of them, marginally off highs. And the mid-cap index, when I last checked, was also in the red. And all of that is also reflected in the kind of advanced decline ratio move that we've seen. So the advanced decline ratio, when we started the trade, it was almost 1,800 stocks in the green for about 1,000 in the red. Now, as we speak, they've come fairly close, around 1,500 in the green for about 1,300 in the red. The Nifty Bank, the 20-day moving average is an important level for the Nifty Bank. Cross past that, staying and closing above that will be extremely crucial. Right now, it's hovering just close to the 20-day moving average. Outperforming indices in this market, we do have the metals pack doing well. Overnight, we saw a big surge across a lot of the metals. Autos are doing well, and the financials. The RBI's open market operations, liquidity easing measures doing well for the financials more than the banks itself. We're seeing the 26,200 call and the 26,200 put, both of them extremely active in trade. So the 26,200 call has seen some writing, as has the 26,200 put. Both of them tell you that the market's in this 26,100 to 26,400 sort of range right now, rather 26,100 to 26,300 sort of range right now.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on that and the levels over there as well. But let's also bring on board now Sudeep Shah, who's the head of technicals and derivative research, SBI Securities. Sudeep, good afternoon. Thank you so much, as always, for joining in. While today is a bit of a dull day and not much of an up move that we're seeing, 26,000 around the 26,200 level actually is what the Nifty is managing to hold on to, right? What should we keep an eye out on? And if we manage to close at 26,200, would we see a better run-up coming in for the markets in the near term?
What we feel is that yesterday and today, both sessions, we are seeing some kind of a lackluster, a reduced interest in trading. If you see, the volumes are low. But what is more important and heartening is to see that 26,100, 26,130 zone is held. And any dip towards that zone is being bought into. So we feel 26,100 now remains an important support on the downside until the time this zone holds. And upside up to 26,400, 26,500 cannot be ruled out in the coming few sessions, maybe in the early part of the next week. And even Bank Nifty too. So 58,800, 58,900 zone on the Bank Nifty also will act as a strong support. And we see levels of 60,000, closer to 60,000 being achieved in the next coming few trading sessions.
Okay, all right. Well, Sudeep, wanted your thoughts on stocks such as Coal India, whether you're looking at that?
Yeah, see, the Coal India after several weeks have shown some kind of a momentum uptick. Now, if you see, the stock has been in a range a bit right from April 2025 until now. And that this has been a range breakout, biggest consolidation breakout, because in the past for more than 6 or 7 months, Coal India has never been in such kind of a trading range. So we see this as a good opportunity on the upside. Now, key levels to watch out on the downside here would be around 388, 390 levels. So till the time 388, 390 holds, this move on the upside could go up to around 430, 435 levels in the coming few months.
Okay, 430, 435 levels in the coming few months is what we could keep an eye out on for Coal India. But Sudeep, what are your top bets just before Christmas? What should we keep an eye out on?
Yeah, so there are a couple of them. One is from the mid cap space and one is from the large cap space. Now, large cap one is M&M, Mahindra and Mahindra. Immediately post Christmas, there's a new car launch that is being planned in the first week of Jan, and here we feel that steadily the stock is in a decent uptrend, has taken support around 35.50, 35.60 in the last few sessions, and now we feel that this is a very good entry point to capitalize on the long-term uptrend. And we see levels of 3800, 38.50 in the coming few weeks. On the downside, the support zone will be 35.50, so that can act as a good stop loss. The second one is from the cash segment, which is Pondy Oxides. Now here the stock has given a decent breakout after a consolidation of since last week of November. So what we feel is in an overall uptrend, there was a small consolidation, small corrective move, which is now been reversed, and we see levels of 1500, 1550 here in the coming few months. On the downside, 1360 will act as a strong support, which also can be a stop loss.
Okay, all right, Sudeep, we're going to let you go on that note. Thanks very much for joining in and taking us through those technical calls that you have for today. We need to take a short break, but do watch out for stocks such as Hindustan Zinc, which has now gained 41% this year and is up another 3%, mirroring what we are seeing in terms of silver prices. We'll take a short break. Manisha Gupta will join in. She has with her Surendra Mehta of India Bullion and Jewelers. Stay tuned.
Welcome back. Joining us now is Surendra Mehta. He's Secretary, India Bullion and Jewelers Association. Mr. Mehta, hi. Thank you so much for joining in. And it's an insane rally. And we are part of a couple of group chats where you keep telling us, I told you so, because yes, you did talk about these numbers way back. From where we are standing right now, what is your sense on what the markets can look forward to in the near term, next couple of quarters, let's say?
First, let me speak about silver, because silver, I was always bullish. And naturally, on the group chats, I have always stated that silver can touch $75.
Yes.
We'll have to understand one thing, that I was constantly following the lease rates on silver. The lease rate in few cases have been as high as 23 to 24% as of today also. So where is the weakness in silver? There is no weakness. Apart from this, there have been a lot of paper silver which was being sold and which is now being getting converted into a physical silver. So all this is making a huge rally for silver. If you look at 21st November, the silver was $49. Today it is almost $73. So this kind of jump, I think, were inevitable, because all the banks, all the big fund house have started adjusting their position and are moving out of the paper silver.
They clearly are. What is life looking like beyond 75?
I think in 2026 we may see something between $95 to $100. I'm slightly pessimistic on that. We may see more, a much bigger number than this. But as of now, I can see at least $95 to $100.
Do you want to tell our viewers that there could be some correction as well, and they will get an opportunity to buy?
Absolutely, the correction are inevitable. Silver, since it has rallied more than 50% in just 1 month, I think the corrections are inevitable, and we must all be prepared for the correction in silver by at least 18 to 20%, and correction in gold by at least 9 to 10%. As far as gold is concerned also, I think we might see something like 4,900 to 5,100 by 2026. But as I said, the corrections are inevitable.
Oh, absolutely. Mr. Mehta, the other thing really is about with the kind of volatile and high moves that we have seen, and that's another discussion that continues to go in, and this is more industry specific really. We have seen jewelry stocks do quite well. We've seen the gold metal companies do quite well as well. But when it comes to the prices going higher, the last year books must have closed around, what, 70, 80,000 rupees. This time the book closing would be at around 1,35,000 and 40,000. What does it do to the tax, the working capital, and the way many of these jewelers do source their bullion? How are you looking at those concerns building up?
See, the real problem is with the jewelry manufacturer. Let me tell you, the bullion trade is not at all on credit terms. The entire credit term in our industry is by the jewelry manufacturer to the retailer. Now, there has been a transformation that sale of 22 karat jewelry has dropped, while the jewelry manufacturers have always supplied 22 karat jewelry to retail jewelers.
Right.
So that is one problem, and because of this, since the sale has dropped by almost 35 to 40%, they are not able to get payment. The other problem is the retail counter, there is a demand of 9 karat jewelry. So these jewelry manufacturers are forced to make 9 karat jewelry, and they have to supply in spite of not getting payment on the due dates of those 22 karat jewelry. Another problem is exchange of jewelry. The retailers are coming and exchanging their old jewelry to a new jewelry. So there is no new cash flow generation which can be paid to the jewelry manufacturer. So all this is creating a several liquidity crunch to the jewelry manufacturers. And I think the industry is entering into a bad phase, and it might become the worst in next 3 to 4 months.
Mr. Mehta, as we move forward from here, I mean, yes, this is something that we've been hearing from everybody, that almost 95% of jewelry that is being sold in India is hallmarked. Some quantities, smaller pieces, some geographies, maybe not. But the bullion hallmarking, you've been talking about that for some time now. And with silver, if I'm going to buy 1 kg silver at 2,30,000 rupees without a hallmarking, without a purity certificate, that also seems to be becoming a concern.
No, Manisha, we have already approached BIS, and we are looking for India Good Delivery BIS hallmark silver. And I let me tell you, that would be a reality very soon, like the India Good Delivery gold. And also we have requested BIS to mandatorily go for silver hallmarking, like the gold hallmarking, or at least if there is not enough infrastructure for silver hallmarking, I think the government needs to mandate that on every invoice there has to be a caratage, silver caratage mentioned, along with, if possible, any kind of self-HUID or some other number, so which can identify who is the purchaser, who is the jewelry manufacturer.
Okay, all right, Manisha, thanks very much for bringing in that conversation. So 90 to 100 is what we can expect in terms of silver prices soon enough, or maybe going into next year. So let's see whether that takes place. It's been a stellar rally for silver prices, as we all know. But important news which is coming in for Castrol India, as you can see, Castrol India, there is going to be a tender offer which is going to take place after the Castrol deal is complete. Now, the deal is that BP is going to be selling 65% stake, which is basically majority stake in Castrol, to a company, Stone Peak, which is a US-based company. So the entire deal is worth around $10 billion. And what is going to take place in India, where the majority holding is in fact held by Castrol Global, around 51% stake, is that there will be a tender offer which will take place. That's the reason you're seeing the stock spike up. In fact, the stock was just about higher by around 2% till the news of the tender offer came through. And now you can see that big spike which has come through for Castrol India. Remember that this is basically after the entire deal takes place. There will be a tender offer which will take place for the Indian arm, Castrol India. As you can see, that stock is at around 195, 194 odd rupees, reacting to this piece of news. The deal itself on a global basis is worth around $10 billion. And they're possibly going to receive around $6 billion in terms of proceeds. That's what reports have indicated. And remember that this would be one of the... Yeah.
6 billion. It's 6
so
billion.
this would be one of the largest divestments which is taking place in Castrol's history, reflecting BP's pivot to streamline its business and basically cut debt. But the big news coming in for the India entity is that there will be a tender offer after the global deal culminates and is completed. More details which are flashing on your screen at this point in time. Following a 2-year lock-in, I think there is an optionality to sell another 35% stake. But as of now, this is the big deal which is taking place. And as you can see, the stock is reacting handsomely to that news about the tender offer. The stock, as you can see, is up around 6% at this point.
Absolutely important, right? Because all these minority interests in countries like India, Castrol India is there. There is Vietnam, Saudi Arabia, Thailand as well. So because of that, this transaction includes these minority interest companies, and that is why that open offer, the tender offer that comes in as well for Castrol India, like Ekta was mentioning as well. But on that note, we're actually going to sip into a very short break. After the break, we'll get you more stock-specific action.
Welcome back. Well, for the market stable, but we do have a lot of stocks which are buzzing around. And as you can see, Manappuram is at a fresh high. Remember that there is that OMO which was announced by the RBI, which would give a liquidity boost. So it is aiding financials, but separately also we are seeing buying in a lot of these NBFCs coming through. But just keep your eye out on Castrol India as well as the news flows in. So that should be something that we will be tracking quite closely. But Cholamandalam Investment is the other stock in focus after the management dismissed the allegations by Cobra Post on irregular cash levels, suspect related party transactions and other issues flagged by Cobra Post. Listen in to what the management had to say.
The entire allegations are malicious and baseless, and they basically seem to be stated with some other motives in mind, right? Kind of clearly ulterior. From a financial health perspective, the company really wishes to reassure all of you that the performance of the company, its asset quality and its liquidity position continue to be very robust, as disclosed in the audited financial statements of the company for the half year ended September 2025. This collection process and amount has been subject to and continues to always be subject to internal and external scrutiny. And this is also covered by our robust internal systems and subject to statutory audit. All KYC and income tax compliance for such collection is done in compliance with applicable legal requirements.
This 10,000 crore number seems to be over a stretch of years. During the earlier part of this period, certain companies need not be classified as related party as per the regulations. FY22 we started because the regulation also required, and we started including them. So that is they are playing on this regulatory requirement to say that it is not disclosed. This is the fact, and every point in time, as per the prevailing regulation, we have disclosed all the transactions with any institution we are dealing with.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is again below 26,200 levels. Just 12% gain is what the Nifty is holding on to. So really, off the day's highest point is what we're seeing for the Nifty 50. Nifty Bank is also very muted. Lackluster day today is at least what we're seeing so far for the benchmark indices, as well as Nifty Bank. Mid-cap not doing anything great as well. So it's a bit of a muted day today. But with that, we'll wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, a business lunch to take you through all the action on the market front going forward.
Stocks trade in a narrow range after US equities gain on renewed buying in tech stocks. Metals, financials and industrials notched some gains, while FMCG and IT are the big drags.
Following advice from the Ministry of Coal to list subsidiaries Mahanadi Coalfields and Southeastern Coalfields, Coal India's board has given its in-principle approval to the listings. The news lifts the stock.
RBI calms the bond market with a liquidity bazooka of 2 lakh crore rupees of bond purchases via open market operations in 4 tranches. It also announces a $10 billion rupee swap. Experts welcome the move and see the yields tempering.
Gold scores its 51st high of 2025, stamping $4,500 an ounce and clocking its largest annual gain since 1979. Silver too surges past $72 per ounce to a new high, and platinum records a new all-time high over $2,385.
And in a departure from the earlier pure lottery system, the US will issue H-1B visas based on a weighted lottery method that prioritizes qualified and higher income applicants starting the 27th of February next year. Analysts, though, see limited impact of this move on Indian IT stocks.
Hello and welcome to Business Lunch, live from the CNBC TV18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always, Hormaz Patakia. Hormaz, I mean, the markets today coming off their highs, right? Not doing too much. The mid-cap now going between the red and the green. Not looking like too much today for the markets.
It almost feels like a repeat telecast from yesterday's episode, right? Because it's almost the same range-bound trade that you're seeing on the index, and unsurprisingly so. You're going into a holiday, you're heading into a weekend now. The year is drawing to a close. The new year is on the cusp. So participation is lower, volumes are lower. Of course, there is a lot of stock-specific activity, but the index remains in a very narrow range, and that 26,200 still continues to remain a bit of a barrier for the index. The only positive, if there is that, the fact that we crossed yesterday's intraday high in today's session, only just, but could not sustain above it, just like yesterday's session. So that is the only bit that we have made a higher high on the chart. Other than that, of course, there are no other major takeaways. The banking index has now come off the highs of the day. The IT index continues to drag. It's yo-yoing between gains and losses. There is recovery, but those recoveries are getting sold into as well. So as of now, it's a range-bound session. It's the Sensex monthly expiry as well. So there may not be a lot to play for in the last couple of hours, but you may see some moves on either side if there are any.
Absolutely. So range-bound session today. And if you take a look at that advance decline ratio as well, right, it's still in favor of the advances, but those lines are very close to merging now. And of course, if you take a look at all those sectors, take a look at those lines, they're almost merging. But if we look at the sectors, a rally in metal prices has helped that metal index continue to lead from the front. Hindustan Zinc is up 3% and has now gained in 10 out of the last 12 trading sessions. A rally in copper prices has helped Hindustan Copper soar over 6%. Other metal names also doing well. Nalco, Vedanta, Hindalco, all of them in the green. Obviously, gold prices hitting new highs has also helped stocks like Muthoot Finance and Shriram Finance rally. Muthoot Finance is clocking its best year yet and is one of the top Nifty gainers. On the flip side, though, those IT names continue to be a drag, all of them in the red. Obviously, and overall in the H-1B visa process is weighing on these stocks. Coforge, Emphasis, Infosys, all of them in the red, as you can see on your screen. The pharma index also losing steam. Sun Pharma, Gland Pharma, and Glenmark Pharma, all of them over 1% in trade in the red.
As you mentioned, right, IT, that continues to remain that big talking point. Of course, the stocks have not seen a very major reaction, but they are sulking nonetheless. And that is after the Department of Homeland Security in the US last night announced major changes to the H-1B program, replacing the long-standing random lottery system with a weighted selection process. Rima is here to break that down for us and the potential impact on these stocks.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
All right, Rima, many thanks for those details. Earlier, we spoke to Kumar Rakesh, India analyst, auto and IT at BNP Paribas, on the impact of H-1B visa on Indian IT sector. Take a look.
This change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. Investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which does indicate that sector should continue to outperform at least in the near term. On the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue.
Now, we also had a conversation with Sandeep Gogia, the MD and sector lead of Tech and Digital at Equirus Capital, for more on this subject.
I don't think it will have a kind of a very large kind of impact, and I'll stick to that minimal that you also heard earlier. So look, what will happen is that a lot of these companies will start hiring locally, right, rather than kind of using this route to send people outside. And second, I see a lot of work getting offshored, right? So I think with a mix of these two, I also believe that the impact won't be kind of a meaningful or a material impact on the margins for the whole industry. I don't think it'll have a meaningful impact on either of those two set of organizations, right? Because the mid cap, let's say, is now still about billions of dollars of revenue, right? They're meaningfully large organizations now, and given their scale, I think they have the flexibility to kind of manage this successfully with little or no impact.
The Reserve Bank of India has unveiled a fresh set of liquidity measures for the banking system. The central bank has announced large-scale government bond purchases and a foreign exchange swap. The RBI will conduct open market operation purchases of government securities worth 2 lakh crore rupees in 4 tranches of 50,000 crore rupees each. In addition, the RBI will carry out a dollar-rupee buy-sell swap auction of $10 billion within a 3-year tenor. These measures, which come after liquidity in the banking system slipped into deficit following sizable outflows linked to advanced tax and GST payments, are expected to inject nearly 3 lakh crore rupees into the system. Earlier, we spoke to Lakshmi Iyer of Bajaj Alternate Investment Management and Dhaval Dalal of Edelweiss AMC for more on this. Take a look.
This is a good and a very positive move, much intended to bring some cooling off on the yields. You could see yields receding towards the 6.5% region, but incrementally, will banks continue to support? See, they've been tendering in OMOs. Have they been really buying in auctions? I think all of that will set the narrative for it to decisively breach the 6.5 level on the lower side and stay there. So I think there are going to be multiple, and our view is that this may not be the last of the measures. So I think bond yields are going to be in check, maybe closer to 645, 6.5 lower end, higher end of 665. I think the lid for the bond yields have been done for now.
Despite RBI pumping so much of liquidity in the last month, I think the bond yields continue to trend higher, presumably because the Reserve Bank of India did not announce any OMO for the January. And I think also the higher than expected SDL auction, I think that was these are the two triggers which pushed the bond yields higher in the first in Monday. And Tuesday as well. So I think in response to that, the Reserve Bank of India has come out with a very big bazooka OMO bond purchase and a $10 billion swap. I believe that this should calm down some of the nerves in the bond market who has been asking for more and more.
Now, Coal India is the other one. The stock continues to do well. It is the 6th straight day of gains for the stock. It's turned positive on a year-to-date basis and although slightly off the highs of the day, though. But Vivek is here to tell us what is causing this outperformance in the recent past. Vivek.
Well, you know what's essentially causing the outperformance. Remember, it was the top Nifty gainer yesterday. Is the fact that the street now expects significant value unlocking to emerge as the company goes ahead and splits all of its verticals into separate listed entities. So, what exactly transpired last evening? The company has received the board approval for listing both Mahanadi Coalfields as well as Southeastern Coalfields. Together, both of them account for a little over 52% of Coal India's production. Remember, they have already initiated the listing process for two other arms, which is Bharat Coking Coal as well as Central Mine as well as Development Institute. Now, on December 16, the Coal Ministry had asked the company to take steps for the listing of the two subsidiaries, and yesterday the board gave the in-principle approval. Now, going forward, what is the way? Number one, MCL as well as SECL will now communicate to the Coal Ministry for submission to DIPAM, and the listing of these subsidiaries will be subject to regulatory approvals.
All right, Vivek, many thanks for those details. On that note, it is time for us to head into a short break. More news and updates on the other side. Stay tuned.
Welcome back. The markets have moved into the red now. The Nifty is now below the flat line, but there are a lot of other movers that have been in the news over the last few minutes. Castrol is one of them. And after the announcement of the parent company selling majority stake to BP selling majority stake in its parent, the stock was up almost 8.5–9% at one point. It's off those highs, still holding on to gains of around 4.5%. It'll be interesting to see what happens now for Castrol India after this deal announcement. And a lot of these commodity-related names, as Arundhati was highlighting at the start of the show as well, they continue to do well. Manappuram is up 6%, Hindustan Copper is up 5.5%. And most of the other commodity-related plays too continue to do well in today's session. Just pull up Bharat Dynamics before we move on. That stock is at the highest point of the day, and that's after the successful testing of the Akash missile systems earlier in the day. So 4% higher for Bharat Dynamics as well. Shifting focus now to the US. The economy grew at its fastest pace in 2 years in the third quarter. Of course, that was a delayed data. It was fueled by robust consumer spending and a sharp rebound in exports. The GDP at 4.3% annualized rate, the fastest since the July to September quarter of 2023. The stronger than expected increase in the GDP also reflected continued investment by businesses in equipment and AI. Now, government spending, mostly on defense, also provided a lift.
Moving on, following the expansion of the US GDP at 4.2% as opposed to the predicted 2.5%, US President Donald Trump tweeted that he wants the next chairman of the Federal Reserve to lower interest rates if the markets are doing well. He even mentions that inflation will take care of itself, and if it doesn't, they can always raise rates at the appropriate time. He even added that if anybody who disagrees with him will never be the Fed chairman.
Now, next year will mark the 30th anniversary of former Fed Chair Alan Greenspan's call to keep the rates steady, correctly predicting tech investments will lead to higher productivity. Now, the current and future Fed chairs will have to make a similar decision to assess what impact the AI investment boom has on setting rates. CNBC's Steve Leisman is here with more details.
2026 will mark 3 decades since Fed Chair Alan Greenspan made one of the most important and toughest calls of his 17-year career. His colleagues wanted to raise rates, but he decided all of the investment in technology back in 1996 meant he could run the economy hot with higher growth and little fear of inflation. Among his colleagues, Janet Yellen, who would go on to become the chair of the Federal Reserve, and Alan Blinder, who urged Greenspan to hike rates. But Greenspan, he was right. Inflation plunged, and he held the line on rates for 3 years. Fast forward 30 years, and the current Fed chair and the next one face a similar call. Will the AI investment surge create a productivity boom that means lower rates for longer and stronger growth without inflation? New York Fed President John Williams said last week it's already informing his view of monetary policy.
What we've been seeing, which is actually very good productivity growth over the past few years, around 2% or so. So that's already happening, and I think that's going to continue for some time. I don't have a crystal ball that tells me what productivity will be, but if the AI boom does turn into a sustained period of productivity growth in the U.S., then I think those are the kind of developments we would expect.
There are risks. The administration's immigration policy means the labor force may be closer to full employment and potentially closer to generating inflation in a hot economy. Tariffs and higher inflation already raise the risk that growth could run too hot. And most important, as former Fed Vice Chair Rich Clarida points out, Greenspan eventually had to ratchet rates up. He said in a recent blog, productivity growth raises supply and thus tends to lower inflation pressure. It also encourages demand through higher investment and the wealth effect from booming stock markets on consumption. And that is ultimately the Fed's job. Don't stop the punch from being served, but take away the punch bowl before things get out of hand.
Meanwhile, President Trump's administration said it will impose additional tariffs on Chinese semiconductor imports, but will delay the action until June 2027. CNBC's Elaine Yu has the details.
The Trump administration has decided to impose additional tariffs on Chinese chip imports, but not until June of 2027. And it'll be at a rate that's determined at least 1 month in advance. This is on top of the existing 50% that is already in place for Chinese chip imports. So the White House is upping the ante, but they're delaying it in light of the trade truce where both sides, the U.S. and China, have suspended suspend its various tit-for-tat measures. And why are they doing this now? The U.S. Trade Representative Office has accused China of unfair trade practices in the chip industry. That's after an investigation that started last year during the Biden administration that's focusing on older so-called legacy chips from China. And they're saying that for decades, China has targeted the chip industry for dominance, calling it increasingly aggressive and sweeping non-market policies. And they're saying that if the fact that they're targeting chips for dominance is, quote, unreasonable and severely disadvantaged U.S. companies, workers, and the U.S. economy, and is also creating economic security risks from dependencies and vulnerabilities. So they're injecting new friction in this ongoing U.S.-China trade saga, but also parking it for now. But we've also heard from the Chinese embassy in Washington, which is accusing the U.S. of politicizing and weaponizing trade and tech issues, saying that it will destabilize global industrial supply chains and that it will benefit no one. And they also said they will take all necessary measures to safeguard their rights. So they are taking aim, and this means investors could be braced for fresh uncertainties around U.S.-China trade ties in the coming year.
On that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. In yet another achievement for India's space research, India's heaviest launch vehicle, LVM-3 Bahubali, has successfully carried a massive 6.1-ton satellite to space. The mission carries the Bluebird Block 2 spacecraft of US-based AST Space Mobile. This was the 6th operational flight of the LVM-3 launch vehicle. But Hormaz, the market's now firmly in the red as we speak. The mid-cap and the banks about 0.1% in the red. Nifty and Sensex flat.
When your biggest constituents are not doing well, that's the kind of move that you see, right? Reliance has now moved to the lowest point of the day. And for a better part of this up move that you saw on the index past 26,000, Reliance was a big contributor to that. And it has come off significantly from the highs of the day. Also, look at the contributors list. You will also find a lot of these large private financials. We were speaking about this at the start of the week, that these private financials have not managed to put their hand up whatsoever in ensuring that the Nifty moves higher. ICICI Bank still among the big drags on the index today, along with Sun Pharma. Infosys, of course, par for the course, considering the reaction you're seeing in IT stocks. But look at Bharti Airtel on the flip side, continuing to hold the index higher, along with a lot of these auto names like Mahindra and Mahindra and Maruti Suzuki. Hindalco still in the green. Aluminum prices are now at the highest level since 2022. And with this move today, Hindalco has taken its year-to-date advance to around 50%. So that's done well for itself. That too has come off the highs though, but still managing to hold on to some green. And just pull up Muthoot Finance before we wrap the show. That stock too is at record high levels. It's up almost 80% now in 2025, and that has made it the biggest calendar year return the stock has had since its listing in 2011. Take a leave on this edition of Business Lunch. Arundhati and I wish you a Merry Christmas and a happy holiday tomorrow. Midcap Radar on the other side though. Don't go away. We have a lot to catch up on.
Good afternoon. Welcome to Mid-Cap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. It's been quite volatile today. We did see markets coming off from the highs of the day and we are below the 26,200 mark right now. For some time, Nifty continued to be in the green, but that's not the case anymore. We'll have to see whether this dip gets bought into or not because all the major indices are in the red currently.
That's right. Good afternoon, Sonal. So like you mentioned, especially in the last hour or so, what we've actually seen is we've seen quite a bit of a sell-off emerging at the higher levels. Most of the sectoral indices have actually gone ahead and given up significant gains. As you can see, the mid-cap index too underperforming along with the small-cap index. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Stocks swing between gains and losses ahead of the market holiday on account of Christmas. Metals, financials and industrials notched some gains while FMCG and IT dragged.
VIP Industries is in focus. Promoter sells 26% equity in 2 block deals as it undertakes the previously agreed transfer of stake to multiple PE-led consortium.
Vikran Engineering shares surged nearly 15% today after the company announced it has received a major work order worth 2,035 crores from Onyx Renewables Limited for the development of a 600 megawatt AC solar power project.
And Ajanta Pharma shares surge after company inks an in-licensing agreement with Biocon for marketing semaglutide in 26 countries. The management tells CNBC TV18 that they are excited about their partnership with Biocon and they will target emerging markets with a market size of $100 billion in coming years.
Castrol India shares surge as much as 9% in trade after the company reports that the global parent will be selling out to BP, and on the back of that, this particular stock, the Indian listed entity, will see an open offer getting triggered.
Okay, all right. Those are the top headlines that we are tracking for the markets. As we pointed out previously, we have come up from the highs of the day. It's been swinging between red and green, but for now, we are below the 26,200 mark with mid-caps too, seeing a fall from the highs of the day. As we speak, Nifty is at the day's low, and that's the case across the board with mid-caps, Bank Nifty, and the Sensex as well. But we do have our special segment, Mid-Cap Movers. We have Hormuz here to take us through the mid-caps that are moving around in trade. Hormuz.
The mid-caps may be at the lows of the day, but there are enough and more that are still holding on to some gains in today's session. So we'll start off with the gainers. We are heading into a holiday, so let's begin on an optimistic note. JBM Auto is now up 9%, and Nuvama Wealth, 5 paisa, some capital market linked names doing well. 5 paisa is now up 9% as we speak. Godavari Biorefineries too is trading with gains of around 7%. The stock that has the newsmakers today, VIP Industries, after that block deal now has extended its gains, now is up 15% as we speak, now well above the open offer price. Castrol at one point had surged 9% but is giving up those gains rather swiftly. Bharat Dynamics, of course, after that successful missile launch, and Ajanta Pharma's deal with Biocon took the stock almost 5.5% higher at one point, still holding on to gains of around 3%. But the commodity rally, gold, silver, copper, name it, they are at record high levels. And look at the stocks as well. Hindustan Copper is now at the levels last seen in 2010. Manappuram is at record highs. IIFL Finance is at the day's high. Hindustan Zinc too continues to move higher. Market cap now crossing 2.5 lakh crore for Hindustan Zinc. So good going for this stock as well. And lastly, some stocks that are not doing well though today. Sandhar Tech is now down 5.5%. Kajaria is at the lows of the day. HCC is extended losses as well. So the broader market names are starting to extend losses, with a lot of these mid-sized banking names too, like Bandhan Bank and Federal Bank, falling to the lows of the day. Back to you guys.
Well, thank you so much, Hormal. The only bright spot appears and continues to remain the metal pack, like you just mentioned. But it's a good time to welcome Ajit Mishra of Religare Broking for a quick technical check on the market. Good afternoon, Ajit, and thank you so much for joining us. The market was moving steadily higher, but the last hour or so, you've seen significant selling pressure. What do you make of the Nifty at current levels?
Hi, good afternoon, Vivek, and good afternoon, Sonal. So first of all, festive greetings to you, the entire team, all the viewers. So yes, we are seeing a bit of this move, consolidation continuing in the index after this recent rebound. But Vivek, this is something which is going on from the last 3 weeks. So maybe closer to around 25,950 is the area basically where we have the 20 EMA placed, is where one should continue with the buy and dips approach until we decisively break that mark. But having said that, the banking index holds the key. So basically, the focus should be on the banking index. 59,500 for the Nifty Bank is something that you should keep a close eye on. The moment we cross this, then we'll see the next directional move unfolding in the market. So as of now, the consolidation is likely to continue. Better to maintain stock-specific approach.
And what would that stock-specific approach mean, Ajit? What are your individual picks?
Sonal, first that while the FMCG pack is still underperforming, we have some of the names like Britannia, Marico, which are like holding well and inching higher with every passing week. So Britannia, after this marginal retracement, looks upbeat for the next leg of the up move. So Britannia can be accumulated at current levels. 5900 should be a stop, and 6350 is what we are eyeing in the near target. Then we have Indus Star, which is almost like after almost a month-long consolidation, we have seen a fresh, decisive breakout today. So we expect this momentum to further carry, and 448 is what we are eyeing as an immediate target. So with stop at 417, one can accumulate Indus Star also at current levels.
Well, thank you so much. And as you speak, Indus Star up almost 3% in the session today. Well, thank you so much, Ajit, for joining us, giving us a view on the markets as well as your technical trading picks. Well, we'll now slip into a short break. Up next, we will connect with the management of Seagull India as the company has bagged a 550 crore orders. Stay tuned.
Welcome back. You're still tuned in to Mid-Cap Radar, and one stock which is on our radar is Castrol India Limited, because there's an activity which is happening on the parent level. Now remember, British Petroleum or BP has agreed to sell 65% stake in Castrol Limited, which is the MNC parent, to Stone Peak at an enterprise value of $10 billion. This will have a consideration of $6 billion, which will have accelerated dividend payments and which will be utilized to pay the net debt or fully pay the debt of British Petroleum. This includes this $6 billion consideration includes $0.8 billion for the prepayment of future dividend income over the medium to short term, and also other adjustments that the company, the BP, has to make in its books. Now, important update here, because their presentation or their press release says a significant proportion of Castrol JV minority interests relate to the shareholding of the publicly listed Castrol India Limited, basically Castrol India, which is a listed stock, and that surge post the announcement that came by on on Castrol Limited's website. The Castrol Limited company holds 51% stake in the Indian listed company, but post this transaction, Castrol Limited will have 35% stake coming in from BP and 65% will be with Stone Peak. Is that it? No, because after a 2-year lock-in period, BP has the option to further sell 35% stake, and that will be the key to watch whether they completely exit Castrol Limited or not. The transaction is expected to complete by the end of 2026, subject to regulatory approvals, and it includes minority interest in Castrol because it has its subsidiary or entities across the world, be it in India, be it in Vietnam, Saudi Arabia, Thailand, and other jurisdictions as well. Why is it important for the listed company in India? One, because they mentioned the minority interest is largely for the listed company in Castrol India, and secondly, Stone Peak has indicated that they have announced tender offer to Castrol India holders, but yes, that will come by only when this initial process or initial, transaction gets completed. So what is the open offer price? What are the further details is something that we'll be watching out for very closely. The stock surged on the back of this news, has come off highly because the details are still to be known. But yes, this is an important transaction, something which was expected in the market as well. And on the back of that, we are seeing this reaction that has come by on Castrol.
Well, thank you so much, Sonal, for explaining the details of the Castrol deal. We are talking about Castrol, the parent of the Indian listed arm. Well, moving on, Seagull India is the management joining us today. The company yesterday announced a large order win of 550 crore for solar power projects from Madhya Pradesh Urja Vikas Nigam. Ramnik Sehgal, the chairman and managing director of the company, and the discussion will be around, number one, the order win that we just mentioned from the state of Madhya Pradesh, the order inflows that the company has seen in Q3, and we will also ask the management whether they are on track for the 10 to 15% top line growth that they had guided the investor community to. Well, thank you so much, Mr. Sehgal, for joining us. First, talk to us about this particular order, the scope of the order, what margins you will operate it at, and what will be the execution period for this particular pretty large order that you have won in the state of Madhya Pradesh.
First of all, good afternoon, and thank you for having me over. So this is in Madhya Pradesh. This is PM Kusum scheme. We already have 337 megawatt in Maharashtra in the same scheme, and we have 220 megawatt in Morena. So totality in renewable, which is solar plus BESS, is close to 887 megawatt. We are really looking forward to these works because if you see our order win, our tariff rates are the highest. We've got it at 2.85. Vis-a-vis others, who have quoted around 2.732, where we are. And in terms of order book, we have guided and spoken to our investors during our earning calls that we will be planning to get 5,000 crore of the order book. I'm happy to share we've already crossed that. Still, we have 3 months. So in terms of the revenue, yes, as guided, we would have our looking forward that we should have at least a growth of 10 to 15%.
Okay. Coming back to this project itself, Mr. Sehgal, what is the timeline for completion and the kind of margins that you'll be seeing here, since you're saying the tariffs are higher than the other bidders as well?
So we always bid on a project basis. The project basis, the equity IRR has to be minimum 25%. Okay. So we have quoted around that, and in fact, we'll try to improve that 25%. The time limit of this project is almost 2 years. We'll target to complete in 18 months. We are just waiting for the PPA to happen. We have already started some groundwork. Once the PPA is signed, we'll immediately get into action.
Okay, so right now you're just waiting for the PPA to get signed. So you told us that you've crossed the 5,000 crore order inflow mark as far as FY26 is concerned. So Q3, what has been the incremental order inflow? After that, what are the orders in which you are currently L1 in? So end of FY26, where can the order book stand at? Or what can be the total order inflows?
Right now, we are at 14,237 crores. And this year, the total order book which we have taken is about 5,386 crore. So our target was to get 5,000 crore in this year, and we've already achieved that. We have already quoted projects more than 15,000 crore, and huge pipeline is there for the new bidding as well. So getting orders would not be a challenge for company Siegel. And growth ways also, what we have guided our investors, 10 to 15%, we'll definitely try to achieve it.
Okay, so now that you're saying you've already surpassed your order inflow guidance in Q3 itself, so 9 months you have already crossed that. What happens to the revenue then? Will you not be able to exceed that mark as well? Because now that order book is higher or order inflow is higher, the execution will be faster, and some of it could come in this financial year itself.
So normally what happens, like the projects we have got in Kusum, so LOAs are issued, but from last 3 months, Maharashtra government is not able to sign the PPA. So till the time the PPAs are signed, you can understand the execution is a little difficult. So it all depends upon these PPAs to be signed. And same is the case with the highways, where in HAM, we are blessed that our 3 projects have started, 2 Yodhas and 1 Ludhiana Bathinda. And Southern is also expected to start very soon, and VRK12 also expected to start soon. Once these projects are started, next year revenue would be nice. I mean, the clarity would be much more better.
Okay, Mr. Sehgal, so we get that point totally. So at the start of the year, you had guided the street to a broad range of 10 to 15% top line growth. Now, when you're looking at H1, we understand H1 there were quite a few execution challenges as well. We are closer to 3 to 4% is the kind of top line growth that you've seen H1 versus H1. So even if you look at or look to achieve the lower end of the guided band, it still implies a steep 17 to 18% H2 run rate. Will you be able to achieve that?
100%. We'll be able to achieve it because the new projects have started, and H1 always is a rainy season, and you can understand a business like ours where at least 3 to 4 states were affected with the heavy rainfall. And now last 2 quarters are the best quarters. And whereas I would say the last quarter is our best quarter always, if you see 30 to 35% revenue comes in the last quarter. So we're really looking forward to what we have guided to the investors. We'll try to achieve that.
Mr. Sehgal, a lot of your orders are coming in from the government, right? Be it state governments or the central government. What is the receivable situation in this case? What are receivable days currently, and what is still left to be received? What is the cycle generally in which you do get your money for the orders placed?
So normally it was around 50 to 70 days. In some orders where the milestones, earlier we used to get a payment in Atmanirbhar, where we used to achieve a 2% milestone, the payment was, paid to us. Whereas now the milestones have, for example, in a hybrid annuity, after 10%, it is straight to 20%, then it's 35%. So the receivables goes on a higher side. It goes to 80, 90 days also. But till the time you achieve the milestone, the payment is not made. And this is only changed in last 1.5 years. Before March 23, there was a scheme of government in Atmanirbhar where we were getting paid for every percent also. But doesn't matter, it is good for the industry. It is a healthy sign for industry where the large players can quote better and get better projects at a better price also.
So just trying to understand, what are the receivables currently? What's the amount that you are still to receive, which is there in your balance sheet?
It should be around 1,000 crore.
1,000 crore rupees, and your annual turnover is around 2,400 crore rupees.
No. Last year we did 3,400 crores.
Okay, all right. Okay, got it.
Okay, Mr. Sehgal, 2 questions. Number one, especially when it comes to the road space, when you're talking about NHAI, this year ordering activity has been extremely muted. And even last year, 2 consecutive years, it's been quite muted. So are you hopeful that, in the, H2 as well as FY27, that is going to pick up, number one. And the second part of the question, now that you have quite a few orders coming in from the renewable energy space, players have flagged off various issues like land acquisition, and execution has become a challenge. So going forward, do you see moderation as far as growth rates are concerned?
So, NHAI has a great pipeline in the future. It is only what they're doing is they're changing some documents in terms of their bidding. They're making it better for both NHAI and the companies, concessionaires, in both BOT as well as HAM. In terms of qualification criteria, they've already changed, and there has been the amendments, and we've already got in August. And that has really, it is made better for companies like us. So top 20 companies in India would be benefited with these new guidelines. in terms of once these SBTs are finalized, which I think will be done in January, and in February and March onwards, there would be a lot of order inflow. If you see on the NHA website also, there are projects worth 3 lakh crore. And already the cabinet has approved close to 1 lakh crore. And there's another 67,000 crore of the pipeline, which is with the cabinet, which I'm expecting that they should approve it. So a lot of work is there. What they have done is they've cleaned the entire thing where till the time the land is given clear to us, they have a forest clearances available with them, they're not going to receive the tenders, which is good. You know, earlier the contracts which we have got in 2022, 2023 are not started yet only because the clearances are been given. It's better to wait, clean up the entire system, which they are doing it, they're doing the right thing. And once the tenders are there, it'll be good to start immediately after the LOAs and appointed dates.
Okay, Mr. Sehgal, you know, quite a few of the players in the industry have actually taken or done a one-time exercise where they've removed non-moving orders out of the order book. Do you have any pending orders in the order book where there's not been much movement? And number two, you did mention, post the criteria changed by NHAI, there will be fewer players. But the feedback that we've been receiving from the industry, especially when it comes to the BOT space, has been significant competition at much lower margins. So what is the on-ground situation?
So EPC, still there would be a lot of competition, but in terms of HAM and BOT, where the tenders will be more than 2,000 crore, there'll be hardly 15-20 players who can actually play around those numbers. But otherwise, I don't think getting order book would be a challenge. We have just bagged a highway tender for 1,089 crores in MP, which is MPRDC Ujjain. So, I mean, you can see our order book also. And going forward, I think by February, end of March, there'll be a lot of bidding from NHI side also. There would be tenders from state government also. If we talk about the other order book where you think we have to clean up or something, so, we had 10 HAM projects. Out of 3 are completed, 3 are under construction, 2 we are targeting to start immediately, and the last 2 we are planning to start before April. So all our orders are intact, and we are looking forward to start it ASAP once the land is given clear to us. And I don't think any challenges coming. Only we had one Bhubaneswar Metro which couldn't start, and the government terminated this contract. And we filed our compensation on the government also, which is going into a conciliation now.
All right.
Otherwise, I don't think there is any problem as such on any other project.
Take that point, Mr. Sehgal. Out of time, otherwise we had a lot more questions. But thank you so much for joining in. The stock has surged to the day's high post this commentary and interview as well. So we'll keep a track on the outlook on execution of this new order that the company has won. We'll sip into a break. We'll come back with more focus on stock-specific action. Stay tuned. Welcome back. Mid-caps continue to be under pressure. They're underperforming the benchmarks, 0.2% lower on that one at the day's low. But there are some stocks which are bucking the trend. For instance, we have JBM Auto. The stock is up 9.5%. KNR Constructions is the other one, which is high by 6.5%. A lot of these chemical names doing really well in trade. Nuvama Wealth is the other one, which is up 4%. We've been talking about these gold financiers, and Manappuram Finance is one of them, which is up around 6.5%. Gillette is the other one, which is surging 3.5% higher on that one. So tracking all these stocks, despite the underperformance in the index, there are far and few stocks which are buzzing in trade on the upside. With that, we'll take your leave on this edition of Midcap Radar, but stay tuned, your stocks when we return.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. In terms of the markets, now they've come near the 26,150 levels. The Nifty is trading in the red as of now, down 25 points in today's trading session. While we did start the day on the green side, we have come to the red territory at the day's lowest point now is what the Nifty is trading at. So that's what we'll be keeping an eye out on. Let's pull up what the Nifty Bank is doing as well. Nifty Bank too is down almost 2/10 to 0.3% in the trading session as of now. So keep an eye out on that. That too is at the day's lowest point. Broader end of the market, Nifty mid and small cap, a bit of an underperformance coming in from the Nifty mid cap side. That's down almost 3/10 to 0.4% in the trading session as well as small cap is also something that's managing to hold on to some bit of that at least positive gain versus what the whole market is doing. So advanced decline ratio, that's important to keep an eye out on, right? Seems like more of that crisscross is what we could watch out for. almost even in terms of the advance decline ratio at one point of time, and now the red has moved higher than the green, so the red line. So we have more declines coming in through the day now versus the advances. Let's watch out for what happens at the second half of the trading session. That'll be important to keep an eye out on. But this is a show where we solve all your stock related queries, and to do just that we have Somil Mehta, Head of Alternate Research Capital Market Strategy at Mirae Asset Sharekhan, as well as Asta Jain, Research Analyst at Hem Securities, to answer all the stock related queries. Somil as well as Asta, firstly, before we start with the queries, festive greetings to both of you all, and Merry Christmas to everyone in your team as well as at your homes as well. And thank you so much as always for joining us on the show. On that note, let's get started with the first query for today. This is coming on Avenue Supermart. So, we have a couple of queries that's come in here. The first one for today is coming from Sriram, who's writing to us on Avenue Supermart. He's made 100% profit on this one. He wants to know whether he should switch or continue to hold this. Also, the other query is also come in. That is also, they said that DMart, they have been holding it for a while. Manish Gupta is writing to us. Do you think that now this could again come back to those 6,000 levels? If yes, by when is it expected? Both the queries are coming in on Avenue Supermart. Asta, your view.
Hi, good afternoon to everyone, and yes, festive greetings to everyone out there. Talking about DMart, we believe that DMart right now is looking not so strong from the price performance wise, although from the fundamental point of view, first of all, their balance sheet is debt free. So debt free balance sheet they are having. In fact, they are having their focus on the store expansion, especially in the northern India. But here, our investor has already generated strong profits. So my idea here is to book partial profit at this point of a time, rather than continue the whole holding and remain invested in the partial quantity. So for DMart, my idea here is to book partial profit.
Okay, yes, so DMart book partial profit, because both these viewers, I think, have bought it, at least Sriram has bought it at a price which is lower, while Manish has got it at a price that is at 5,000, which reached 5,900. He's holding these shares, 5 years back, say he's holding it. Somil, what's your view for this one? 6,000 anytime on the cards, they're waiting for the number to come back. Should they be expecting that, or would you also suggest might as well book your partial profits?
Merry Christmas to everyone. Afternoon to everyone as well. My view is negative on DMart, and the targets on the downside would be around 3,300, 3,400. So now, if you're holding from last 4-5 years, I think a little more now. The targets are very close now. 3,300, 3,400 would be my targets, and multiple times the stock has taken support around 3,200, 300 levels. So it is a little more of a wait probably from here. If you're waiting for 5 years, probably one more year to go. However, in the very long term, I don't see this as a bad option in the very long term, not in the medium term outlook. Medium term outlook, obviously negative. On the upside, if this whole range, which is been there for a little while, between 4,900 and 3,200, it's a very broad range in the last 4-5 years. If this breaks on the upside, the next levels would be a way higher than probably 5,500, 6,000 levels. So I'll suggest to hold on to this if you are waiting for a very long time. But if you are just invested, then exit would be my strategy.
Okay, keep an eye out on those strategies over there. Just invested, then exit would be the strategy. That's all Somil is saying. As that said, book half your profits at least, because you're making good amount of profit, might as well book some bit of it. Next query for today is come from KS Rao, who's writing to us from Andhra Pradesh. He's holding 150 shares of GPT Healthcare. Price is 175 rupees per share. They're making a loss on this one. Long-term investor, so he wants to know, should he continue to hold or sell at current levels and book his losses? Asa, your view.
So talking about GPT Health, my idea here is to hold this counter. At least I believe that this counter can move till the level of 150 to 160. So one can hold the counter at least till those levels. Now talking about the financial performance was quite okay, because what we have seen in the top line growth was a growth of around 11%, but the margins are really very muted, and they were standing, EBITDA margin I'm talking about in particular, they were standing at a very low level. So just a rise in the top line was there, but we have not seen that rise to be transferred to the bottom line as well as EBITDA, and in fact margins were also low. So I believe that is main reason we have not seen this counter performing so strongly. But going ahead, I believe the company will be able to show good performance, and hence we are recommending a hold. 150 is the price target which can be set for this counter.
Okay, recommend a hold. 150 is the price target, maybe, is what we could watch out for GPT Healthcare. Saumil, your view for GPT Healthcare as well? In the last 1 year, the stock is actually seen a fall, 26% decline. What should they do?
Absolutely. Very negative on this, actually. Struggling to go above or sustain above 200 daily moving average. It's been struggling below 20 and 40 daily moving average for a little while now. So negative on the stock. I'll be expecting a target of around 125, 120 levels on GPT Healthcare. So exit would be my strategy.
Would be the strategy there, not too excited about GPT Healthcare fundamentally as well as technically, though there are levels that both of them have mentioned, Saumil as well as Astha, so keep an eye out on that. Next query for today is coming from Murli, who's writing to us from Bangalore, holding 500 shares of Travel Food Services. Price is 1,266 rupees per share. Wants to know the outlook of the stock for the next 12 to 15 months. Astha?
Being one of the leading player in the airport QSR space, airport travel QSR space, I believe that outlook for the coming year is very, very positive, because they have got a very, very large network. In fact, the IPO came in July 2025 only at the higher end of the price when it was at around 1100 rupees. And I think from there we have seen a rise in the stock prices. So idea here is to stay invested in this counter with a price target of 1300 at the initial level. And we believe that definitely their diversified portfolio, as well as they have got certain brand partnerships also, that's going to be help company in posting a good set of numbers going ahead. Remain invested in this counter with a price target of 1300.
Remain invested fundamentally with a price target of 1300 is what Astha is saying. Saumil, I know not much in terms of chart history that you have, but any view on this one that you've seen in terms of the stock in the recent time or the last 6-7 months?
The trend in the very short term is down, struggling below 20 and 40 daily moving average, low top, low bottom formation. Today, it is closing below, it is cutting below 200 daily moving average. So my targets on the downside would be 1,000, 1,100 for this stock. So absolutely negative in the short term. Medium term, I won't be able to comment because there's not much data on the charts. But yes, negative in the short term, and the targets would be 1,100 to 1,000.
Okay, keeping an eye out on those levels over there, but obviously not much is that is available in the charts, but short-term view is what Saumil has given as of now. Next query for today, Nagraj is writing to us from Bangalore. He's holding 96,000 shares of Ujjivan Small Finance Bank, 18 rupees per share, making a profit on this one. Wants to know the long-term view considering the expected universal banking license, improving asset quality, return ratios there. Lots that's happening on the banking financial side as well, right? So what should one be watching out for now here, Astha?
What I'm really optimistic about this counter, why I'm really optimistic about this counter is kind of management commentary, which we have seen, especially their outlook for FY30, 1.8 to 2% of ROE with 16 to 1.8 to 2% of ROA that is written over assets, and 16 to 18% of ROE written over the equity. That is what they have set as a guidelines for the FY30. So it seems to be very, very positive. In fact, they are also expecting a strong loan growth of more than 10% going ahead. So my idea here is, on the basis of the optimistic management commentary, this stock is looking good to us. Remain invested in this counter with a price target of around 56 to 60 in the medium term.
Okay. We'll keep an eye out on those levels over there for the medium term. Saumil, your view for Ujjivan Small Finance Bank, long-term view?
Positive, absolutely positive on the stock. The basing out pattern was around 40, 40, 42 levels. And I don't see the stock going below that level. And that has become a base for the stock. Now, 200 daily moving averages around 47 levels. And in the very short term, in the medium term outlook, 47 would be a very crucial level to watch out for. Overall, if you see, I'll be expecting a target of around 65, 70 levels in the medium term outlook. But in the very short term, I'm absolutely positive on the stock, and I'll be expecting much higher targets above 70 levels.
Okay, keeping an eye out on those levels over there. But on that note, viewers, we're going to switch into a very short break. Don't go anywhere. We'll come back with more of your stock-related queries on the other side. Welcome back to your stocks on CNBC TV18. As of now, the Nifty is still holding on to 26,160 levels. That's what we'll be keeping an eye out on. The flashes at the bottom of your screen indicating that Bharti and Warburg Pincus will collectively now own some 49% stake in Harrier India. That's the latest update that we have. Bharti Enterprises and have announced, and Warburg have announced a strategic investment here. So that is what we'll keep an eye out on. 49% stake in Harrier India is what we are talking about. So yes, we'll watch out for that one as well. This is the latest update that is coming here. And Harrier will sell this 49% India unit stake to both Bharti as well as Warburg, like I mentioned. So keep an eye out on those going forward as well. But let's keep it going then with the stock-related queries. The next query for today, we have Narendra, who's writing to us from Mumbai, holding 15,000 shares of Suzlon. Price is 65.50 rupees per share. Currently, Suzlon is trading at 53.7, so he's making a loss on this one. Wants to know whether to hold or sell at the current levels, or maybe could he look to even average? Asta, what's your view?
The view is positive. He can hold at this point of a time. Maybe can do averaging, but not at the current level, maybe at the lower level. So for MRF, we are positive and we are giving a price target of around 60 to 65 to this counter in the medium term. Now talking about the fundamentals, I mean, it is well placed, to capitalize what growth story which is going on in India. And what we have seen is that their capacity utilization is very strong and they have potential to scale that up. So looking after the very strong fundamental and guide of the industry they are right now working in, we believe that definitely calendar year 26 will be a good year for the energy counter. So I think Suzlon is a good bet in that space. Remain invested in this count of the price target of 60 to 65.
Okay, and what's your view on the technicals for Suzlon, Somil?
Absolutely positive on Suzlon in the medium to long term. Crucial levels 46, 45 levels. There's a basing out pattern there, and I'm not expecting the stock to go below the 45 levels. Now, on the upside, I'll be expecting this stock to continue the the sideways correction below 200 daily moving average. But overall, I think it has a potential to go above 75, which was a previous swing high in the quarterly charts. Now, if it sustains above that, then I'll be expecting much higher levels on the stock. Uh, Absolutely positive. My strategy would be to buy on declines.
Okay, buy on declines would be a strategy as well. So we'll keep an eye on that. Let's move on. Next query. Sailesh Singh is writing to us from Ranchi. He's holding 259 shares of Jindal SAW. Price is 291 rupees per share, making a loss on this one. Wants to know whether should book losses or stay invested. Astha?
I think stay invested is a better choice as of now with the price target of 190 to 200 at the initial level. Now, talking about Jindal SAW, yes, they were not able to perform strongly on the financial front in the quarter gone by, and there were certain reasons behind it. They have seen a spell of rain, and that has hampered their operations. In fact, there were certain reasons also. That is why we have seen the downfall in the sales, etc. But going ahead, if we go by the management commentary, that seems to be very, very optimistic because they have registered the highest order book ever in the quarter gone by. So definitely it will give a very, very strong revenue visibility going ahead. And hence we believe that this stock is has a potential to move upside from here. Remain invested in this counter.
Okay. And what's your view on Jindal SAW?
Uh, uh, in the last couple of years, in the last 1 year, it has been corrected from 380 levels to around 150 levels. So almost 60% retracement is already done. Now, from these levels, I would definitely suggest to hold on to the stock. I'll be expecting this stock to, base out around these levels for the long term, for the long term targets. I'll be expecting above 200 level targets would be around 260, 280 levels. I'll be expecting as a target in the long term, but not in the short term. I would suggest not to trade in the short to medium term. Only and only invest for long term.
Okay. Only invest for long term. That's the view there for Jindal SAW, not short term. Next query for today. Prasad is writing to us from Trivandrum. He's holding 5 shares of MRF. Price is 54,000 rupees per share. Asking if the stock will move up further from here on, and if there's any chance of bonus issue or anything on that front as well. What's your view on this one, Astha?
View is positive, although we cannot comment on any chance of any other corporate arrangement as on this date. But what I believe that they have got a market leadership. First of all, their distribution reach is very, very high. Their brand calling is very, very strong. So I think there are certain factors which are keeping MRF in a strong position. Although results were not very supportive, but I still believe that with this GST-led rate cuts, definitely these companies will going to benefit in the coming months or coming time. So I would like to recommend that one should remain invested in this counter. However, here our investor is yielding very, very strong profit. So there is no harm in booking partial profit or even 25% of the quantity which he is holding right now. So book some profits, but remain invested in remaining quantity.
Astha, but he's holding only 5 shares. So then he'll have to sell only 1 or 2 shares. So the thing is that when you buy MRF, the price is so high, I think not everyone buys a good lot of it.
Yeah, but here the profits are so high that in case if he wants to book, then definitely the number of stock shares is very low. So it's his choice. But we are recommending some sort of profit booking at this counter because here profits are huge. So there is no harm in recording those.
Absolutely. No harm in at least getting some bit of the profit or at least booking out your cost in this one right now. Saumil, what's your view for MRF? What should the viewer do? Continue to stay invested?
Absolutely, continue to stay invested. I'm positive on the stock. It can go down till 1,45,000 levels, which is 200 daily moving average. But I would agree with Astha as well that you can book at least 1 or 2 shares. It is 1,45,000 at this point of time. It is 1,50,000. So 2 shares would be a good money. So book partial profits and stay invested.
Okay, good. Book partial profits, and then the remaining ones you can continue to hold this one, given that you're making good amount of profits. Next query for today, Krishna Rao is writing to us from Telangana, holding 1,100 shares of Tata Technologies. Price is 800 rupees per share. Long-term investor. And they can hold the shares for a period of another 3 years as well. Astha, what's your view on Tata Tech? We have had this query come in on Tata Tech time and again, and the stock has not done anything, so it's a bit of a worry that everyone thinks about. But what should they do? 3-year time period they're willing to hold, so continue to hold this.
It is a global product engineering and digital services company, as we all know. And when the IPO came, we were very much optimistic because the kind of house it is coming from, as well as the kind of business it is into. But main problem is that it is not able to deliver on the financial front, and that is why we are not seeing this stock performing strongly as it was expected to be. But here, my idea is just stay invested in this counter. Let's see how the results turn out to be for Q3 of FY26, and there is short time left. Only of a few days, 15, 20 days. So there is no harm in remain invested in this counter. Let the results come in and then take any sort of decision. Remain invested in this counter.
Okay, remain invested in this one. And what's your view on this one, Soman?
The stock has been struggling below 200 daily moving average since inceptions probably, and it has never closed above that. Now in the daily charts, the weekly charts, it's all lower tops, lower bottom formation. I don't see anything positive at this point of time. However, the breakout would be higher, much higher above 800 levels. So if this stock goes above 800 rupees, only and only then probably we can revisit the stock and then again start thinking about a positive up move for this stock. But at this point of time, negative, I would not suggest to hold on to the stock.
Okay, negative, not hold on to the stock. That's a view on the technicals. Next query, Meher Khanna is writing to us from Vishakhapatnam, holding 400 shares of Shakti Pump, 810 rupees per share. Should she continue to hold or sell at the current levels? Astha?
I think one should continue to remain invested in this counter. I think she will definitely get the break even, and higher than the cost prices, the stock prices can show such sort of movement. Now, talking about the financials were okay. They have delivered highest ever quarterly performance in the Q2 of FY26. And what we believe that this company is well set to show very, very strong financial performance going ahead also, because in the rough spell of, high raw material prices, or when we all know that the monsoon spell was extended one. So definitely these companies took some hit. Despite those facts also, when this company is posting very strong set of numbers, I believe that it is a strong counter to remain invested in. Price target at the initial levels can be set at around 820 to 850 odd levels.
Okay, we'll keep an eye out on that. But that was the last query for today. So Astha as well as Somal, thank you so much for joining us. Hope you all have a great day tomorrow. Merry Christmas to all of you all. Merry Christmas to our viewers as well. And viewers, thank you so much as always for tuning in as well. But that's not all. Remember that you can always email us your queries on the email address, or there's a phone number that is flashing at the top of the screens or on the screens for you all as well. So please do that. Send us your queries. We'll take them on Friday and solve with our experts as well. But for the last hour of trade, now we have closing bell up next, so don't go anywhere.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio.
And on expected lines, volumes are very thin, participation is low.
And in general, like I said, there is a cheerful feeling out there. We are seeing at least a bit of green as well.
If you look at the exposure of Indian IT services companies' dependency on H-1B visa, it is now less than 1%.
Even the earnings trajectory would seem better going forward.
Gold and silver are ensuring as well, with all-time highs continuing on to this one.
Coal India, yesterday was the top Nifty gainer, continues to move higher.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal.
The transaction with multiples has completed today. So Dilip Piramal has transferred 26% of his stake to multiples private equity.
We'll have to see whether this dip gets bought into or not, because all the major indices are in the red currently.
Well, that was the day so far. Hello and welcome to Closing Bell. The last 1 hour to go before Christmas. We're coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Mangala Malu. Well, unfortunately, markets are the shade of our clothes, in the red again, but not by too much. But it just appears this 26,200 is acting as a bit of a hurdle for our markets. So we got there in the morning, we were trading above it, and from there has been a bit of a slide.
There has been, and it's in line with Christmas. What are the Christmas colors? It's green and red, and the market gave both the shades to the bulls and the bears, perhaps, as we move towards Christmas. Shortened week in the US, at the same time, no trading tomorrow, and it's also the Sensex monthly expiry which plays out. So all these factors causing this bit of volatility, but there's no real worry, so to say, because a large part of this trading is happening on slightly thin volumes. And from a technical standpoint, the one data point that really stands out is the inability of the Nifty Bank to go ahead and conquer the 20-day moving average. It's been a few days since the Nifty Bank has actually gone ahead and conquered that 20-day moving average. Today as well, went all the way up to 59,400 thereabouts. 59,500 to 400 is a bit of a congestion zone for that index, and that's also causing the overall index to go lower, and the Nifty is now fallen about that 26,130, 26,140 sort of mark right now.
So banks are under pressure, though NBFCs are holding up pretty fine. So Shriram Finance still is up for the 6th consecutive day in a row. Look at Manappuram Finance, life highs on the stock on the back of the record surge in crude prices. You've got gains in Bajaj Finance, but even the others like a Canfin Homes, we spoke about Samman Capital, M&M Finance, LIC Housing Finance. So that pocket of the market continues to remain very buoyant. And in the large cap screen, it's Trend, which is the top Nifty gainer. So that's up more than about 2%. Apollo Hospitals, Max Healthcare, and a couple of auto names like Bajaj Auto, Maruti Suzuki, and M&M are up and about in the green. On the way down, IT is giving banks company. So IT is struggling a bit, seeing profit booking, and the H-1B visa is hurting sentiment. We'll talk all this in the next 1 hour. Let's first quickly tell you what we've lined up for you on the show. A directionless trade on Dalal Street. No signs of the Christmas cheer, but the Santa red is on the screen. The index is downbeat virtually at the day's low and now below 26,150. IT and PSU banks under pressure. Developments in oil and gas sector. British Petroleum, or BP, is all set to offload 65% stake in Castrol at an enterprise value of $10 billion. This is happening at the parent level, but the Indian stock, Castrol India, is also up 2.5%. We'll get you details. Shares of luggage maker VIP Industries skyrocket following the block deal. The Piramal family has completed the transfer to multiples via today's block. So we'll talk more about it. And precious metals continue with their uptrend. So both silver and crude prices, gold scale fresh highs, and stocks like Hindustan Zinc, Manappuram, Muthoot Finance all rise in trade.
All right, so the big question then, how should you position yourself in this last hour of trade? Mitesh Thakkar from Bonanza Portfolio joins us with his closing strategies. Mitesh, this morning we were all hopeful of a big up move in the market. The bullishness, is what was expected. But we are facing some congestion. So how would you approach trade from here on? And what would you make of the trade so far?
Yeah.
Oh, good afternoon, Mangalam. So, yesterday I talked about the fact that there will be some supply at 26,220, and we've not, decisively managed to get past that. Yesterday it was 26,233 as the high. Today is 236 as the high. So I think, very clearly you can find that the pivot of 26,220 is coming into play. But the structure is improved. So my sense is that, in case you get a Nifty level close to 26,100, which is another 30, 40 points lower from here, that will be a buying or a fresh entry opportunity. Keep a stop below 26,045, and I think 26,380, remains the eventual target for me. For the timing, I have a buy on ITC. Keep a stop at 403, look for targets of 415, and also a buy on Dalmia Bharat Cements with a stop below 2079 for targets of 2165.
Katha, we'll come back to you at 3 o'clock to get in some more closing trades. For now, let's talk about Castrol, because BP, British Petroleum, has agreed to sell a 65% stake in Castrol to Stonepeak at an enterprise value of $10 billion. Now, this is happening at the parent level. But Castrol, the global company, has a 51% holding in the Indian listed entity. So Sonal joins in to tell us first about the deal and the implications for the Indian entity.
It is a big deal which is announced because BP, or British Petroleum, has announced they will be selling 65% stake in Castrol to Stonepeak at an enterprise value of $10 billion. That is the enterprise value. The consideration here is $6 billion, which will include accelerated dividend payments and will be fully utilized to reduce net debt. The other things that will include $0.8 billion of prepayment of future dividend income over medium to short term, and also other adjustments that the company will have in its books. They add in their statement that a significant proportion of Castrol GV minority interests relate to Castrol India Limited, which is the listed entity, and the stock surged after that statement as well. And it is important because, remember, Castrol Limited holds 51% stake in Castrol India Limited. They say that there'll be a joint venture now where 35% will be with British Petroleum and 65% will be with Stonepeak, and they do not rule out any further stake sale as well. They indicate that following the 2-year lock-in period, they can actually sell the remaining 35% stake as well in Castrol Limited. So that is an important statement coming in. The transaction expected to complete by end of 2026, subject to regulatory approvals, and the minority interests include the stake that they have in India, Vietnam, Saudi Arabia, Thailand, and other jurisdictions as well. This is a release which is coming from BP and Castrol Limited. But from Bloomberg, we are also getting details that Stonepeak has announced tender offer to Castrol India holders, and it will tender the process after the main transaction gets over, that is the 65% stake sale. So Castrol India Limited remains in focus because of this big transaction that's happening at the parent front and will be on our radar as well.
Right, so that is something that will be on our radar, what happens to Castrol India, and if there is a promoter change indeed, whether there is that mandatory open offer or not that comes. Meanwhile, Nuvama Wealth is doing well all through today's trading session. Some of these NBFCs that we're speaking about, PNB Housing Finance for one has moved higher. IIFL Finance is up around 5%. Manappuram Finance as well. And as we move towards closing, we have an up move coming in on Berger Paints too. Berger Paints has spiked to the high point of trade right now. Siddharth Khemka of Motilal Oswal Financial Services joins in. Sid, good afternoon. What do you make of the Castrol deal that has happened so far, and what are your views on the stock?
Hi, good afternoon. I think the promoters were in the street for quite some time now, so this news was in the making. But I think it's a good deal. Luckily, the Indian business doesn't have much debt, and as you rightly said, there will be an open offer which will get triggered. So I think all the reason to see that this is likely to play out well. The company is transitioning from the fossil fuel kind of products to the EV segment, how they are launching newer products and keep being relevant in the new age EV transitioning. So I think with the funds or the new promoter coming in, especially with a private equity player, I think next few years could see a sharp growth in terms of revamped strategy that could lead to a stronger growth. Valuation wise, it continues to remain decent, high dividend yield stock from an India perspective. So net, I think this will be positive from the India Castrol perspective.
All right, positive from the India Castrol perspective. Meanwhile, the other stock which is on our radar and has been doing extremely well through this trading session and not so much at all, in fact, terribly over the last couple of years, in the last 6 months in particular, has been VIP Industries. Why is the stock doing well today? What's the news? Let's tell you, this morning when we were coming to you on Bazaar, the important part was that there was a large trade that took place. 26% equity, 3.7 crore shares traded hands, and we understood, that it is the Piramal family, Dilip Piramal, who's transferred 26% stake to Multiples PE. With this, the transaction with Multiples is complete. Remember, in July 2025, VIP promoters had agreed to sell 32% of their 52% stake to Multiples PE and some others at around 388 rupees per share. Ever since, the business performance and the share performance has been weak as well. Barring today's gain, the stock was actually below that 388 rupees per share price as well. In the interim, Multiples also announced a mandatory open offer for additional 26% stake, because of which they had to park that 26% money in an escrow account for minority shareholders. Once that got done, Dilip Piramal transferred his 6% stake in the first tranche, after which there was the mandatory open offer. Once that got done, the 26% money came back, and that has been deployed into buying this 26% stake from Dilip Piramal today. So they bought 32% stake, and Piramal family still holds 20% stake. In the interim, the MD, Neetu Kashiramka, also resigned with effect from October 2025. So what is it that is important to track? What is the street betting on right now? Multiples' own turnaround strategy. The stock has been beaten down. The market has been growing, but not VIP. They've been losing market share. So does Multiples, go ahead and turn that business around? Do they invest more capital in the company? And what their investment tenure would be? And could there be further management changes after the change that we've seen from Neetu Kashiramka? And the final question, Piramal still own 20% stake. Will they sell more at any point in the near future or not, is something that we will watch out for. So in an otherwise weak market where the Nifty is actually at the low point of trade, VIP is moved to the high point of trade. Good time to bring back Sid Khemka. Sid, the luggage space. This morning we spoke with a couple of market experts. They do like the space, Safari in particular. But VIP, do you think now that the deal is complete, everything will be controlled by Multiples, barring a couple of director seats from the Piramals? There is a case for turnaround here?
So yeah, Manglam, I think the entire change in management hinged around the turnaround story that the new management brings in. A lot of questions. We believe that a refreshed strategy needs to be brought in, especially if you look at augmenting the supply chain efficiency, a focus on secondary sales, enhancing productivity, especially the employee and the plant productivity. They also need to look at some of the loss-making EBOs, which needs to be closed down so that the return ratios kinds of gets improved. There is a Bangladesh plant which also needs to be turned around. So a lot to do for the new management. Yes, we also are hopeful that with the change in management, now that the broader luggage industry doing very well and VIP continuously losing share, we believe that the strong brand and a refresh strategy could lead to recovery, especially in FY27. So don't expect any recovery in the near term, but purely from a long-term perspective over the next 2-3 years, that should do well. At this price, I think it's a good entry opportunity. We do have a buy rating and a target price of 490 on VIP.
Siddharth, hi, afternoon. What about gold financiers like Manappuram Finance, Muthoot? Today, Manappuram Finance is up 6.5%, large volumes and fresh highs.
Hi, Rima. So yes, so if you look at gold prices has been on a tear, and that is driving the growth because it increases the LTV that you can lend with the same amount of or same grammage of gold. So the business growth becomes much better. Your delinquencies become much lesser because again the gold prices have gone up. So it definitely makes a lot of case for the growth of both Muthoot and Manappuram. Muthoot has been a market leader doing strong growth. Manappuram, there has been a change in management. Again, recovery play, valuations at a much discount compared to Muthoot. So we continue to like the space. Muthoot has been a preferred player, but with now the new management back in Manappuram, we believe that Manappuram even can pick up from here if growth revives. Nonetheless, preferred pick Muthoot Finance among the gold financiers.
All right. Apart from Muthoot Finance, Manappuram Finance, there are a bunch of other stocks as well which are doing extremely well. We have all the ones which have commodity-related moves. So Hindustan Copper, Hind Zinc, all of them have been spiking. In fact, the Nifty Metals Index is among the others which are outperforming today, the few sectors which are outperforming. So the Metals Index comes up for you again. The broader markets at the low point of trade, frontline indices lower as well, and the Metals Index is marginally in the green, though off highs. The precious metals rally continues. Gold, silver, platinum, all of them hitting record highs. Manisha joins in with more. Manisha.
Well, thank you for that. Yes, it's been a year that is sparkled and has been shining throughout. We have seen very strong gains continuing, and all-time highs is what we are trading with right now, whether it comes about gold, silver, platinum, and copper for that matter. So very strong gains continuing for gold prices. We've seen an all-time high of $45.25 an ounce. And with that, it has been a 72% of gains coming for the commodity. For silver prices as well, it has been a gain of about 150%. We started this year for silver at $29.50, and we are trading at a 72.5 on the higher side. It has been a series of record highs that we've seen in gold and silver both. For gold, essentially, it has been about strong buying that we've seen come in from portfolio diversification, also in sense of very strong central buying that we have seen. And that is a chart that tells you on how we've moved in sense of gold prices on every month, making those newer highs everywhere. And as you can see, from $4,000 an ounce in the month of October, 4,500 being broken in last 45-60 days has been a big one that we've seen in case of gold there. Expectations going forward are still on the stronger side, especially with the interest rate cuts still lined in. Markets believe that the geopolitical tensions, whether it is about US, Venezuela, Russia, Ukraine, Iran, Israel, it's something that has led to a lot of buying come into the space. And it only hasn't not been about central bank buying, but institutional buying, family houses, retail also has been buying gold. We've seen China buy a lot of gold, so has been the case with India as well. And US, which is not a large, consumer of gold, also has seen investments come in for this one. And then it's about silver. Everything that gold has done, silver also has done. But for silver, this is a fifth straight year of deficit. We have seen strong industrial demand come in. That clearly has been supportive. And this is what silver has done, as I said, from 29.5, and then take a look at 40, 50, and $60 to $70 of a jump up is what we've seen, that $15 of a gain come in only in the month of December. It is up 45% in last 30 days is what we've seen in case of silver demand. It has been about short squeeze. It also has been about US putting silver in the critical mineral list. Those have been the supportive factors there. And then there was a bit of a discount in the Indian markets with the run-up in prices, but that seems to have gone away again. With every rise, with every dip, you're looking at silver buying continuing in the space there. I also want to talk about platinum. Strong industrial demand onto that one. A third straight year of deficit has been supportive for platinum as well. And this is what we moved in sense of prices from $910 an ounce in the month of January to trading nearly at $2,300 an ounce. Has been a strong jump. This is a 163% of gain coming for platinum as well, with an expectation that you could be looking at more demand when it comes from energy sector, also from renewables, etc., and automotive as an industry. And that is where platinum seems to be getting its support from. Copper is the last and the fourth one on my list here, where we also are trading at an all-time highs on LME at around $12,000 a ton. This comes in after a reiteration from the US president saying that after introducing semi-finished products in copper, and there's a 50% tariff already on that, there could be commodity-grade copper also attracting some tariff in the month of January. That is when they plan to put it on. That is what has led to copper prices going all-time highs as well. On Sensex as well, these current prices on your screens are at record highs.
Wow, thank you very much for that, Manisha. I remember the start of the year, same time, gold had a pretty good year. In 2023, it was up. 2024, it was up. And then everyone thought that, the rally can't continue like this, that maybe this is the year where, if not a correction, at least gold pauses, silver pauses. And it's just taken everyone by surprise, the quantum and the extent of the rally. So, Siddharth, same question. Now going ahead at this price, would you recommend buying gold or silver?
Rima, I think you should ask that question to our commodity research desk. But I think they continue to remain positive. The global geopolitical situation plus the central bank action that would continue in 2026 as well. However, what we believe is that silver could outperform gold in 2026, given that already gold has seen the kind of rally in 2025.
All right. So you believe that silver will outperform despite rally that we've seen this year on silver as well. Meanwhile, are there any, commodity-backed stocks that you believe could do well this year after having done a decent amount in the 2025.
Mangalam, I think the clear buys in terms of commodity, especially if you look at precious commodities, you have the two Hindustan Zinc and Hindustan Copper and Vedanta. I think apart from that, if you would like to play copper is through the wires and cables companies, both KEI as well as Polycab. The price generally they pass on, and when the copper price falls, generally the price cut is lesser and the margin sustenance becomes much better. So I think some of these names are something that one can indirectly play with. Gold you can play through the gold financing companies.
All right, I wonder if you're tracking JBM Auto, Sid, because, it's a big move. Second day running, it's up around 13%, and it's been an underperformer. But this month, it's got some momentum. In fact, so much so that on the 22nd of December, they got a mail from the BSE as well, asking them for if there are any disclosures that they need to be made because of the kind of volume move that we've seen on JBM Auto. They obviously said that they're purely market driven and due to market conditions. But I wonder if you have a view on the stock, JBM Auto.
So, Mangalam, unfortunately, that stock is not under coverage, and I have not seen any particular news flows with regards to this stock, so I will not be able to comment.
All right, we take that point. For them, obviously, the order book that they have for e-buses, etc., would be an important one to track the OEM division and the component division. With that, we'll take a short break, come back on the other side. Pashupati Advani of Global Foray joins us on the other side. Welcome back. The Nifty continues to trade lower, 26,135 on the frontline index. Adani Group stocks, all of them actually are seeing some sell-off. So Adani Ent is at the low point of trade. Adani Ports, which is doing well, up until 15-20 minutes ago, has now taken a bit of a nosedive. We've also seen some selling in a couple of these NBFCs. So Bajaj Finance, for instance, still holding in the green, but fairly off the highs right now for that stock. And even Shriram Finance had been doing well, still holding with a gain of almost 1.5%, but has corrected about 1.5% from the high. So half of its gains have been given up. On the other side, IT stocks are picking pace. So we have TCS, which has moved to the high point of trade, recovered almost 0.75%. Tech Mahindra is another one, which too has moved into the green, a recovery of almost 1% from the lows. So IT index still in the red, but TCS, there you have it, at the high point. And alongside that, Tech Mahindra comes up as well. But let's get in some top movers this hour. Let's go across to Hormaz, who's standing by at the big wall.
We're counting down to the Christmas holiday, but there are certain movers in the broader markets that are not in snooze mode whatsoever. 5 Paisa Capital is one such name. The biggest single day gain in over a month now. It's 8% higher. At one point was up around 10% as well. The gain in 4 out of the last 5 sessions now. We've had more than 20 lakh shares that have been traded on the stock. The 20-day average is less than 65,000 shares. So gains on very strong volumes. The stock has moved above its 50 and 100-day moving average, and the next level on the upside is the 200-day moving average, which comes at around 362. But the stock has had a disappointing year so far, down around 30% and it's turning out to be the worst calendar year since 2018. Likhita Infrastructure is another name that's done well today, 7% higher on this stock as well. The 4th straight day of up move, 12% in the last 4 sessions is what the stock has gained. Volumes are the highest since May, and close to 5 lakh shares have been traded on the stock. The 20-day average is less than 45,000 shares. So yet another mover on very strong volumes. But despite this move, the stock remains below its key moving averages. The first level on the upside is the 50-day moving average at 208, and then comes the 100 DMA, which comes at around 228. Now the stock, this one too, is down 40% so far this year, and is turning out to be the first negative year since it listed back in 2020. JBM Auto, we spoke about this in the morning. It's built on to those gains now, 13% higher on the stock. The top gainer on the Nifty 500, the biggest single day gain in 3 months. Here too is the 4th straight day of gains, and we have had more than 2.5 crore shares that have been traded on JBM Auto, now higher than the 20-day average, which is just over 3 lakh shares. And the stock has now moved above its 100-day moving average and its 200-day moving average, which was at 635 and 643 respectively. And the stock's down around 15% so far this year, and set for its first negative year after 2020. And lastly, all the commodity-related names, Hindustan Copper, Manappuram, IIFL, all of them doing well for gains of 5 to 7% in today's trade. And take a look at the volumes as well. Manappuram is at record highs, of course. Hindustan Copper is at levels last seen in 2010. Manappuram has had over 2 crore shares traded. Hindustan Copper has had over 4 crore shares traded, and all of them at least 5 to 7 times higher compared to their 20-day average. So strong going for a lot of these names.
Thank you very much for that. It's the first time I'm hearing of Likhita Infrastructure.
Yeah.
You've been in the company for so long, right? Did you know about it?
I know of the name. I've seen it buzz in, the volume buzzers and all of that and stuff, but never knew about the company.
So it lays oil and gas pipelines, and it helps with the city gas distribution networks, including the PNG connectivity. So I think some of their clients include a GAIL, IOC, ONGC, HPCL. So basically it caters in that. And I think the market capitalization is about 750, 800 crores. So it's not a very large company, but oil and gas pipes, that's what the company does. Thank you. Yeah.
No, I was just looking at some of the fundamentals as well. The cash flow from operating activity is 1 crore rupees all of last year.
Okay.
And the promoter's stake has reduced as well over the last few
How much
years.
is it now?
So, the promoters currently own about 70.2%. It has come off from much higher levels, and no, obviously, because it's a 700-800 crore market cap company, no notable investors, no funds, etc. as well. So yeah, that's what it is.
Well, that's the company in the spotlight on the back of price and volume action. Of course, these aren't recommendations that Hormuz is giving, but just highlighting some of the big movers that we've seen today. Unusual movers, let's call it that. Pashupati Advani, founder, chairman at Global Foray, is now joining in on the show. Pashupati, hi, afternoon, and thanks so much for joining in. Season's greetings to you.
Well, Merry Christmas. It looks like the market's also giving us Merry Christmas because it seems to be really quiet today.
Very quiet. It's just like waiting 35 minutes to go, and then you can start the celebration. So it's literally counting down. But what have you been up to over the last month, say in the month of December or November? Take us through some of the positions you've initiated, added on to.
So one of the things that I'm noticing and I'm not very happy about is that actually the two things that are not so great for the market. One is that there are a lot of IPOs, and in every IPO there are very large OFS and offers for sale. And out of that offers for sale, a large amount are foreigners. So they're actually taking their money out. That's number one. We've had a couple of crazy high valued issues, but that time will tell with what that valuation is going to look like. But we're seeing the foreigners take money off the table. Likewise, the second thing that I'm seeing is that generally FPIs are selling and they've had redemptions. I believe some of the money is going into China, some of it's going back to the US. So that is also causing some issues. And of course, we know about the Japan carry trade, which is beginning to unwind. So that's also taking some money out. So less liquidity in our markets is not good for our markets as a whole, which is why we've had sort of the index is doing okay, but the rest of the market seems to be having issues and just floating downwards. And the last couple of months, we've seen small caps and mid caps really taking the brunt of the selling. Rima?
Yes, got that. So the IPO pipeline still looks very robust. So it's unlikely the supply coming in from IPOs is going to abate. So that headwind perhaps will continue even in 2026. On the second headwind that you highlighted, that's on the FII outflows, which we've been nursing now for so many months. In fact, the most of 2025. Any evidence to suggest that that could turn because the earnings picture is looking a lot better? Maybe the other markets have run up too much. I mean, what's your own expectation?
Well, the thing is that our markets have done not so great if you look at performance in USD. In India, they've done all right. They're sort of higher, but the thing is in USD, the numbers are not there. So, we've got indifferent performance here. And with indifferent performance, you also have people, if they've invested in India and they're hedge funds, they're not going to make any fees. So, it's all in all, it's like very blah and very boring. And boring means people get itchy and like to pull their money out. But you did mention earlier about gold and silver. I mean, I think there's even a shift from gold to silver because it looks like silver batteries there's some technology move over there. So from lithium ion, we may be shifting to silver batteries, and that will make a huge demand for silver, which is why silver globally will do better than gold. And of course, gold is overshot all expectations because it looks like a lot of countries are wanting to get out of the USD and get into dollar instead. So that's another challenge that we're facing because that's not the share market. That's gold and silver.
You take that point, but some of these gold-backed names are doing extremely well. Manappuram Finance, for one, up nearly 7%. Wonder what's driving this move beyond just gold. Yeah, go ahead.
So the fact is that if you lend against gold, at the end of it all, if the gold is there, it's going up in value. So your default risk is going to go down. The RBI is also trying to put curbs on how you give gold and looking at people's incomes versus when they're giving more. But the reality is everyone's greedy. So if I come to you with 300 grams of gold, you're definitely going to give me a good loan, and you're not going to care how I'm going to be able to repay it because you've got the gold lying in your box. So that's the reason why all these gold finance companies are continuing to do well, because it looks like their loan loss, there won't be any loan losses because they've got adequate collateral, and it's reasonably quick collateral to be able to sell if required.
Right, understandable there. Thank you for explaining that. But, beyond that, what is it that you like, or something that is a theme you believe will play out in 2026?
So one theme I believe is going to play out in 2026 is going to be tough for IT companies. The fact of the matter is you've got Infosys with a buyback, and it's trading pretty much where it started when they announced it. So that's one thing. And, the thing is AI is coming in, and whatever you may say, AI is going to change the future. It's going to change everyone's lives. And I'm not so sure that the Indian companies are able to pivot fast enough to be able to take advantage of the AI requirement. Yes, we have businesses which are solid, which have contracts which are going to run, but this is going to be a slow thing where it's you have to pivot towards using your engineers to do AI. And I don't know if we have enough AI engineers. In America, it's a big thing. And now there's AGI, which is where AI engineers are coding and getting computers to code. So then there's even less requirement for people to code. So that is going to change, and I think that's going to hurt the IT sector. But it'll take a year or two. It's not going to happen immediately.
So this rally that we've seen in the Indian IT stocks at an index level more than 15% from October, you think that should be sold into?
Yeah, I think so. But the reality is that the rupee's also gone from 85 to 90. So, that alone is, 6%, 7%? That's half of it. And, there is some continuation, but, we're seeing companies when they're coming with guidance, and we'll see it again in January when the results come, they're being very cautious about the guidance. And, I think that's that's the real worry, because there's no expectation of new, fresh pockets of business in new areas. I don't see that. I may be wrong, but I'm not seeing it.
Pashupati, any stocks that you've purchased recently that you can share?
Not really. I mean, I've got some old faithfuls. I actually feel that, the infrastructure part is where we need to be. Government is spending, private infrastructure is also starting to spend. So, you have to be in, and the country is continuing to grow. So you need cement, you need steel, you need, all the basic chemicals, construction chemicals. All those sectors are fine. We can continue to be in it. We'll make money in rupees. I don't know whether we'll make money in dollars or not. And as I said, I think silver and gold are still worth a bet. And, yes, recently I have purchased a gold ETF.
Okay. And silver ETF?
Not yet. I think I missed that one, but I'm thinking about it. It'll probably be next month.
Any consumer tech names that, because people believe in the long-term story, the opportunity. All that most people want is an entry point into any of these consumer names.
So the challenge that we've had is that we've had consumer names trading at nice high PEs of 25 and 30, and the same companies, and you can take Hindustan Lever as a prime example. Today, I don't think the margins are there. The margins are lower. The rate of growth is lower. I don't know why, but it's not showing up. And therefore, you're getting indifferent performance in top line consumer names. And so, you're a little bit wary of being in that sector, because I don't know why it's not actually performing the way it used to perform, because I believe the margins are, low single digits, and, that's not good for that whole sector.
Actually, I was asking about consumer tech, but, out of time, these new age tech companies, because you've spoken about Paytm in the past, but there have been a lot more by recent listings. But we'll take that discussion forward another day because we're out of time. Pashupati, thank you once again for joining in, and season's greetings to you. Let's move on now. Mangalam has actually moved over to the F&O desk, and he's got his eye on the futures and options trends.
Well, if you look at it, the market's at the low point of today's trading session so far. All the frontline indices are seeing a bit of a sell-off. If you look at even the advanced decline ratio, that tells you that there are more number of stocks which are declining than the number of stocks which are advancing. And it's actually reversed from the morning, where we had around 1,700 stocks which were in the green, for about 1,000 which were in the red, and now we have around 1,700 stocks which are in the red, for about 1,200 which are in the green as well. So there is this momentum shift that happened somewhere around that 1 p.m. mark. Though we do have a couple of outperformers. The Nifty Bank is the one that really is a bit of a pain point right now. Crossing past that 20-day moving average on the Nifty Bank is something that the market has to do and close above that as well. Until that happens, a lot of the call writers are back in action as well. So we started out by seeing some writing at the 26,200 call. The premium on that one this morning was close to around 115 rupees. So those call writers have made a decent meal of the near 40-45 rupees premium decline that we've seen on that one. And then those call writers are seeing some writing at the 26,150 call as well. For a premium of 50 rupees, it tells you that maybe the street is working with 26,200 as stiff resistance. At the lower level, the 26,200 put writers have covered their positions, and that's caused the markets to fall a little more. And now put writing continues, however, at 26,000, with a firm belief that the 20-day moving average on the Nifty, which is 2619, will hold out and will continue to play out.
Got that. Here's what we'll do. Slip into a very short break. Thank you very much for that, Mangalam. Come join me back at the table now. We'll get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Nimesh joins in, and a few BTST calls.
Berger Paints is doing extremely well. We pointed the stock out at the start of the show, and now it's completely moved to the high point of trade with a gain of over 2%. Bharti Hexacom is the other one, which is spiking right now. Bharti Hexacom, actually, the move has happened just in the last minute or so. The intraday chart comes up for you. It's a vertical spike that we've seen on Bharti Hexacom. There it has come almost a percent higher, and most of the gains coming by just immediately. Good time to get in, buy today, sell day after tomorrow, sort of, or, you know, a sell today or buy day after tomorrow call from Mitesh. Mitesh, what's your tomorrow trade?
Pharma is breaking out of a consolidation, so BTST here with the stop at 75.80, a target of 76.50. And NHPC is the other one. BTST here with a stop just below levels of 77.25 and a target of 79 can be looked at.
Right. Okay, Mitesh, thanks a lot for that. Let's get in Coal India as well. The stock itself for the second straight day. Vivek joins in. Vivek, listings of its arms, value unlocking out there.
Absolutely right. So value unlocking is what the street is quite excited about as far as Coal India is concerned. Has cooled off a little bit from the day's highest point, but remember, it's been moving continuously for the last few trading sessions. Yesterday was one of the top Nifty gainers. So what exactly has transpired? Remember, the company has received the board's in-principle approval for listing two of its large entities. Number one is Mahanadi Coalfields, and the second one is Southeastern Coalfields. Remember, both of these entities together account for over 52% of Coal India's production. Coal India, remember, has already initiated listing process of the other two arms, which is Bharat Coking Coal, as well as Central Mine Planning, as well as Design Institute. So over 52% of the company will now have two separate listed entities. Remember, on December 16, Coal Ministry had asked the company to take steps for listing of two of its subsidiaries, and on December 23rd, that is yesterday, the board gave the in-principle approval. What is the way forward? The Coal India will now communicate to the Coal Ministry for submission to DIPAM, where the divestment decision will finally take place, where the street is clearly now factoring in and pricing in the value unlocking via listing of its own subsidiaries.
Thank you very much for that. It's holding up in the green, up close to about 0.5%. Trent is your top gainer. Apollo Hospitals is moving up. So these are some stocks where you are seeing some frontline action. But let's talk about Pine Labs. That's positive in trade on the back of a Jefferies note. Vinny's here to tell us what they had to say.
Hi, good afternoon. So Jefferies has initiated coverage on Pine Labs, a buy rating, target price of 300 rupees per share. Now, what they're saying is, obviously, we know that Pine Labs is the leading digital payments and at stores as well as in prepaid cards. They believe that the company can actually achieve a 23% CAGR growth in terms of revenue over FY25 to FY28. Network with brands, merchants, as well as banks with tech platform is a key moat for the company going forward as well. And they believe that building a share in online payments and international issuing business will also be a driver for the company. Apart from that, they believe operating efficiencies can be something that will lift the EBIT adjusted margins for the company from 15% to 27% by FY28. That's the estimates that are coming from Jefferies. And obviously, valuations are at a discount versus peers, so they find it attractive as well. And that could lead to a re-rating in terms for the company if there is consistent growth. So they're positive on this one, initiated coverage with a buy rating.
All right, that's about Pine Labs. Meanwhile, look at Meesho. Another recent listing has done extremely well post-listing, but the last couple of days were rough. We saw a lot of supply come by. And today from the lows, we've seen good recovery on that stock, actually. It's currently at the high point once again, closer to the 200 rupee mark now, as against the earlier levels where we saw the stock drop a fair bit from their highs. The IT stocks, however, continue to be on our radar. The US has announced major changes to the H-1B program, replacing the long-standing random lottery system with a weighted selection process. Rima, you said that this would be a negative, but not so much, and that's exactly how it's playing out.
So no material disruption to the business operations for IT companies. So let's just to run you through the news. Earlier, H-1B selection was done by a pure lottery. So whether you are an entry-level applicant or a highly specialized, a very expensive employee and engineer, your chances of getting an H-1B visa were the same. But just on account of the fact that there were more applications for entry level, there was sheer volume of it, resulted in a disproportionately large number of H-1B visas going to the entry level. This the US did not like. They said it was an abuse. What they want is that because you have a limited quota of H-1B visa, 65,000 plus another additional 20,000. They want it to go towards the more skilled people who are bringing value to America. So therefore, this H-1B selection process has changed from a lottery, random selection, to one where there is a higher weightage assigned to more skilled people, higher wages. So basically, simply put, whatever it means is that if you are a more skilled employee, higher wages, you have a higher probability of getting an H-1B visa. And this also ties in with the fact that Trump recently, via a proclamation, increased the visa cost for $100,000. That anyway eliminated the entry-level jobs for using H-1B for entry level. So it ties in with what the reform Donald Trump wants to make. Now, when it comes to the impact on Indian IT companies, sentiment negative, but compared to back in the day, a decade ago or 2 decades ago, where a large portion of the US business was staffed, because Indian IT companies got 65-70% of their revenues from US. And on those US projects, you always had to staff some employees. And those were done with Indian employees going on H-1B visa. But compared to what it was, say, a decade ago, Indian companies have been slowly reducing the dependence on H-1B visa. And it started in Trump's first term, when the visa rejection rates went up a lot, the processing, documentation, it just got very uncertain. And since then, Indian companies have decided to lower their dependence on H-1B visa. And right now, it's not too many, as you can see on your screen. HCL Tech has said a few hundred. For TCS, it was about 500. Infosys used the word minority when we asked them in the press conference post Q2. Wipro has said 250 H-1B visas over 5 years. Tech Mahindra says it's less than 1% of the global workforce. So yes, in a nutshell, it is negative. But is it going to be a big disruptor to their business? No. Which is why you are seeing some pressure in Indian IT companies, but it's not that. There is a sharp downturn. Mayuresh Joshi, MarketSmith India, is now joining in. Mayuresh, your Santa gift to our viewers. Give us one stock that you like.
Afternoon, Rima. No, so ITC hotels, this is something that we continue holding in our local and global portfolios. Our sense is that hospitality as a space is geared up for good times over the next few quarters as well. For ITC hotels in particular, I think the numbers have been pretty encouraging in Q2. The expectations in terms of more keys getting added, both in terms of business keys, both in terms of spiritual tourism keys and leisure keys as well, across various locations over the next few years, increasing their footprint and thereby their key size as well. I think that is going to be significant going forward. On the existing run rate, the average, the revenue per average available room, I think that is exceeding 8,500. They'll also incrementally get GST benefits below 7,500 on a few of their properties. And therefore, as a construct, I think the space should do well. Within their service domains, F&B should probably also contribute reasonably. There are a lot of marriages planned in the first quarter of the next calendar year, and that should probably aid a lot of the leisure stroke F&B revenue as well. And therefore, in our opinion, I think the organized players can benefit quite significantly over the next few quarters, gain market share. Players like ITC Hotel, which have got a very clear path, Rima, in my opinion, and where ratings, ranking, institution holding, all the parameters that we look at canceling, all get fulfilled. So this is one stock that we continue holding, liking in both our global as well as domestic portfolio.
What about GVK? That's the one where we saw the recent deal this week, where the promoters will be buying about 24% stake from the Indian Hotels group. So promoters will be consolidating their holding to 75%. Since you look at the hotel space, what were your thoughts on this transaction? And that GVK at one point was considered to be the cheapest amongst the lot.
At one point, yes, but it has moved up. And therefore, I think it's reasonably priced as we speak, Rima. But I think the business prospects, as I said, for the industry as a whole look good. Where the locations of Taj GVK are primarily based, I think the expansions that they are probably doing is in the right direction as well. And therefore, they're expected to add significant hotel rooms or keys as we speak over the next few years. Obviously, the acquisition helps because it probably then starts aiding the overall consolidated revenues in their favor as well. And going forward as well, even for them, I think the average room rates, the revenue per available room, the expectations in terms of the utilization that they're carrying across their properties, whether it's Hyderabad, Secunderabad, the one near Mumbai airport, is doing reasonably well as well. And therefore, I think anybody holding that GVK, the rating rankings look fine, should continue holding. However, as I said, our picks within the space and the stocks that we continue holding remain ITC hotels and Lemon Tree.
All right, Mayuresh, just stay on. We'll get in, Nimesh to give us our favorite segment, D Street Chatter, an insight into dealing room chatter, a few tidbits about stocks that are up and about in trade as well. Nimesh, how many of the people are actually at dealing rooms right now?
Well, people are working Mangalam, so don't feel bad.
So are we.
So are we. So anyway, from a market perspective, again, a day of consolidation, so to speak, off days high. Again, the mid-cap index is looking weak, half a percent down. But let me tell you that there is a lot of traction in the broader market names for the last couple of days, and so is the case today as well. So not everything is lost in the broader market. There is a bit of momentum back, and looks like that momentum is likely to play out towards the end of this year. So that's a broad feedback as far as dealing room is concerned. Flows again is a mixed day, not much to read into. Some blocks might have an impact on the flows as well. The sector which stands out today is clearly NBFCs. Obviously for some reason, the entire space is buzzing in trade. The gold NBFCs are rightly so because of gold at record highs. But there is a bit of a spillover of the Shriram deal into other NBFC names as well. So that's one space which is well bid by larger institutions. So that's the space there. And the other sector which has been doing well this week is the railway and the defense theme. Not backed by institutional buying, but there is a bit of interest. I guess something to do with the pre-budget rally in those names. So that sector is continuing to do well. But the sector which stands out today to me in terms of institutional buying is the NBFC space.
Indeed. So did you manage to pick up any buzz on individual stocks, Nimesh?
Well, it's a couple of names I'll add to my list from today's chatter point of view. The first name is KNR Construction. That's been buzzing the last couple of days and on good volumes as well. The buzz is that maybe the company is very close to monetizing one of the road assets, and that's going to be the trigger to watch out as far as KNR Construction is concerned. So that's the first name. The second name is Tata Motors PV. We've seen a big outperformance in Tata Motors CV after the demerger in the last 2-3 weeks. Now, I guess there is a bit of accumulation happening in Tata Motors PV as well. Remember, the big delivery of the new launch is going to happen maybe end of this week. So that's something to track in Tata Motors PV. But I understand some domestic mutual funds have started accumulating at this price. The third name is Hemant Surgical. It's a small name, but if recall, one of the large HNI investor has actually bought nearly 25% stake in warrants. It's an SME company, but I understand the company is likely to bag a large order win very soon. So that's the reason why the stock is locked at 5% upper circuit today. And the last is Trend. Even that is buzzing in trade today and on good volumes. For the last couple of days, the volumes have picked up. There is delivery-based buying happening. And the City is anticipating that after two quarters of weak performance, Q3 might see a bit of an uptake, and hence we're seeing a bit of buying at lower levels in Trend as well.
Okay, this week it's up 5.5%.
Yeah, in fact, I was just thinking of pointing that out as a stocks plot, but good one, Nimesh, on Trent. I believe that there was a large fund which was selling Trent, offloading some of their Trent portfolio, and over the last week or so, 2 weeks or so, that selling has been exhausted, so it's been absorbed, and now lack of supply and, as Nimesh said, some buying from the FI desks has caused the stock to move higher. But just before we slip into that short break, I'd like to pull up Titan as well, and let's see whether Titan, the street reacts to the possible news that Titan may actually finally enter the lab-grown diamond space with, Peon, which is a brand that they've gone ahead and trademarked. And trademark doesn't necessarily equate to a launch, but there have been pictures of a repurposed store somewhere as well in the country.
So now there could be a full-fledged store.
Lab-grown by Titan. So let's see how that goes. Take a short break, come back, continue our conversation with Mayuresh, perhaps pose this question to Mayuresh himself.
Welcome back. We've got 5 minutes to go before the markets close for trade, and the Nifty seems to be ending below 26,150 at the session high, which was 26,236. Markets were just 100 points away from their all-time high levels, but the mood turned, and finally, markets closing a tad bit sluggish. The Nifty banked below the 20-day moving average. IT, Pharma came in for profit booking. In conversation with Mayuresh on the last leg of the show, Mayuresh, on Castrol, do you have any thoughts on the deal between BP and Castrol? And will there be that open offer for the Indian minority shareholders? If it comes through, what should we do?
No, so didn't get a chance, Rima, sorry for looking at the deal. But as a business, I think it obviously depends in terms of the dynamics, in terms of how base oil prices are expected to play out. Structurally, looking at how crude is probably placed at this juncture, and even if you do the adjustments in terms of the inventory for a quarter or two, I think the kind of volume growth that can come through can be significant. However, from a pure deal perspective, didn't probably get a chance to probably look at it.
Okay, not a chance. VIP, that promoter transfer is complete. Do you think VIP will start outperforming with multiples at the helm?
So I think this is largely done and dusted with. Now it all boils down to earnings delivery, Rima, earnestly. So I think how the new strategic changes bring about volume growth, whether you're seeing any kind of a product mix come through. They've already diversified a large part of their product mix. But how does that probably translate into better volumes, better realizations, better selling prices, and therefore better top line with improved margins? I think that strategic earnings sprint is now what the markets will look at. So with this move, I think a large part of the overhang is now behind us. The markets will now look forward for any positiveness that comes through from Q3 numbers, any commentary thereof. And if numbers start coming through, I think the entire valuation gap that was existing between VIP and its peers, I think that should slowly and steadily start receding as we head into the next few quarters, subject to that numbers to do.
So bet on it or don't bet on it, VIP, because the stock is still around the deal price.
Not right now, as I said. I think it's better to wait for Q3 numbers, look at how the numbers, the fine print is, look at management commentary, what their strategic vision is, and then probably take a call.
We were just, chatting earlier with our guest, and he said he bought a gold ETF. Is that something you would recommend?
As part of portfolio diversification, it should be part and parcel. And I've always maintained.
At this level?
At a small allocation, I think your SIPs in gold ETF should continue.
Okay. Even at this level, it's not that people should try and time it. That should continue, a gold SIP.
Absolutely.
Got that. And silver, would you have a view? A silver ETF?
So again, I think the fundamental behind that in terms of US declaring it as a critical material, I saw a few videos where Samsung is introducing new smartphones, their smart watches, where silver component will go in higher proportions as an industrial commodity. I think it is going to be of great use for applications worldwide, and therefore a lot of global institutions, corporations, governments adding to the critical list is probably jamming up the supplies as we speak. And therefore, I think the kind of price moves that you're seeing at this juncture, my own sense is that a large part of the move is done. But you never know, Rima, because I think over exuberance and excesses always play out.
Yeah. Trend, Nimesh was just telling us that maybe Q3 will be a better quarter in terms of growth, and investors, some of the smart investors seem to be betting on it. Have you had any channel checks on Trend's performance in the coming quarters?
So things are improving. And again, I think the kind of Judaization strategy, as Mangalam always puts it, that Trend has probably deployed, I think that should work in its favor. However, I think when we are doing a check between Trend, Vishal Mega Mart, V-Mart as an example, I think we found that the latter players, something like a VMM, Vishal Mega Mart, V-Mart, probably might offer a little bit of a more value, because I think as discretionary spending comes back, specifically in tier 3, tier 4 towns, the average ticket sizes that they're operating out of, a marginal increase in those ticket sizes and volumes will mean a hell lot in terms of their earnings and earnings estimates put forward on FY28 numbers. So ratings, rankings are looking far better for Vishal Mega Mart and V-Mart Retail. Clear disclaimer, we own these stocks in our local and global portfolios.
I remember in the past you talking about Shriram Finance. I think that was also a part of your portfolio, and you must have reaped the benefits of it. But Mayuresh, We'll, thank you on that note. Just counting down to today's close. Sluggish close. The Nifty ends down 50 points at 26,133 from the session high. The Nifty ends lower by 100 points. Sensex down 150 points. Some profit booking visible in the morning. We opened up in the green with modest gains, but the trend turned. Today was also the Sensex expiry. The Nifty Bank saw pressure around the 20-day moving average, so came in for profit booking. IT was weak. The Nifty index, IT index, losing more than about 0.5%. The H1B overhaul hurting, and pharmaceutical names like Sun Pharma, Dr. Reddy's under pressure. Other notable drags include from Interglobe Aviation and Adani Enterprise, Tata Motors Passenger Vehicles, HUL, ONGC and Reliance Industries. On the way up, trend stood out. Shriram Finance has now added 8% so far this week. Apollo Hospitals closed up smartly. Bajaj Auto, Ultratech Cement, Maruti and Coal India, where they're looking to monetize some of the subsidiaries, also had a positive close. Mid-cap index down 400 points, negative close there, with the advanced decline ratio favoring the stocks declining. We'll take your leave on the show. Thank you for watching. Merry Christmas to you. But don't go anywhere. On the other side is Markets Forward.
Indian equities erase early gains to end near the day's lows, with the Nifty slipping below 26,150. Heavyweight pressure from Reliance Industries and IT stocks weighed on benchmark indices. Mid-caps underperformed frontline indices.
IT stocks decline after US overhauls the lottery system for H-1B visas to prioritize higher paid, higher skilled workers. A US judge also upholds the $1 lakh fee on the H-1B visa, rejecting a challenge from big tech companies.
The Dilip Piramal family sells 26% stake in luggage maker VIP Industries to private equity firm Multiples through block deals. Multiples also announces a mandatory open offer for additional 26% stake. The Piramal family will continue to hold a 20% stake. Shares of VIP rallied in trade.
Hello, good afternoon and good evening. Thank you so much for tuning in to Markets Forward on CNBC TV18. This is your go-to show where we get you all the key data points that you should keep in mind for gearing up for the next trading session. While tomorrow is going to be a holiday, we'll watch out for the trading session on Friday. I'm Vinny Motiwala. With me is my colleague Vivek Iyer as well. Vivek, it's been a day, a bit of a muted, lackluster day. Nonetheless, we are holding on to 26,100 levels today. So I don't think there's much to complain on that front.
That's right, Vinny, and not too many cues to take away from today's trading session. Remember, most of the US markets as well as European markets, either are working, only for half of a session or, in some cases completely shut. And tomorrow, lot of markets will be closed, including ours. So on the back of that, very muted participation, so thinly traded session is how you're looking at. However, especially in the second half of the trading session, whatever gains we had, we did give up. And Nifty, like you mentioned, actually ended near the day's lowest point. But we have a lot lined up on our show. Let's take a look at what is in it at the end of today's trading show. We start with the top movers and shakers of the day with Hormaz. We break down why stocks of IT companies, VIP Industries, Coal India and Pine Labs were in focus today. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. Now on to our first segment of the day. Hormaz Fataka joins in now from the big wall with the top movers and shakers.
Not a very good day for the broader markets, at least. They came off the highs of the day very sharply, and IT stocks were sulking in today's session all through the day. And by the time it was closed, they managed to extend some of those losses. Coforge and Persistent. Coforge now second straight day of losses, now is down almost 7.5% in the last two sessions. Persistent, Emphasis, Wipro also ending closer to the lows of the day. And commodity stocks did well today as prices continue to rally in the global markets. Hindustan Copper is at levels last seen since 2010. Hindustan Zinc is at 52-week highs. Manappuram and Muthoot both hit record highs today. Muthoot could not sustain at those levels, but Manappuram did ensure that it ended at record high levels. Now, the newsmakers, other than these, VIP Industries, of course, 11% higher after that big block deal. Bharat Dynamics after the successful missile launch, and Sula and GM Breweries basking in the festive cheer, almost 3 to 8% higher in today's session. Remember, Sula was higher by 7 to 8% in yesterday's trade as well. The stocks that ended at a 52-week high in today's session, look at names like Prime Focus, Sandur Manganese, IIFL Finance, of course, with the gold price rally doing well, gaining another 5% in today's session as well. And lastly, for stocks that did not do well in today's session, of course, there were plenty of names. Sandhar Tech was one such. Kajaria Ceramics, Prism Johnson giving up some of yesterday's gains, and HCC after the closure of the rights issue giving up some of those gains, a 5% downtick in today's session.
Okay, thank you so much for that, Hormaz. But let's bring on board our experts for today. We have Mayuresh Joshi of William O'Neill as well as Richard Jain of Motilal Oswal Financial Services to take the questions on the markets as well as individual stocks. Mayuresh as well as Richard, thank you so much for joining us on the show, and festive greetings to both of you all. Richard, in terms of the levels, 26,100, we've managed to hold on to that level. It is a sort of a lackluster day that we saw coming in for the markets. But from the level, if we keep sustaining 26,100 now, what is it that we should watch out for on Friday, the next week as well?
Yeah, very good afternoon, Vinny. Firstly, festive greetings to you, your entire team, and all the viewers. We believe that markets support base has been shifting higher in this recent consolidation. If you look at since the month of October, last 3 months, the index has shown more of a time-wise correction as the Nifty has consolidated within a range, whereas the broader market, especially the small caps, have already seen a price-wise corrective phase. Now, last 3-4 trading sessions, when we witnessed 2 or 3 sessions of FIs buying, INR showing a pullback move from that 91 to 89.5, dollar index going down. So I think these are all the factors that should lead to a resumption of the positive trend in the index and some pullback move, at least in the broader markets, from this recent corrective phase. So downside seems to be limited from here on. The immediate support of 20 DEMA for Nifty plays around 26,000, 25,980. So I think I would watch out for 26,000 being an important support for now. Until this level is intact, I think in next few trading sessions we should head higher towards the 26,325, which was the recent swing high, and above that even 26,500 could be seen. So overall biasness remains positive. It's a buy on dip market. Any kind of such decline, if we get towards 26,000, that should be used as a buying opportunity for the index.
Well, thank you so much, Ruchit, for your view as far as the index is concerned. Buy on dip is what you're advocating. But moving on, IT stocks were in focus today after the United States overhauled its H-1B visa program. The Trump administration replaced the lottery system to prioritize higher skills and wages. Moreover, a U.S. court has also upheld the $100,000 fee as far as H-1B visas are concerned. Rima now joins in to decode the impact on the Indian IT sector.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term 1, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
Okay, Mayuresh, a quick take in terms of the IT sector, if I can get it before we jump to the next talk.
I think as Rima pointed out, I think there will be an impact, but a marginal one at that, because I think a lot of companies have had these risk mitigating strategies in place ever since Trump's first term was, and that is a few years back. And therefore, I think there will be an increased component in in the offshore exercise. Also, I think the lateral hiring which is happening on site or the localized hiring has ramped up, and therefore I think the impact might be felt, but I think very, very marginally for a whole host of companies. So I think if this is one fact which might hurt IT companies' earnings, sentimentally yes, marginally yes, but not structurally.
Well, completely take that point on board. Richard, I also wanted a view as far as the charts are concerned. The Nifty IT index, has been quite volatile. Do you feel that there is now a bottom in place? Do you feel IT can outperform in calendar year 2026?
It seems that the price-wise corrective phase for the Nifty IT index is behind us, and what we have seen in the month of November, especially the second half of November and December, there has been a consistent up move with any dips. The Nifty IT index is not breaking its 20-day EMA, which from a short to medium term perspective is a positive sign. And the good thing is that if you look at the index components, then most of the volumes are flowing into the large cap names, be it Infosys, TCS, Wipro, Tech Mahindra. So I think the mid and small cap IT stocks, one should be very selective within that. But the large cap space looks good. So, and if the large cap moves higher, then definitely that would keep the momentum intact in the index as well.
Okay, let's move on then and talk about the next stock that was in focus today. That was VIP Industries. The shares surged after 26% of its equity changed hands. As per sources, the Piramal family has completed its stake sale to multiples PE. After today's transaction, the promoter family still owns around 20% stake in the company. Let's go across to Mangalam to take us through those details.
Indeed, VIP was a big mover in today's trading session as 26% equity traded hands this morning, and it was understood that it was Dilip Piramal's family selling that 26% to multiples. Why is that? Because remember, way back in July, the deal was announced where VIP Industries promoters would sell 32% stake to multiples and a bunch of others at 388 rupees per share. That after the first tranche of the deal was done with Dilip Piramal's family selling 6% stake to multiples. And then there was the mandatory open offer for which 26% money was supposed to be deposited by multiples in an escrow account. Once that amount was released and the entire open offer process was done, that left that 26% to be traded, and that's exactly what took place, where 26% of the Piramal family stake has now been transferred. So 26 plus 6, 32% as per the deal. The deal is now complete. What remains to be seen now is what is the turnaround plan for VIP by multiples. At the same time, look at what they are going to do in terms of aggressive competition, in the face of aggressive competition, and will they invest more money in VIP? The stock has been an underperformer and they've been losing not only money for shareholders but also in the marketplace. What brings back the glory days for VIP is something that the street will be eyeing.
Well, thank you so much, Mangalam, for joining in with all of those details, exclusive details as far as VIP Industries is concerned. Well, with that, it's time for a quick break. But Mahesh as well as Rajat, we request you to hold on. We'll get you more reports and top corporate voices on the other side. Welcome back to Markets Forward. Well, Coal India's board has given an in-principle approval to list two of its subsidiaries, which is Mahanidhi Coalfields as well as Southeastern Coalfields. Remember, this is an important development for the company given the fact that this helps Coal India unlock significant value by listing two of its largest companies or largest subsidiaries. Remember, both of them together account for almost 52% of Coal India's total production. So remember, Coal India has already initiated listing process of its other two arms, which is Bharat Coking Coal as well as Central Mine Planning as well as Design Institute. On December 16th, the Coal Ministry had asked Coal India to take steps for the listing of these two subsidiaries, and on 23rd December, quite soon, the board gave an in-principle approval for listing of its two subsidiaries. Now, in terms of the way forward, the company will now communicate to Coal Ministry for submission of this particular proposal to the Divestment Ministry, which is DIPAM, and the listing of subsidiaries will then be subject to regulatory approvals. Vinny, if you notice, Coal India has been consistently performing quite well. Yeah. Yesterday was the top Nifty gainer. Today, too, managed to end the day with marginal gain.
Absolutely managed to end the day with marginal gains, and it's done well overall in the last few days, like you're mentioning as well. But another stock today, that opened up strongly in the green was Pine Labs. Now, this came in after Jefferies had initiated coverage on this one. Buy rating, target price of 300 rupees per share. And what the firm actually expects, or what are their views for Jefferies, for Pine Labs? They believe, one, obviously we know that Pine Labs is actually the leading digital player in terms of digital payments as well as at stores and in terms of prepaid cards as well. Now, obviously, the network with brands, merchants, banks, with tech platforms are going to be the key driver for the company, or the key upper hand that they would have versus their peers as well. Now, Jefferies believes that the company can actually achieve around a 23% CAGR growth over the next 3 years, as well as in terms of valuation, it's at a discount versus peers. So they believe there's a chance for a re-rating there if there is consistent growth that one sees for Pine Lab. They also believe operating efficiencies can lift the adjusted margins from 15% to 27% by FY28. So they're quite positive on this one. And that is why today we saw the stock see a sharp spike up. Then by the end of the day, marginal gains is what it managed to close with. Mayuresh, let me take this question to you. What are your thoughts that come in for Pine Labs? Obviously, one of those recent listings. But is that something interesting that you find in these new listings? Would you look at it as well?
I think it's part and parcel of the entire digital ecosystem, Vinny. And therefore, I think the expectations in terms of the landscape and the opportunities, surely in terms of market opportunities and the market size that is available is pretty huge. At the same time, if you probably look at how the peers are shaping up, this is one area where I think innovations, disruptions will keep on happening. And therefore, one needs to keep a very close eye in terms of their competitors and whether there is any cost-effective element that is being brought forth by any unlisted players, startups, or competitors. So I think they're in a good space, no two ways about it. It's forming a good base as we see it at Markets with India. The risk factors, as I said, remain in terms of there are no entry barriers for this, and therefore competition might at any point creep in. And if they've got a better or a superior product at a much cheaper cost, I think you've got serious pricing issues on your hand. So I think a wait and watch on that side.
Well, thank you so much for that, Mayuresh. Well, Ruchit, if we could go back to Coal India for a bit, that particular stock after a while has managed to do quite well and today managed to close about the 400 level mark. Do you see further upside from current levels? Of course, the fundamental trigger of value unlocking is something the street is looking forward to.
Yes, in fact, last 1 year, if you see, then the stock had remained in a very narrow range. And post that 1 year of time-wise correction, what we can say, the stock has given a breakout this week, that too with very good volumes in last couple of trading sessions. Generally, such breakouts with high volumes leads to a good trended phase. And going ahead, we can expect levels around 425 to 430, which technically would be the next resistance. I think if any existing long positions are there, then definitely one should hold on to this stock. And if we get any minor dips around 390, those would be good opportunities to create fresh longs as well for potential up move towards 430.
Okay, surely we will be keeping an eye out on those levels over there for Coal India. But Mayuresh as well as Ruchit, thank you so much for joining us and festive greetings to you all. Have a great Christmas as well. See you all in the next working day. But on that note now, let's talk about another stock that was in focus today. That is shares of Ajanta Pharma. That surged in trade after the company signed an in-licensing agreement with Biocon for semaglutide under the deal. Now, Biocon will supply semaglutide to Ajanta Pharma for exclusive marketing in 23 countries.
Ground presence in this market. We are looking forward to getting a good market share for this product in these countries. So India, the product is going to go off patent in March 26, which is just 3 months away. And we plan to be one of the first wave launches in the country.
Well, they plan to be amongst one of the first wave launches in the country. That's the word coming in from Ajanta Pharma. But moving on, Aadhar Housing Finance's management is expecting second half of this year to outperform the first half with an AUM growth of 20 to 22% for this fiscal. The company is expected to pass on the benefits of rate cuts by the end of the third quarter and pegs the cost of funds to be around 7.5 to 7.8%. The management added that it is well capitalized for the next 2.5 to 3 years and expects its growth momentum to continue.
Okay, and with that, actually, it's a wrap on this edition of Markets Forward on CNBC TV18. Festive greetings to all our viewers. Thank you so much for tuning in, but don't go anywhere. After the break, we'll come back. We're winding down Markets Forward, so goodbye from Vivek, myself, but we'll come back with more news and updates on CNBC TV18.
Hello and welcome to Business 360. I'm Arundhati Ramnan, and here's wishing all of our viewers a very Merry Christmas. These are the headlines that we're tracking for you this evening. Sensex and Nifty fail to hold early gains and end with marginal losses. Mid-caps see sharper cuts. Rupee weakens against the dollar and moves closer to the 90 mark. Gold's golden run continues as the yellow metal touches new highs for the 51st time this year, registers its highest annual gain since 1979, clocks returns of 71%. Silver and platinum touch new highs. IT stocks decline after US overhauls the lottery system for H-1B visas to prioritize higher paid and higher skilled workers. A US judge also upholds the $100,000 fee on H-1B visas, rejecting a challenge from big tech companies. Energy giant BP will sell 65% stake in Castrol to investment firm Stonepeak for $6 billion. BP values Castrol at $10 billion and retains a 20% stake. Castrol India shares rally after Stonepeak announces a tender offer for shareholders. Sunil Mittal's Bharti Enterprises and PE giant Warburg Pincus to collectively pick up 49% stake in home appliances major Haier India. Reports peg the deal at around 15,000 crore rupees. China-based Haier Group will retain 49% stake post the transaction, while Haier India's management team will hold remaining the 2%. The Dilip Piramal family sells 26% stake in luggage maker VIP Industries to private equity firm Multiples through block deals. Multiples also announces a mandatory open offer for additional 26% stake. The Piramal family will continue to hold a 20% stake. Shares of VIP rally in trade. Delhi air quality improves slightly but hovers in the poor category. Delhi High Court hears a PIL seeking directions to classify air purifiers as medical devices, directs GST Council to consider slashing its GST rate. Union Minister Gadkari says he develops a throat infection if he stays in Delhi for 2 days. Union Cabinet approves 12,000 crore rupees to expand the Delhi Metro. The fifth phase of expansion will add 1 new station and take the network past 400 kilometers. Russian strikes on Ukraine's energy grid leaves thousands without electricity on the eve of Christmas. 3 people, including 2 traffic police officers, killed in Moscow after a second car explosion this week. The Thackeray's bury the hatchet 20 years after going separate ways. Uddhav Thackeray and Raj Thackeray joined hands to announce an alliance just days before the civic body elections in Mumbai. ISRO's heaviest rocket till date blasts off to space. The rocket is carrying a US communications satellite weighing 6,100 kilograms. We will come to all of that and much more in just a bit. But first to Dalal Street, which failed to hold opening gains to end near the day's low. All key indices end in the red. Nifty closed below the 26,150 mark, dragged lower by Reliance and IT stocks. Mid-caps underperformed the blue chips, with that index falling over 0.5%. In the money market, the rupee weakened by over 13 paise against the dollar as it moves closer to the 90 mark once again. 10-year bond prices rallied in trade after RBI announced government bond purchase worth 2 lakh crore rupees and a $10 billion forex swap. The record run in commodities continues as geopolitical tensions fuel safe haven buying. Gold smashes records for the 51st time this year, clocking its largest annual gain since 1979, with returns of 71% in 2025. Silver and platinum follow suit, hitting fresh record highs yet again. Manisha Gupta is here with all of those details. Manisha?
Oh yes, 2025 shone and sparkled with the kind of all-time highs that we saw in gold, silver, platinum, copper, and a multi-year highs in various other metals as well. I'll start with silver first because it has been making all-time highs on a regular basis now, has gained up by 40% in last 1 month. It is up by 150% in last 1 year. So we have seen silver prices start with this year with 29.5. It's trading at 72.5 right now. The Indian silver prices started with 87,000. It's trading at 2,30,000 right now. So that's the kind of run-up that we have seen, because it's a fifth straight year of deficit, this one, and the next 2 years could be deficit as well. Industrial demand is strong, so is the investment demand via ETFs, and physical buying has all taken the silver prices on the higher side, with expectations that you could be looking at higher highs in next year. Talk about gold then, and all-time highs onto this one. 51 times is what gold has done, made an all-time high in this year. We are up by 72% on this one. Very strong central bank buying. Dollar index has multi-month highs. We also are looking at geopolitical tensions, whether it's about US, Venezuela, Russia, Ukraine, Iran, Israel, all of that supportive. And add to that the fact that the central bank buying has been very, very on the stronger side there. Platinum, it's a third year of deficit onto this one. Platinum is up by 163% in this year. It also is about very strong Chinese buying in platinum in sense of bars and coins. China also started platinum futures trading in this year, as further elevating the prices therein. And then it's about copper, all-time highs yet again here, $12,000 a ton on LME. Copper is also trading at all-time highs in China, in US, and the Indian markets also. There are mining concerns in Chile, Peru, and Indonesia supporting prices. And then there are tariff concerns. US also already is levying 50% tariffs on semi-finished copper products. US is looking at, or reiterated, that they will put tariffs also on copper-grade ore when it comes to copper in the first quarter of 2026, also supporting prices from where we stand.
So that record run in commodities is continuing. Thank you so much for those details, Manisha. Shifting focus to the United States, the Department of Homeland Security has announced an overhaul of the long-standing lottery system for H-1B visas. It will replace it with a weighted selection model that prioritizes higher paid and higher skilled workers. The new change will take effect from February 27th and will apply to the FY 2027 H-1B registration season. Currently, around 70% of all H-1B visas are issued to entry-level and qualified wage workers, while only 30% of visas are issued to highly paid skilled workers. In a separate development, a U.S. judge upheld a $100,000 fee to process H-1B visa applications. The U.S. Chamber of Commerce, a lobby group that represents big tech companies, had challenged the fee announced in September. However, the judge ruled that the Trump administration's move is lawful. Stocks from the IT pack like Infosys, TCS, and Wipro declined in today's trading session following the H-1B visa overhaul announcement. Reema Tendulkar joins us now with all of those details. Reema, how is this move likely to impact the Indian IT ecosystem going forward?
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
All right, Reema, many thanks for those details. The U.S. State Department has said it will deny visas to 5 people, including former European Union Commissioner Thierry Breton. The Trump administration alleged that these 5 tried to pressurize American social media companies to censor opposing viewpoints. However, Breton rejected the claims, calling it a witch hunt. US officials describe Breton as a key architect of the EU's Digital Services Act, which requires stricter content moderation by online platforms. US President Donald Trump has claimed that his tariff policies drove the country's stronger than expected GDP growth in the third quarter. The country's GDP rose at an annualized rate of 4.3%, the fastest pace in 2 years. In a social media post, Trump wrote that the economic numbers will only get better. In a separate post, Trump said he would only consider candidates for Federal Reserve Chairman who agree with his views on interest rates. He wrote, and I quote, "I want my new Fed chairman to lower interest rates if the market is doing well, not destroy the market for no reason whatsoever," end of quote. And speaking of tariffs, the US government is set to increase tariffs on Chinese semiconductor imports from June 2027. In an overnight federal filing, officials said that the initial tariff rate on the imports will be 0 for 18 months. The delay in tariffs signals a cooling off in trade tensions between Beijing and Washington. Energy giant BP has agreed to sell 65% stake in Castrol to investment firm Stonepeak for $6 billion. The deal values the business at $10.1 billion, including debt. Post the deal, BP will retain a minority stake via a joint venture. Castrol India gained nearly 9% after the deal was announced, but ended the day at 2% in the green. Sonal Bhutra joins us now with all of those details. Sonal, take us through the contours of this deal.
It is a big deal which is announced because BP or British Petroleum has announced they will be selling 65% stake in Castrol to Stonepeak at an enterprise value of $10 billion. That is the enterprise value. The consideration here is $6 billion, which will include accelerated dividend payments and will be fully utilized to reduce net debt. The other things that will include $0.8 billion of prepayment of future dividend income over medium to short term, and also other adjustments that the company will have in its books. They add in their statement that a significant proportion of Castrol GV minority interests relate to Castrol India Limited, which is the listed entity, and the stock surged after that statement as well. And it is important because remember, Castrol Limited holds 51% stake in Castrol India Limited. They say that there'll be a joint venture now where 35% will be with British Petroleum and 65% will be with Stonepeak, and they do not rule out any further stake sale as well. They indicate that following the 2-year lock-in period, they can actually sell the remaining 35% stake as well in Castrol Limited. So that is an important statement coming in. The transaction expected to complete by end of 2026, subject to regulatory approvals, and the minority interests include the stake that they have in India, Vietnam, Saudi Arabia, Thailand, and other jurisdictions as well. This is a release which is coming from BP and Castrol Limited. But from Bloomberg, we are also getting details that Stonepeak has announced tender offer to Castrol India holders, and it will tender the process after the main transaction gets over, that is the 65% stake sale. So Castrol India Limited remains in focus because of this big transaction that's happening at the parent front and will be on our radar as well.
So BP sells stake in Castrol. Thank you so much for those details, Sonal. Coal India ended in the green after the company's board gave an in-principle nod to list 2 of its subsidiaries. The company said that the proposed listing of Mahanadi Coalfields and Southeastern Coalfields is still awaiting regulatory approval. The announcement comes just days after the Coal Ministry advised Coal India to take concrete steps to ensure listing of its subsidiaries in FY27. Bharti Enterprises and PE giant Warburg Pincus will collectively pick up 49% stake in home appliances major Haier India. Reports have pegged the deal at around 15,000 crore rupees. China-based Haier Group will retain 49% stake post the transaction, while Haier India's management team will hold the remaining 2%. Promoters of luggage manufacturer VIP has completed the transfer of their stake to Multiples PE in a large block deal. 3.68 crore shares changed hands in 2 large transactions today. VIP's promoters had entered into an agreement this July to sell up to 32% stake to Multiples PE and others. The stock rallied close to 18% in trade. Mangalam Malu is here with all of those details. Mangalam?
Indeed, VIP was a big mover in today's trading session as 26% equity traded hands this morning, and it was understood that it was Dilip Piramal's family selling that 26% to Multiples. Why is that? Because remember, way back in July, the deal was announced where VIP Industries promoters would sell 32% stake to Multiples and a bunch of others at 388 rupees per share. But after the first tranche of the deal was done with Dilip Piramal family selling 6% stake to multiples. And then there was the mandatory open offer for which 26% money was supposed to be deposited by multiples in an escrow account. Once that amount was released and the entire open offer process was done, that left that 26% to be traded, and that's exactly what took place, where 26% of the Piramal family stake has now been transferred. So 26 plus 6, 32% as per the deal. The deal is now complete. What remains to be seen now is what is the turnaround plan for VIP by multiples. At the same time, look at what they are going to do in terms of aggressive competition, in the face of aggressive competition, and will they invest more money in VIP? The stock has been an underperformer and they've been losing not only money for shareholders but also in the marketplace. What brings back the glory days for VIP is something that the street will be eyeing.
All right, Mangalam, many thanks for those details. Now, the war between Russia and Ukraine rages on. Kiev has accused Russia of launching a massive overnight attack using over 600 drones and 30 missiles. The strikes have killed at least 3 people and caused widespread power cuts ahead of Christmas. Meanwhile, Russia said it hit Ukrainian energy facilities and other transport infrastructure used by the military. 3 people, including 2 police officers, were killed in an explosion in Moscow. According to Russian authorities, 2 traffic police saw a suspicious individual near a police car, and when they approached him, an explosive device was detonated. Officials have launched a criminal case to investigate the incident. Libya's army chief was killed when the private jet he was traveling in crashed shortly after takeoff. The plane crashed near Ankara in Turkey. The crash claimed the lives of all those on board, including 4 senior Libyan military officers and 3 crew members. According to officials, preliminary findings have ruled out sabotage and suggested technical malfunction. On that note, it is time for us to head into a short break. But coming up, the survivor of the 2017 Unnao rape case, along with her mother, staged a protest at India Gate against the Delhi High Court's decision to grant bail to former BJP MLA Kuldeep Singh Sengar. More details on that in just a bit. Stay tuned. Welcome back. You're still with us on Business 360. Amid the national capital's pollution crisis, the Delhi High Court has directed the GST Council to consider lowering or removing the GST on air purifiers at the earliest. This comes after a public interest litigation filed before the court sought to classify air purifiers as medical devices. The plea argued that they are essential and not luxury items. Currently, air purifiers face a GST of 18%. The plea seeks to reduce it to 5%, citing the right to life and clean air. The court will hear the case again on December 26th. Speaking at an event, Union Transport Minister Nitin Gadkari said that he develops a throat infection if he stays in Delhi for 2 days.
आज सबसे बड़ा राष्ट्रवाद कोई होगा उदय जी तो देश के इंपोर्ट को कम करना और एक्सपोर्ट को बढ़ाना क्या परिस्थिति बनी है हमारी मैं 2 दिन मुश्किल से रहता हूं इन्फेक्शन हो गया ये दिल्ली पूरा प्रदूषण से त्रस्त है क्यों है मैं ट्रांसपोर्ट मंत्री हूं 40% हमारे कारण होता है
The 2017 Unnao rape survivor has said that she would move the Supreme Court against the Delhi High Court's decision to suspend the jail term of expelled BJP leader Kuldeep Sengar, currently serving life imprisonment. Speaking at India Gate, the survivor said the bail order has left her and her family shocked and terrified.
हमको न्याय चाहिए हम सरकार से यही गुहार लगा आपको रास्ते में क्यों उतार दिया सर पता नहीं क्यों उतार दिया रास्ते में हमको नहीं मालूम है कि हमको मरवाना चाहते हैं सिक्योरिटी वाले भी मिलके आप मदर हैं आप ऑर्डर के बाद सर मेरी लड़की कहाँ है लड़की मेरी गाड़ी में सीआरपीएफ कैद करके ले गई सर हम आपसे कोर्ट से यही गुहार लगाना चाहते हैं कुलदीप सेंगर को बेल मिल चुकी है सर कुलदीप सेंगर को बेल मिल चुकी है उनकी बेल कैंसिल की जाए नहीं हम सब लोग अपनी जान दे देंगे घर नहीं जाएंगे वापस होके
Archana Solanki joins us now to break down the Delhi High Court order. Archana?
Well, Arundhati, the visuals that the entire country witnessed this morning have actually created a storm. A rape survivor being dragged and pulled away by cops. This happened after the Delhi High Court granted bail to former BJP MLA Kuldeep Sengar in the 2017 Unnao rape case after suspending his life sentence. Well, the case is about the kidnapping and rape of a 17-year-old girl in Uttar Pradesh's Unnao. The then-sitting BJP MLA Kuldeep Singh Sengar was convicted of the rape and was also found guilty in the death of the girl's father in judicial custody. The case came to light after the survivor attempted to set herself on fire outside Chief Minister Yogi Adityanath's residence in April 2018, alleging the police had refused to register her case. Now, after the Delhi High Court's order yesterday, the survivor and her mother staged a protest at India Gate, during which they were first dragged and then detained by the police. The survivor has alleged that Kuldeep Singh Sengar has been released because of the upcoming elections. The Delhi High Court also directed Sengar not to come within a 5-kilometer radius of the survivor's house and not threaten her or her mother because there were concerns about their safety. The big question, why did the Delhi High Court grant him bail? The answer lies in the technicality of the POCSO Act, which is India's special law to protect children under the age of 18 from sexual assault and harassment. Now, Sengar was sentenced to life imprisonment in December 2019 by a Delhi trial court under Section 376(2) rape of the IPC and Section 5 and 6 of the POCSO Act for raping a minor. The case was probed by the CBI. The basis for releasing Sengar is the court's finding that the offence of aggravated penetrative sexual assault under the POCSO Act was not made out against him. Let me simplify. Section 5 of the POCSO Act defines the offence of aggravated penetrative sexual assault by an authority figure like a police officer or a member of the armed forces, basically somebody who's a public servant. The judges of the Delhi High Court said that this is not applicable in the present case as an MLA is not defined as a public servant and therefore cannot be sentenced for the remainder of his life or 20 years in this case as the punishment carries. The court also said that he has already served the minimum punishment of 7 years that a person can be given under Section 4 of the POCSO Act. As of November 2014, Sengar has spent around 7 years and 5 months in jail. Well, he's currently lodged in jail and will remain in jail as he's also serving a 10-year sentence in the custodial death case of the rape survivor's father. Her mother, the rape survivor's mother, has said that she will move the Supreme Court.
All right, Archana, thank you so much for taking us through all of those details. But moving on, it was a historic moment for India as the country's heaviest launch vehicle, popularly dubbed as Bahubali, has safely placed a massive 6.1-ton US satellite into the orbit. The rocket took off from Sriharikota in Andhra Pradesh. After a flight journey of about 15 minutes, the spacecraft Bluebird Block 2, riding piggyback on the rocket, got separated and reached its intended orbit. India has granted no objection certificate to two new airlines just days after the Indigo cancellation crisis left over 9 lakh passengers stranded across the country. Aviation Minister Ram Mohan Naidu tweeted last night that 2 new airlines have been given the NOC, taking the total number to 3. But this is only the first step, and these proposed airlines have no aircraft and face a long road to take off. Madhya Mujawar is here to explain why. Madhya?
Well, 3 airlines getting new NOC. Let me clarify the aviation minister's recent tweet, because that has created the impression that multiple new airlines are set to enter Indian skies soon. But the reality on ground is far more complex. Getting a no objection certificate or NOC is just the first step and not a clearance to start flying. Let me explain what the minister's tweet really means and why launching an airline in India is extremely difficult. Over the last week, the minister says he met teams from Shank Air, Al Hind Air and Fly Express. And so far in 2024, 3 airlines have received NOCs. Kerala-based Air Kerala was the first one to get a NOC in early 2024. Shank Air already has an NOC. Al Hind Air also had an NOC, but it registered as a separate entity for the airline and got a new NOC last week that the aviation minister was referring to in his tweet. Fly Express, based in South India, is the latest entrant to get an NOC. But an NOC does not mean that flights are imminent. These airlines are aiming, the airlines that got NOC in 2024 were aiming to start operations in mid-2025, but none has a confirmed launch timeline now. All 3 are still non-operational, and there's a reason for that. Paperwork alone doesn't get planes into the air. To actually launch operations, an airline needs aircraft and an air operator permit from the DGC. And this is where most startups are getting stuck. One startup promoter has told CNBC TV18 today that they spent over 30 crore rupees already on offices and hiring key post holders, but they're struggling to get aircraft. Why? That's the key question, because lessors, the promoter told us, are demanding around 100 crores as security deposit and proof of 500 crore rupees in their bank as guarantees. So what these startups are expecting from the government is some backing so that the lessors become more confident about leasing aircraft to Indian Airlines. Now remember, during the Go First bankruptcy, lessors had a long legal battle with banks and other stakeholders as no one was releasing the aircraft due to pending dues by the airline. So that explains why leasing to Indian Airlines becomes risky for them. So while the government's intent to encourage more airlines is clear, and India doesn't have a shortage of aspiring airlines, it has a shortage of aircraft access, capital and lessor confidence. So until those challenges are addressed, an NOC remains just a document and not a takeoff clearance.
All right, Madhya, thank you for clarifying what it means to start a new airline in India. But with that, it is a wrap on this edition of Business 360. More news and updates coming up on the other side. Stay tuned.
Let's Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surabhi Upadhyay. Can you believe it? 2025, just like that, is coming to an end. And it's that time of the year where we look back, sort of a little bit of nostalgia takes over. This year, a little bit of pain takes over because a lot of people, when they look back at their portfolio performance over the last 1 year, perhaps would not be entirely happy. But that's why the conversation on the show becomes very, very important. In fact, we're doing a two-part. This is a two-part conversation. First part today, the next part will be next week. And the whole idea is to rewind back and look at extremely important lessons in personal finance that 2025 has taught us. And then we'll get to 26, always with some optimism, and talk about some interesting money-making ideas, wealth-generating ideas that you can keep in mind for the new year. And to help us do all of this, two of our best friends on Let's Talk Money. You keep hearing them through the year. And here they are once again to wrap up the proceedings for 25. Feroz Aziz of Anand Rathi Private Wealth and Mohit Gang of Moneyfront. Gentlemen, thank you so much. First of all, Feroz and Mohit, let me start by wishing both of you season's greetings. And let me start with a vote of gratitude. You've been our guiding lights through this year, the last many, many years. So on behalf of all the viewers, first of all, a big thank you to you both.
Thank you so much. Thank you,
Surabhi. It's such a pleasure and honor.
And I'm so happy that you have not yet taken off on your New Year holiday. And you're here to give us some more wealth ideas.
Just in time.
Just in time, right? So that's the thing. Gentlemen, as you heard the introduction as well, I really thought that as I reflected back, yes, we may not have had the best returns, but I think we've got some invaluable investing and wealth management lessons this year. Whether it is diversification, whether it's patience, keeping the faith, so much. What comes to mind when you just reflect back at the year that's closing down? Mohit?
Okay, so look, I think honestly the year hasn't been easy, as you rightly mentioned, for equity investors. For any investor who was very well diversified, had exposure to different asset classes, perhaps this was a year where he thought he's gone right. I think there are very few years where you get vindicated by the markets in terms of diversification, having exposure to different asset classes. And I think this was an year of vindication of all the personal finance guys, you, me, everyone alike, who have been shouting at the top of their lungs that why is diversification
asset
needed?
allocation.
Absolutely, absolutely. So it all went right. From an equity market perspective, honestly, I think a very, very modest year. Large caps, I think barely a couple of large cap funds have beaten the benchmark, around 7.5 or 9% kind of return till date from Nifty 50 index per se. Mid caps, a low 5-6% kind of a return. Again, handful of funds beating the benchmark, and small caps a negative 7-8% kind of return, and bulk of the funds beating the index, but hardly one or two giving a positive return or just about flat on 0 or 1% kind of return. So yes, there's nothing home to write about, barring large caps and barring Nifty 50 this year, from my perspective.
Oh yeah, absolutely. I mean, on the equity side, the less said, the better maybe. Feroz, what about you? I mean, what comes to mind as you go back to client conversations, interactions, and everything that 2025 threw up?
Surabhi, firstly, I'm gracious as well because I'm in the business of managing money for HNI. That's a few, right? Reaching out the masses and trying to give back to the Indian Awam, as the population you call, is the only ways to do it through electronic medium like a popular one like yours helps. So I'm very grateful, point one. And of course, the season's greetings, my season's greeting as well. I personally think there are about 4-5 things which have really gone down as a learning for me. I can take you through them during the show, but I think the first one I'll start with is courage pays off. Courage pays off, and I don't believe that equity has not delivered. Why? Because gold, there is only one price. At best, you will say 22 carat, 24 carat. Silver has one price. Right? Debt has largely very, very narrow 7-8% kind of a return. Real estate is a divergent asset class. Equity is the most divergent asset class. I have a client portfolio which has done 18% last year. There's a client portfolio which has done 5% last year.
Okay.
Both operate in the same India. What distinguished? They have the same goddamn advisor, right? Or a distributor. But the difference in performance is because of courage, not because of my company's great advice or something. Right? One guy, in equity markets gave you 3 opportunities this year.
To buy.
Then
one was when the Trump tariff tantrum hit us, right?
Before that also, during the budget and post that, on 8th or 9th of March, we saw 22,000 again. I went on a couple of channels and said, if I have 1 more years of bonuses coming, I would leverage and advance my payments, because if I get 10%, 12% correction, almost 15% correction from peak, now I wanted Nifty at 0. What am I waiting for, right? So I think exhibiting courage rationally, mathematically pays off. And I'm not buying some Sartoria stock. I'm buying mutual fund. Now their courage complemented with a risk-free, low risk instrument in equity works very well. So first learning is, don't go by the headline number. You can still make money in equity, because equity implies 6,000 stocks, 900 mutual funds.
Okay, but you need to pick among those thousands of stocks and the hundreds of funds, and that's where the art and science of it lies. And we'll get to that, but keep patience. Patience was another important lesson that the market did teach us this year. So let's talk about the equity underperformance. And yes, I mean, unless you bought in at those dips that Feroz was speaking of, and you were in the right kind of funds, chances are you were just disappointed. And I know, Mohit, you did some basic sort of run through in terms of the mutual fund underperformance. Yeah. So what are the numbers throw up for the year? Underperformance vis-a-vis even the benchmark.
Yeah. Look, so I broadly agree with what Feroz has been saying, that equity from a long-term perspective remains the best asset class. And if you have the courage to take the dip at the right points, perhaps I think 7th April was the day when you actually saw 21,800 on Nifty, and if you bought on that levels, you've still well in the money, right? Having said which, there are very far and few investors who are sitting on liquidity and cash piles in those kind of times, and at that point in time, everyone is waiting for a new low, and very few actually dare to come in the markets. But yes, that's theory and practice, right? So when it comes to equity performances, look, honestly, what I see last year is true market commentary and play, which means that passives have done exceedingly well as compared to actives. That's my takeaway one when it comes to equity funds. As I told you, there are only 2 active large cap equity funds which have beaten the benchmark index, which is Nifty 50, right? So it's a telltale.
Which ones were these? Do you remember?
I think, if I'm not wrong, it's HDFC, and there's one more. I'm missing the name, but yes, I can share those names later. But there are only 2 active large cap funds which have beaten the benchmark. There are, I think, only 5 active mid cap funds which have beaten the benchmark mid cap 150 index. So the signs of beating the benchmark is getting tougher and tougher by the day as the mutual fund size increases, as the AUM soars, to figure out those zones
and as the
of
market
alpha.
starts getting range bound.
Absolutely. In a range bound market, it's getting very tough, Surbi. But when you have a one-sided trending momentum based market, then you have cases galore of funds beating indices,
The
right?
index,
So I'm not advocating for a minute that you move away from active to passive, but I'm just saying market cycles will teach you both the lessons. And you can't run away from one and just adopt a particular single-minded cycle that, okay, I'll only do active, because India is still a largely fund manager-based alpha-generating market, right? So you have to have a mix of both, and you can't solely rely on equities, because given the way equities have performed this year, and the biggest sign for me is the lessons which small caps have taught. 2023-24, massive years for small caps. People kind of hoarded the small cap funds all across. You saw the largest amount of SIP money was going into small cap funds. It still continues to go there, right? And on the back of last 2 years of performance, if you see this year, it's a negative 7% kind of a return from the overall category, and there is hardly any small cap fund which has given a positive return this year. So it's a root shock for investors, but it's a very, I would say it's a blessing in disguise, a good lesson that you can't just put all your eggs in one market cap and an aggressive style.
You know, let's pull up some of the graphics which will illustrate the point. So the first lesson that we've learned is that you've got to be courageous. You've got to buy when the market is falling. You've got to keep those SIPs going. That's lesson number 1. Lesson number 2, chasing past returns doesn't always work. And let's pull up the small cap funds. We'll just get the table up. So there's a DSP small cap fund, there's a Bandhan small cap fund. These are some funds that Mohit just picked up, simply to illustrate the point that if you're going to look at short-term returns, rear view last 1 year, then obviously these funds are, down between 1% to some of them. The HSBC small cap is down almost 12%. But then if you're going to stay the course, 3 years, 5 years, that is when the returns start looking much better. So then patience and not simply chasing past returns for a quick buck. That seems to be the very clear lesson 2. But in this, let's just take that active-passive debate a little forward. And with years of, having conversations with Feroz, I know that he's still very much a big believer in active management. He's not one for passives. But Feroz, Mohit does raise a very valid point, right? Because if the market is continuing to be range-bound,
and your own data threw up the kind of divergences in one index. One stock is up 50%, even on the Nifty. You know, one stock is down 50%. Tata Motors is down 50%. Shriram Finance is up 60%. So the divergence in the index is also pretty stark. At the same time, picking the right winners is getting more and more difficult because the overall market is not giving you that momentum tailwind. So then where do you stand on the active-passive debate, the right mix now?
I've done my mistakes. I came to that conclusion that active ka khatam ho gaya time. And I'll tell you how I got a rap on my knuckles 3 times in my career. Okay, and so many of my clients. I'll come to that. See, firstly, on the courage bit, see, if there was just a 7th April dip, I won't say courage helped. Market languished out of the last 12 months at 22,000-23,000 for 7-8 months out of those. If it just went to 21,700, it stayed there for 1 hour and then it closed at 22,300 on the Liberation Day as called by Mr. Trump. That people didn't buy at 21,700, I guess, I know, right? But if you give you 4 months and you abhi bhi aap himmat juta nahi pa rahe ho, to aankade dekhne ka mauka mila. You got the time to see. Surabhi, at least 12 times, 16 times, right? Then you bring in some degree of mathematics. Second, and when do you get the courage also, I want to say. How do you get courage? Now, my clients are actually courageous. Why? In COVID year, Anand Rathi was one of the few distributors which purchased equity, whereas 1.5 lakh crores was sold from equity. It's because I tell the client markets will fall 15% every year. Before taking the check, if I said 2 lakh Sensex, if there's 5% fall, he'll panic. If I say every year it falls 14.73, that is the fall is there. Now, if you still have the courage, cut the check, otherwise keep the money in an FT. Then it's difficult to get the money, but when the money comes, it stays. How do you get courage also, I'm telling you. Look at the data. Now coming to passive and active debate. Okay, passive, I wrote off active practically. If you saw any of the shows in 2019, my model portfolio had underperformed Nifty by 9% in 2018.
And it was largely based on active funds.
It was all active funds. So the kind of hammering I got from my clients, I itself said, "Yaar, ye active chhod do. Agar naukri rakhni hai." Right? This is the kind of mentality. And then I was almost gearing towards that and saying that passive is the way to go. 2020 came. I made alpha of 12%. Then came 2021, alpha of 8%. 2022, negative alpha of 4%. 2023, FY24, okay, large part of FI calendar year 23 because I see FIs, 14% again beating Nifty. So this has happened several times that you almost say that this year says that actives are over. There are 4-5 years. Just go look at the data. Worst active years, worst time where out of the 967 total funds, 665 active funds, any year where there were minimum beating, the next year could have been the year back for active. And then when I backward calculated what is making this happen, in years where FI outflows are there, becomes difficult for active to beat it. Right? That's one thing which seems like a hypothesis worth testing. I'm still testing.
So right now, what are you saying between active and passive?
I'm saying active will be very, very good. 6 months later, 1 year later, my model portfolio goes with only one objective. I want to beat Nifty after my commission of 1%, 4% per annum. I've done that for 11.5 years in 82 decisions. I think last year was not so good. This calendar year was not so good. But I think in the next 1-2 years, you will see alphas over Nifty superseding. And how that happens is FI coming back.
So well, can the Indian fund, fund selection establishment, fund management establishment deliver? Well, that's the hope because both our experts say that you do need both. While Mohit is, in favor of passives, we have Feroz, who still very much is a believer in active funds. Now, which are the funds? We'll get to that in just a bit. Right now, a break. But on the other side, the other big lesson, gold. You can't ignore it. If you didn't have it, you have FOMO. Now people are chasing gold. Is that the right approach? We'll find out what to do with gold and silver in 2026.
Let's talk money. talk money.
Welcome back. You're with us on this special edition of Let's Talk Money. As you can see, I've got Feroz as well as Mohit. We're winding down the year, all set to welcome in 2026. Looking back for some very important personal finance lessons that the year has taught us, and then looking forward to new wealth creation ideas. So let's continue our conversation, gentlemen. Gold and silver. I never thought when the year started that it will be the biggest point of debate when it came to personal finance, right? It's defied gravity. Some will say it's defied logic. It started with central banks buying more gold, and at that point it made sense. Underlying strong demand from a very strong buyer. But then I guess it just has moved on to becoming the biggest FOMO trade of all time. I know Feroz has never been a big voter in favor of gold. He still likes equities. So I'll come to that. But Mohit, you start first, because whoever didn't have enough exposure to gold really felt very silly this year.
Surbhi, I think God's been kind on us in that sense that in September of 24, we gave a very big, bold shout out to all our clients, asking them, actually screaming at the top of our lungs to get into silver. And I think that trade has played out exceedingly well. It absolutely is I think it's a revolt against the system. If you ask me what is gold today, gold is screaming revolt. Basically, the US M2 supply kind of defies all logic, and gold and silver will continue to find support. Gold because of the systemic failure globally in terms of the global debt which is spiraling and the way US is ballooning its balance sheet. And silver, I think, because incrementally we are finding a lot of silver industrial usage, and the ETF demand is soaring globally, right? Having said which, silver at 72 and gold at 4,500, the gold silver ratio now at almost 65. I think the ratio throughout the 21st century, Surbhi, was 69:1, right? And at 65:1, I think silver is now par for the course, or maybe has done a lot more than gold. Incrementally, if you ask me, I am more bullish on gold than on silver now from here on.
But you will recommend a
we
buy
still recommend.
even now?
Yes, absolutely. A 10 to 20% allocation amongst gold and silver, because for me this revolt is not a year kind of a revolution. It is, I think, a systemic thing which will shape out in next 5 to 7 years or over a decade, that the world monetary systems will be challenged. And I think globally we will be forced to figure out some alternative, and till the date we find an alternative, I think gold will be in screaming buy. Silver will keep gold over silver now, any day, and silver will keep following up with the bigger brother, but silver will also be more volatile going forward. So people have
buy
to be
more gold
extremely
in 2026.
Absolutely, that's my call.
Wow, that's a bold call. Very quickly, now you tell us, Feroz, why I think despite this big gold rush, you're still keeping the faith more in equities. And give us the counter view. I think that you've never been too much in favor of gold, but will some allocation, is that required?
See, I don't like some. I do either decisive decisions or don't.
Okay.
Because if you have debt in your portfolio, gold is 100 times better than debt. I've said this numerous times.
Okay.
My clients, if I manage 90 odd thousand crores of assets, only 2,000-3,000 crores is in debt, because that's for short-term money to be paid by my 12,000 client families. If I had 30,000 debt, be rest assured I would have had 15,000 of gold. Because gold can hands down beat debt, that's what data says. Rolling return of gold, 10-year rolling return, 1-year rolling return, I have all that data. The probability that gold beats 12% on a 10-year basis, rolling, not today, not 10 years of the exact past, rolling 10 years, is only 13.73%. If there is only 13.73% of rolling return of 10 years of beating 12%, do I have to say that equity will beat in the long run? It will. I put the same litmus test on equity, okay, which is Nifty. Nifty, that is 57.81%. If one has 57, 56, 58% probability, the other has 13 for a long-term investing, how do I go against math, being the CFO of the client? Second, now comes, should there be gold? Can gold be a hedge? Now, I tested that hypothesis.
Okay.
We listed down in the last 20 years, how many months has Nifty been negative? There are 103 months where Nifty has been negative. In those 103 months, how many of the months was gold positive?
Okay.
That is 66. So 2/3 of the time, when Nifty was down in the dumps, gold was positive. So does it have a hedging ability? Which 10 years back, if you ask me, I was shooing away gold as a hedging capability. But after looking at this data, I correct myself that it has the ability to hedge.
So maybe to that extent, it could have a place in the portfolio. So, okay.
But stagger the money. If you wish to move your debt to gold, stagger the money.
Stagger it
because there is 216 lakh tons mined. 54 to 69,000 tons to be still mined, identified gold reserves. 8,000 of it, 4% of it is owned by US.
Okay.
You can be very easily into a trap by these central governments of pump and dump.
Okay, so now as we are wrapping up the first part of this special year-end conversation, let's quickly recap. Simple bullets, lessons that the market, not just the Indian market, equities, gold, fixed income, lessons in wealth management that the market has taught us this year. Feroz, quickly.
What this taught us is our dependency of equity has come down dramatically. 5 worst years of FII flow. One of them, the worst year was this year. 1,55,692 crores is gone. Nifty's maximum drawdown is 8.71. Nifty from peak to trough fell 8.71. Last time was calendar year 22, where 1,21,000 went out.
Domestic money supporting the market.
Supporting the market. So point I'm trying to make is if you look at this data, it very clearly says we are more dependent on risk from domestic guys. On return, we are dependent on FI.
Okay, and very quickly, behavioral lessons, market lessons to keep in mind as we enter the new year.
I recall these lines of Remo Fernandez's song from 90s. Every morning a new revolution and every evening a better resolution, right? So the resolution this evening is that you continue to diversify very well across asset classes. Don't overdo anything. Don't chase the past glory. And
except if it's gold.
Because it always glitters, right? But yes, I think diversification and having a proper breakdown across all assets is the biggest lesson for me.
Okay, all right. Well, viewers, so we have to call it a wrap on this part of the conversation, but this is only part 1. Remember, same time, same place next week. The even more exciting part of this year-ender conversation comes up because that's when these two gentlemen will be giving us wealth ideas, specific funds to watch, fund managers to watch in 2026, and where you should be investing your money. So make sure you tune in, same time, same place next week.
Let's talk money.
Hello and welcome. You're watching News Center and I'm Parikshit Luthra. The United States has announced an overhaul of the lottery system for H-1B visas. The Department of Homeland Security will replace the long-standing system with a weighted selection model that prioritizes higher paid and higher skilled workers. The new change will take effect from February 27th and will apply to the FY27 H-1B cap registration season. The annual cap of 65,000 visas plus 20,000 for U.S. advanced degree holders remains unchanged. As per the U.S. Citizenship and Immigration Services, the random process was abused by employers seeking to import foreign workers at lower wages. The new selection process will favor applicants who strengthen America's competitiveness rather than undercutting domestic labor. Currently, around 70% of all H-1B visas are issued to entry-level and qualified wage workers, while only 30% of visas are issued to highly paid skilled workers. The U.S. decision could significantly impact India's IT industry. Companies like Tata Consultancy Services, Infosys and Wipro and others that have benefited from the program will have to reorient hiring strategy. In a separate development, a U.S. judge upheld the $100,000 fee to process H-1B visa applications. The U.S. Chamber of Commerce, a lobby group that represents big tech companies, had challenged the fee announced in September. However, the judge ruled that the Trump administration's move is lawful. To decode these developments, we're now joined by Rohit Bharadwaj, country head, India, Henley and Partners, Naveen Chopra, chairman, NN Chopra Consultants, and Sukanya Raman, country head, India, for Davies and Associates. Thank you very much for joining us. Mr. Chopra, let me begin by asking you, many of the IT companies have already been reducing the number of people they have on H-1B visas. So when you speak to the IT industry, on the face of it, they will say that the impact of these changes in the US will be minimal. Having said that, if you had to give some advice to someone looking to move to the United States on an H-1B, how will the new weighted system actually work as opposed to the lottery system earlier? Which are the kind of roles where perhaps there is a greater chance for you to get an H-1B visa?
At the beginning and end of the day, the ball is squarely in the court of the United States companies, who are the ones who feel the talent crunch. It is an absolute misnomer to say that the Indians or Chinese or anybody else is taking away U.S. jobs, because if you look at the data, and everything these days is about data. The unemployment rate in the United States is very, very low, which points to the fact that there is near full employment of people. Now, if the United States has been bringing in people, it's been bringing in people because there are not enough local talent available. And somewhere down the track, in the not too distant future, this thing is going to blow up in their own faces, and I'm quite certain of that. I've seen 3 or 4 such movements in different countries across the world, and this is going to happen in the United States also. Also, the people seem to forget, or Trump seems to forget, that we are living in a borderless world. So what are U.S. companies going to do? They already have presence and branches in multiple countries across the world. So if they are not going to be able to bring in people, they are going to carry on their work, and they will simply shift that work to other country domains. So other country domains will benefit. And as far as the Indian techies are concerned, I think that the only thing that will happen is that they will be shifting the domain. So rather than going to the United States, they might be heading towards Ireland or towards England or towards Singapore or other countries where the United States organizations have got their presence at similar salaries. So I don't really think that this is going to have any real long-term impact on Indian IT workers or any other class of workers or students for that matter. And it's just a matter of another 3 years or 3 years and 2 months when Baba Trump is out. The next administration, I think, will be more sensible. And during his administration, he's going to feel the pinch himself. I'm quite certain of this.
Yeah, I'm going to come back to you, sir. Sukanya, if I were to ask you, and I'm reading reports of people who have come back to India to get their H-1B visa stamped or renewed, and suddenly they get a message that your appointment has been cancelled or deferred late into 2026 or 2027. Many are calling this a trap, whereby you are forced to come to India for a renewal, and the moment you land, your appointment is cancelled. How many such cases are you seeing almost on a daily basis? And is there any kind of recourse that such people have?
Right. So unfortunately, this has happened only after they have landed in the US. So typically the law says if you have a valid extension petition, then you can stay in the US, meaning you need a visa to re-enter the United States. So they are in a position where it was planned many months ago when it was the holiday season. They'll come to India, get the passport stamped, and then travel back with the new validity. But what has now happened is their appointments have been cancelled and it has been rescheduled for mid of 2026 or late 2026, which means they are stranded in India, and we don't know how they will be, even whether they'll be allowed to work from India. And what it is, there is a lot of uncertainty upon their returning to the US. So some companies are, I've had a case where the client was called upon by their, one of the tech companies back to the US before his validity was expiring. It was a couple of days he had landed in the US, and he still had a validity of another week. So he had to immediately rush back to the US so that he can continue staying and working on his H-1B status. So it is very sad that there, a lot of people are in India, and some families are still in the US. Only the applicant is here. So, and then of course a lot of financial stuffs are also happening in terms of job, and there is a lot of uncertainty for their returning to the US.
Right. Rohit, are you also seeing this a lot when you speak to your clients? And what is your advice to people who have to return to India for visa renewals, visa stamping? What is the kind of advice you're giving them?
I just wanted to wish your viewers a Merry Christmas and a festive season and a Happy New Year. Well, I think, we are staying in a very unpredictable times at this moment. US, the last night upholding a certain judgment. Of course, the lobby which you mentioned would ideally look at and evaluate legal option. But I think broadly, the impact has been felt. In fact, today only in one of the channels, it might be your channel, where the stock of the major IT companies have actually fell a little bit today as well. I guess in terms of the for tech professionals, they now need to really rethink whether this is something which they want to evaluate, because as one of the gentleman mentioned, I think one door which at one end it closes, the other door will actually open. We've seen EU countries attractive and inviting more highly skilled entrepreneurs to kickstart or enhance their innovation bit. But from a specific US standpoint, right now, we do anticipate a slight rise for the inquiries for the EB-5, which is still pretty much active. In terms of the H-1B, of course, how the selection process will come into the existence and how that will impact employees will definitely, from the US standpoint, will be very, very selective. I mean, globally, the immigration policies are changing towards, I think it's pretty much a clear message that if you are evaluating, you need to be really, really high in terms of your skill. Again, in terms of the immigration changes, it's not just the US. We've also seen on Friday, Canada announcing that it is closing down their starter visa, which is the only direct pathway to permanent residency. So things are changing very rapidly in today's time. So people have to be really mindful and strategically when they're evaluating if the intention is to, look for opportunities for work, entrepreneurship outside. Having said that, we might see certain other changes in terms of the programs which is catering to the entrepreneurship and highly skilled in other jurisdictions as well.
Right. I'm going to come back to you, Rohit, but let me get in Mr. Chopra once again. Mr. Chopra, we're also seeing cases where applicants have returned to India for renewal or for their visa appointments. and this is also for new applicants, and suddenly you realize that your appointment was tomorrow, but it's been delayed by 6-7 months, or it's been delayed indefinitely. And this is because of the increased social media and online vetting of applicants that is now taking place. And the US State Department has clearly said that we'll take all the time that we need to vet such applications. What is your advice to students, to people looking to move abroad, to the US on H-1B visas? Do they have any kind of recourse? Are you seeing a lot of cases where people are losing their jobs as a result? Where companies are saying, sorry, we had this timeline for you, but now that your visa appointment has been pushed by about a year, we can't take you any longer?
There would be companies saying that, because no company is going to wait for an individual for that period of time. And as far as advice to students and others who are looking at overseas institutions or jobs is concerned, our advice was and it will continue to be that keep your private views to yourselves amongst your social groups, physical social groups. What is the need of posting them to the whole world? I mean, I don't understand this phenomena. This is pardon my French, but it's a bit asinine. So while the world was moving into the free speech and freedom of thought frame, it was okay. But people should have seen this coming. Given the scenario, I would say take down all your posts as fast as you can. Do not discuss your personal political views or views related to other governments. It is none of your business. If you're sitting at a party and or over dinner, you're welcome to speak whatever you want. But what is the need of posting it on social media, for God's sake? Stop doing that. And take down all your posts as fast as you can. I think that that should be the primary criterion. And also, as far as if the US visa has been delayed by 6 months or a year, well, look at the glass half full or plus again, that if you are qualified for a US company, which is amongst the top end, corporate world companies, that itself is a qualification plus point for you to start looking for jobs in other domains, in other countries. I mean, Europe is really opening up. Germany is really opening up. Netherlands is opening up. There are skill shortages happening there, and they are now at the beginning of the cycle, which UK was a few years ago, or USA was a few years ago.
Absolutely. So there is a lot of uncertainty. Keep plans open, keep options open, even as you're applying to the US. I'll request all our guests to stay with us. We're taking a short break, but we continue with this discussion on the changes to the H-1B regime when we return. Welcome back. We are decoding the significance of the US overhaul of the H-1B lottery system. They've literally scrapped it, and now there will be a wage-based system where higher wages and higher skilled people will be given priority. Rohit Bhardwaj of Henley Partners, Naveen Chopra of NN Chopra Consultants, and Sukanya Raman of Davies and Associates are with us. Sukanya, if I were to ask you, if there are people who've come to India for, say, for example, visa renewals, and they had a legal appointment, they had a confirmation of appointment on their email or on the US Embassy page, and suddenly their appointments gets cancelled and they're completely stranded. They don't know whether they'll be able to go back, whether they'll be able to take up a job again in their companies, whether they'll have to quit their job. Do such individuals have a legal recourse? The Indian government, whenever we've asked them about changes to the H-1B regime, they say that we are concerned, we take this up, but remember, it is the sovereign right of a country to change visa rules. Having said that, do such affected individuals have any kind of legal right? Are you advising them to take legal measures?
So at the moment, we do not have any solution for that, unfortunately, legally, primarily because this is what the embassy and the consulates want to kind of verify each applicant's social media profile, right? That is why they are taking some time to evaluate that, and based that they want to do the renewal or stamping. So it is a wait and watch game for now, unfortunately, for people who are stranded in India. But I think this delay, what we are seeing, that is to mid of 2026 or later 2027, is going to change eventually once the officers are also used to this process of social media verification. Is what we think is the only solution as we speak, but we don't know if things are going to get any better.
Right. Rohit, what is the average time that we are seeing for online social media vetting? For example, when it comes to student visas or H-1B visas, what is the average time for renewal that one is seeing?
I mean, it is taking time, and it's very difficult to estimate the exact timeline. But since as our business in the last 2-3 years, we have also expanded our education advisory side of our business. What I would like to comment about is that we are also seeing a lot of inquiries which are coming for non-US in terms of the international education space, because this year also has been in a kind of a volatile, as we are seeing a kind of rapid changes in certain policies in the Commonwealth and other nations as well.
Right. Mr. Chopra, if I were to ask you about a judgment by the US District Court, the District of Columbia, the court has upheld the US government and President Trump's decision to impose a $100,000 fee on new H-1B applicants. They said he's not exceeded his authority. This could be challenged further in the Supreme Court in the US. But having said that, do you feel there could be any changes to this process, or it could only get more complicated, and that would be your advice to your clients?
No, look, I mean, it's the U.S. Judgment is essentially saying that Trump and the government is within their rights to take the step that they've taken. There's nothing unlawful about it. Now, as far as appealing that is concerned, please understand, and if you're observing the U.S. scenario, you would know that there's a lot of opposition and growing opposition within the United States on Trump and Trump's policies. There is also, as I'm the violin I'm playing, which is that there's a little news item that is tucked away in today's paper, for example, saying that the U.S. economy has grown 4.3 or 4.7% or something like that. That's huge. For the United States economy to grow 4.3 or let's say 4.5%, it's a 30 trillion or 35 trillion economy. They've just added a trillion and a half to the economy. What's going to happen with that explosion? Where are the people going to come from to fuel that expansion and continue that momentum going? Artificial intelligence, yeah, sure. Artificial intelligence is going to take away some jobs and is going to make it more efficient. But artificial intelligence needs intelligent people to prompt to get the results. till such time as artificial intelligence actually develops the neural circuits of the human brain and starts to become independent, humans are absolutely going to be essential to keep on developing artificial intelligence and everything else. Factories get automated, but you still have to design the product. You still have to design the technology. And with that kind of economic growth, if the US is starting to experience that kind of economic growth, I mean, this policy is going to collapse. I mean, I don't think that it takes the genius to be able to assess or kind of look at that as a line of probability, because all you can talk is about lines of probability. Nothing is certain in today's world, if you know what I mean.
Right. And Mr. Chopra, one thing is clear, that there will be more legal challenges, but 2026 and immigration laws in the US will be full of uncertainty. And that's why, as all of you have pointed out, look at the brighter side. Look at places in Europe, in Canada for that matter, where you can move for education, where you can move for work purposes, and which are willing to open up their economies to Indian professionals. India and Russia have signed a migration mobility agreement, and possibly we will sign more such mobility agreements for skilled professionals with other nations as well. Thank you very much, Sukanya, Mr. Chopra and Rohit Bharadwaj for joining us on the program. That's all we had time for here on News Center. Goodbye and thanks for watching.
Hello and welcome to Rewind 2025. I'm Shireen Bhan. Tariffs and uncertainty over trade deals ensured that volatility was the only constant in global trade in 2025. And for India and Indian businesses, a source of significant heartburn. Abhimanyu Sharma reports that while the government fought to keep trade on an even keel and find new markets, a cheaper rupee has been one of the only comforts for exporters. And 2026 is likely to see much of the same unless the government effects a breakthrough in the India-US trade talks. Take a look.
"2025 started with the prospect of India striking lucrative trade deals with many nations across the world, including the United States. The ongoing Russia-Ukraine war, the Israel-Gaza conflict, sanctions on Russia, along with geopolitical tensions in the Red Sea pushed up freight costs for exporters. Despite uncertainties, India's total merchandise and services exports in FY25 hit an all-time high of $825.25 billion, a growth of 6.05% year-on-year from FY24's levels. But US President Donald Trump threw a spanner in the works, imposing tariffs on imports based on product and country of origin. In the second week of April, he announced global tariffs with a baseline of 10% across all imports and reciprocal tariffs on some countries, including a 26% tariff on India.
We get along with India very well, but India has, you have to understand, for many years it was a one-sided relationship. India was charging us tremendous tariffs, about the highest in the world. They were about the highest in the world. You know, everything they made, they'd send it in, pour it into our country. Therefore, it wouldn't be made here, which is a negative. But we would not send in anything because they were charging us 100% tariffs. And
a breather came soon after. Reciprocal tariffs were paused for a period of 90 days, even as talks for a bilateral trade agreement continued. Indian negotiators met with their American counterparts numerous times, even in person, and talk of a trade deal remained a low but steady hum. Then came the big jolt. On the 27th of August, President Trump blamed India for funding the Russian war on Ukraine by continuing to buy Russian oil. He hiked tariffs on India to 50%. India pushed back.
Somebody tells me tomorrow I can't be friends with the European Union, I won't accept that. Or somebody tells me tomorrow I can't work with Kenya, it's not acceptable to me. So I think we are all in it together. The decision whether to buy a particular product from a country is something that the entire world will have to take a call on.
As India and the US continued to engage with each other in a bid to arrive at a mutually agreeable and beneficial trade deal, India managed to conclude negotiations on some significant bilateral free trade agreements. It signed an FTA with the UK in July, though that is yet to come into effect. The government has also facilitated the opening up of a few new markets for Indian exporters, including Switzerland, Norway, Iceland and Liechtenstein, as the FTA with the European Free Trade Association came into effect in October, and the European Union approved imports from 102 fisheries establishments. In December, India and Oman completed negotiations for a comprehensive economic partnership agreement, under which Oman will provide India duty-free access to 98.08% of its tariff lines. This covers 99.38% of what India exports to Oman. More recently, India concluded negotiations for an FTA with New Zealand. While these came later, Indian exports still stood on firm, albeit fragile ground. In the first half of the FY26, India's exports rose 5.86%, led by a 9.34% rise in services exports and a 2.90% rise in merchandise exports. This was driven by electronic goods, engineering goods, drugs and pharmaceuticals, marine products, and rice, with Spain, Hong Kong, China, and the UAE proving to be strong markets. Though India's exports to the US also rose 13% year-on-year in the first half of the financial year, this included a lot of front-loading of exports as traders tried to beat the window before higher tariffs kicked in. But the brunt of higher US tariffs is being felt, especially in the export of labor-intensive areas like textiles and leather, which have a high dependence on the American market. And while talks continue, there is no definitive headway yet.
I've said many times that all agreements, all discussions have many diverse, many different angles, many dots have to be connected, and we never negotiate deals with deadlines.
To mitigate the hit from US tariff disruptions, the government also looked for other supportive measures. The Export Credit Guarantee Corporation upgraded the country ratings of 24 nations in September, reducing insurance costs and overexposure to markets affected by tariffs, protectionist policies, or restrictive market access. The fall in the rupee's value against the dollar also gave exporters some cushion, as did a mammoth GST rate rationalization exercise that gave producers more traction in the domestic market. The recently announced Export Promotion Mission, which aims to provide exporters with financial incentives in their quest for newer markets, is also designed to help.
भारत के किसान, भारत के मछुआरे, भारत के पशुपालक, उनसे जुड़ी किसी भी अहितकारी नीति के आगे मोदी दीवार बनके खड़ा है.
As 2026 dawns, talks for a trade deal with the US are still underway. Buzz of it being imminent crops up periodically, but as people say, nothing's certain till the dotted line is signed.
Right now, we are engaged with not only negotiating a bilateral trade agreement, which definitely with a country like United States will take a lot of time, because trade agreements are very wide-ranging agreements these days with a lot of issues, not only market access issues, which are negotiated under the umbrella. But at the same time, we are also engaged in a protracted negotiations on a framework trade deal, which will try to address the reciprocal tariff challenge that the Indian exporters today face. So these are two separate parallel negotiations going on.
India is also engaged in negotiations with the 27-member European Union, the Russia-led Eurasian Economic Union, the 5-member Brazil-led Mercosur bloc, Chile, Peru, and Maldives. Terms of reference have also been finalized for trade deals with Israel, Qatar, and the 6-member Gulf Cooperation Council. In addition, an FTA review is underway with the ASEAN bloc, and expanded FTAs are being considered with Australia and the UAE. None of these may materialize overnight, but as each of these fructify over the next 12 months, Indian exporters can expect some relief. The biggest relief, however, will come only when India and the US are able to agree on terms that both leaders find palatable. In New Delhi, this is Abhimanyu Sharma for CNBC TV18.
Well, will 2026 be the year that we see a breakthrough in the India-US talks that have been underway pretty much through 2025? That's the big question. Now, 2025 was also the year rare earths moved from the margins to the center of global power. Export curbs, supply shocks, manufacturing disruptions all turned these minerals into strategic assets and forced countries, including India, to rethink how to secure their supply chains. Shivani Bazaz puts a spotlight on the year that made rare earth magnets really rare.
If there's one lesson global markets learned in 2025, it is this: the country that controls supply chains holds the power. Driving home this lesson were rare earth minerals, a small group of elements that quietly rewrote the rules of geopolitics, manufacturing, and energy security in 2025. The turning point came in April. China tightened exports licensing on rare earth elements. These elements are crucial for a host of manufacturing activities, from EVs to electronics to military equipments to renewable energy to a range of industrial processes. By October, those controls were expanded further to include magnets and even processing technology. But the impact was visible in April itself. Exports slowed, uncertainty crept into supply chains, and global manufacturing, from cars to clean energy, was suddenly left exposed. This wasn't about running out of minerals, it was about who controlled access to them. Now, that's because while rare earths may be a group of 17 critical elements and global production stood at around 196,000 tons in 2025, valued at around $12 to $15 billion, the industries these elements supported were collectively valued at a whopping $7 trillion globally. In number terms, one electric vehicle needs about 1 to 2 kgs of rare earth magnets. One offshore wind turbine can use anywhere between 600 to 2,000 kilograms, and a single fighter jet uses more than 400 kilograms across systems and sensors. So in effect, without rare earths, motors don't run and modern technology stalls. In addition, there are very few alternatives to rare earths at scale. So China's move was a masterstroke of sorts, and it caught the world flat-footed because China mines around 70% of rare earths globally and controls 85 to 90% of refining and processing and produces over 90% of the world's permanent magnets. This means that even if rare earths are mined outside China, they often still depend on Chinese processing to be useful. All this makes the supply chains extremely fragile and ripe to be weaponized. Factory floors went into chaos. Global EV sales, for instance, took a hit. Magnet shortage led to cost pressures and production risks. In India, Maruti Suzuki cut its EV production target sharply to around 8,000 units from earlier 26,000 units. This disruption was real. For their use in defense manufacturing, rare earths were firmly classified as strategic minerals, and NATO countries started increasing their stockpiles. Adding to the chaos was the market-driven surge in prices of many of these elements. One striking example is the price of yttrium jumped more than 4,000% during the period of supply stress. And so started a global scramble for rare earths, with almost every country and government entering the race. The US and its allies committed billions of dollars to build non-China refining capacity. The European Union, under its Critical Raw Materials Act, set a target to process 40% of its needs domestically. And Japan pushed long-term supply contracts and recycling. As a result, over 300 million tons of rare earth resources have now been identified outside China. Over 146 projects are already under development to extract and make these elements ready for use. But there's also a reality that none of this will happen overnight, or even in a handful of years. India also found itself at a sticky wicket with Chinese weaponizing rare earths. We import nearly 100% of the rare earth magnets, despite being home to about 6% of the global reserves. India's manufacturing push, on which the government has based the big portion of its plans for Viksit Bharat, was suddenly vulnerable. The government responded with a 7,280 crore rupee scheme aimed at building domestic magnet capacity of around 6,000 tons per year. This was aimed at not only reducing its dependence on China for these elements, but also eventually providing the world with an alternative supplier. As 2026 begins, the global race for rare earths is going to get crazier and well more intense. Global demand for rare earth is expected to grow by around 700% by 2040, driven by energy transition, the global semiconductor push, and the drive for defense and space supremacy. With stakes so high, rare earth minerals are no longer just commodities. They're strategic assets, they're global bargaining chips, they're carrots and they're sticks. And in this evolving new world order, those that dominate supply chains can dictate terms. And everyone wants in on that security that it offers. Back to you.
Well, the race for rare earths dominating headlines in 2025. Will India's PLI scheme spur local manufacturing? That's the big question. Up next on Rewind 2025, how will the economy shape up in next year? An exclusive CNBC TV18 poll right after this short break. Stay tuned. You're watching Rewind 2025. We're recapping the year that was, and we're also looking ahead into what sectors will be the outliers for 2026. Let's talk about metals. Aluminum prices saw a sharp rise this year, driven by supply constraints as well as energy costs. China accounts for nearly 60% of global aluminum production, but the output growth in China was just over 2% this year, leaving many to predict a further rise in prices in the new year. So what does 2026 have in store for aluminum? Nigel is standing by with the answers. Nigel.
Well, that's right. Aluminium prices are ending 2025 close to the highs that we have seen this year. So the big question is, does aluminium have more steam left for the next few years? The answer could probably be yes, because there are two factors at play. One is demand is rising and supply is tight. Let's focus on demand first up. Aluminium demand is moving towards a structural story as electronic vehicles use a lot more aluminium than traditional petrol or diesel vehicles. Solar renewable energy projects, well, they are aluminium heavy, and global grid expansion as well as electrification are only accelerating. Put it all together, aluminium demand is estimated to grow at around 2.5% per annum for the next many years. The booster shot is supply growth isn't keeping up. The global aluminium inventories are sitting at multi-year lows. The LME aluminium stocks, well, they are down by roughly around 20% on a year-on-year basis for the past month. China, the world's biggest producer, is already running at around 97% capacity utilization. Production growth in 2025 has been just around 2.5%. And China's capacity is capped. So you'll ask, what about outside China? Well, things ain't easy out there as well. Aluminium smelters, well, they are competing with AI data centers for electricity. The US, Europe, and Africa, all of them are struggling to lock in longer-term power contracts, which means fresh supply of aluminium could probably be hard to come by. Just to highlight a few examples with regard to the power issues. Century Aluminium Smelter in Iceland, well, it faced a partial shutdown in late 2025. That's in late October 2025. While Mozal Aluminium Smelter in Mozambique, that's set to be placed on care and maintenance from March 2026 because the smelter was unable to secure an electricity supply agreement. NALCO joined us here on CNBC TV18 and they said that they expect aluminium to stay in deficit for the next 2 years. On the cost side, aluminium cost curve is hovering around $2,400 per ton for nearly 90% of the producers. Now, in a deficit market like this, prices usually stay well above this cost curve. Let's wind it down then with the valuations of the listed plays. Listed aluminium plays, that is. Hindalco, well, they benefit from higher LME prices through its Indian operations. Though the near term, well, they'll see cash flows which will get impacted because of Novelis's Oswego unit, which was impacted by a fire. NALCO, well, they have soft alumina prices for now, but they'll benefit from stronger aluminium prices. And Vedanta's aluminium business, well, it contributes most of their EBITDA and stands to gain because capacity additions are coming on stream and they are also working on lower coal as well as bauxite costs via sourcing most of their raw material from captive sources. Bottom line, with demand structurally rising, supply constrained, aluminium could remain firmer for longer. That's the hope at least.
Well, the aluminum rally likely to continue. Nigel, many thanks. As 2025 draws to a close, what's in store for the economy? Lata is here with the key indicators for what we should be watching out for and an exclusive CNBC TV18 poll on what economists are penciling in for the new year. Lata.
The RBI Governor Malhotra recently described India's economy as being in a Goldilocks scenario, where growth is coming in higher than the long-term trend and inflation is lower than the long-term average. For 2026, economists polled by CNBC TV18 expect this Goldilocks scenario to continue, albeit with lesser intensity than in 2025. Our poll shows the economy is expected to grow by 6.8% over 7.5% this year. But this is the average. 50% of the economists had forecasts above 7% for next year, while 50% stood at just 6.5%. The 7% club see growth from rising consumption due to GST and income tax cuts and falling interest rates, and green shoots in capex in sectors like power and real estate. The 6.5% GDP club disagree with the private capex upcycle assumption. They see consumption as good, but not good enough to trigger massive capex. They also see growth slowing due to a weaker pace of government capex and still subdued private capex due to the global uncertainty. Respondents also see India's nominal GDP, that is output calculated at current prices without adjusting for price rise, at 9.7% next year, far better than the 8.3% this year. But here again, 50% see nominal GDP below 9.5%, which is, compared to previous decade of India's nominal GDP average at over 11%. Now, coming to CPI inflation, the poll sees it rise to 4% next year from the unusually low 1.9% this year. Here again, it's a divided house, with 50% expecting a continued benign 3.8% CPI, while the other half see CPI between 4 and 4.5%. All economists expect consumption to grow better than investment, with public capex slowing and private capex still diffident. The government is expected to reduce its fiscal deficit to 4.3% from 4.4%, in keeping with the long-term promise to lower deficit. But with the presentation of the 16th Finance Commission report, government may start targeting overall debt to GDP rather than fiscal deficit. There will be pressure to bring it down, that is debt to GDP down towards 80% from around 84% currently. However, of maximum interest is how much money will the centre and states plan to raise via bonds and state development loans. Our poll said this number would be at least 30 trillion rupees, up nearly 8.5% from this year's 27.7 trillion. Demand for government bonds may be much less next year than this asking amount. Hence, most people expect RBI to continue to buy bonds via OMOs or open market operations. Yet, the 10-year yield is seen slightly higher next year than this year. That is, the cost of capital is not falling. Now, the bigger talking point is India's external account. Like this year, the current account deficit will be modest next year as well at 1.06% of GDP. Now, current account refers to imports, exports, remittances, and monthly transfers by Indians living abroad to their families here. Now, here the deficit has lately fallen because of very good services exports, the GCC exports. The worry has been the capital account, with FPIs, that's foreign funds, shipping out $15 billion in 2024 and $17 billion in 2025, making the overall balance of payments negative at $5 billion last year and likely $22 billion this year. India cannot continuously keep shipping out dollars from our reserves kitty. Our poll says next year the outflows trend will end and we will see an inflow of $7 to $8 billion. Again, this is the average. Many economists see a $20 billion inflow, but some others see continued outflows or a very measly $1 billion inflow. It is these continuous outflows by FPIs and foreign direct investment that pressured the Indian rupee in 2025, making it depreciate nearly 6% versus the dollar. Our poll says economists expect the rupee to end the current year at 90.4 and lose just a nominal 2% next year, that's FY27, to end at 92 rupees per dollar. Finally, here come the googlies. Most of the numbers won't hold if the trade deal is not signed with the US sometime in 2026. In any case, the numbers will need to be tweaked as early in February, when the Ministry of Statistics will reveal a new GDP and CPI series with a fresh base of 2022 and 2024. So all numbers will need to be recast.
Well, plenty of numbers to watch out for, starting, of course, with the big budget. And we still don't know whether the budget is going to be on the 1st, which happens to be a Sunday, or there's going to be a change. Latha, many thanks for joining us. That's it then on this edition of Rewind 2025 as we recapped the year that was for India. Here's wishing all our viewers a very Merry Christmas, a Happy New Year. Stay tuned to CNBC TV18. We will continue to bring you information that you can use in the new year. From all of us here for now, goodbye and thanks for watching. Hello and welcome to Business 360. I'm Arundhati Ramnan, and here's wishing all of our viewers a very Merry Christmas. These are the headlines that we're tracking for you this evening. Sensex and Nifty fail to hold early gains and end with marginal losses. Mid-caps see sharper cuts. Rupee weakens against the dollar and moves closer to the 90 mark. Gold's golden run continues as the yellow metal touches new highs for the 51st time this year, registers its highest annual gain since 1979, clocks returns of 71%. Silver and platinum touch new highs. IT stocks decline after US overhauls the lottery system for H-1B visas to prioritize higher paid and higher skilled workers. A US judge also upholds the $100,000 fee on H-1B visas, rejecting a challenge from big tech companies. Energy giant BP will sell 65% stake in Castrol to investment firm Stonepeak for $6 billion. BP values Castrol at $10 billion and retains a 20% stake. Castrol India shares rally after Stonepeak announces a tender offer for shareholders. Sunil Mittal's Bharti Enterprises and PE giant Warburg Pincus to collectively pick up 49% stake in home appliances major Haier India. Reports peg the deal at around 15,000 crore rupees. China-based Haier Group will retain 49% stake post the transaction, while Haier India's management team will hold remaining the 2%. The Dilip Piramal family sells 26% stake in luggage maker VIP Industries to private equity firm Multiples through block deals. Multiples also announces a mandatory open offer for additional 26% stake. The Piramal family will continue to hold a 20% stake. Shares of VIP rally in trade. Delhi air quality improves slightly but hovers in the poor category. Delhi High Court hears a PIL seeking directions to classify air purifiers as medical devices, directs GST Council to consider slashing its GST rate. Union Minister Gadkari says he develops a throat infection if he stays in Delhi for 2 days. Union Cabinet approves 12,000 crore rupees to expand the Delhi Metro. The fifth phase of expansion will add one new station and take the network past 400 kilometers. Russian strikes on Ukraine's energy grid leaves thousands without electricity on the eve of Christmas. 3 people, including 2 traffic police officers, killed in Moscow after a second car explosion this week.
The Thackeray's bury the hatchet 20 years after going separate ways. Uddhav Thackeray and Raj Thackeray joined hands to announce an alliance just days before the civic body elections in Mumbai. ISRO's heaviest rocket till date blasts off to space. The rocket is carrying a US communications satellite weighing 6,100 kilograms. We will come to all of that and much more in just a bit. But first to Dalal Street, which failed to hold opening gains to end near the day's low. All key indices end in the red. Nifty closed below the 26,150 mark, dragged lower by Reliance and IT stocks. Mid-caps underperformed the blue chips, with that index falling over 0.5%. In the money market, the rupee weakened by over 13 paise against the dollar as it moves closer to the 90 mark once again. 10-year bond prices rallied in trade after RBI announced government bond purchase worth 2 lakh crore rupees and a $10 billion forex swap. The record run in commodities continues as geopolitical tensions fuel safe haven buying. Gold smashes records for the 51st time this year, clocking its largest annual gain since 1979, with returns of 71% in 2025. Silver and platinum follow suit, hitting fresh record highs yet again. Manisha Gupta is here with all of those details. Manisha?
Oh yes, 2025 shone and sparkled with the kind of all-time highs that we saw in gold, silver, platinum, copper, and a multi-year highs in various other metals as well. I'll start with silver first because it has been making all-time highs on a regular basis now, has gained up by 40% in last 1 month. It is up by 150% in last 1 year. So we have seen silver prices start with this year with 29.5. It's trading at 72.5 right now. The Indian silver prices started with 87,000. It's trading at 2,30,000 right now. So that's the kind of run-up that we have seen, because it's a 5th straight year of deficit, this one, and the next 2 years could be deficit as well. Industrial demand is strong, so is the investment demand via ETFs and physical buying has all taken the silver prices on the higher side, with expectations that you could be looking at higher highs in next year. Talk about gold then, and all-time highs onto this one. 51 times is what gold has done, made an all-time high in this year. We are up by 72% on this one. Very strong central bank buying. Dollar index has multi-month highs. We also are looking at geopolitical tensions, whether it's about US, Venezuela, Russia, Ukraine, Iran, Israel, all of that supportive. And add to that the fact that the central bank buying has been very, very on the stronger side there. Platinum, it's a 3rd year of deficit onto this one. Platinum is up by 163% in this year. It also is about very strong Chinese buying in platinum in sense of bars and coins. China also started platinum futures trading in this year, as further elevating the prices therein. And then it's about copper, all-time highs yet again here, $12,000 a ton on LME. Copper is also trading at all-time highs in China, in US and the Indian markets also. There are mining concerns in Chile, Peru and Indonesia supporting prices. And then there are tariff concerns. US also already is levying 50% tariffs on semi-finished copper products. US is looking at or reiterated that they will put tariffs also on copper grade ore when it comes to copper in the first quarter of 2026, also supporting prices from where we stand.
So that record run in commodities is continuing. Thank you so much for those details, Manisha. Shifting focus to the United States, the Department of Homeland Security has announced an overhaul of the long-standing lottery system for H-1B visas. It will replace it with a weighted selection model that prioritizes higher paid and higher skilled workers. The new change will take effect from February 27th and will apply to the FY 2027 H-1B registration season. Currently, around 70% of all H-1B visas are issued to entry-level and qualified wage workers, while only 30% of visas are issued to highly paid skilled workers. In a separate development, a U.S. judge upheld a $100,000 fee to process H-1B visa applications. The U.S. Chamber of Commerce, a lobby group that represents big tech companies, had challenged the fee announced in September. However, the judge ruled that the Trump administration's move is lawful. Stocks from the IT pack like Infosys, TCS and Wipro declined in today's trading session following the H-1B visa overhaul announcement. Reema Tendulkar joins us now with all of those details. Reema, how is this move likely to impact the Indian IT ecosystem going forward?
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
All right, Rima, many thanks for those details. The US State Department has said it will deny visas to 5 people, including former European Union Commissioner Thierry Breton. The Trump administration alleged that these 5 tried to pressurize American social media companies to censor opposing viewpoints. However, Breton rejected the claims, calling it a witch hunt. US officials describe Breton as a key architect of the EU's Digital Services Act, which requires stricter content moderation by online platforms. US President Donald Trump has claimed that his tariff policies drove the country's stronger than expected GDP growth in the third quarter. The country's GDP rose at an annualized rate of 4.3%, the fastest pace in 2 years. In a social media post, Trump wrote that the economic numbers will only get better. In a separate post, Trump said he would only consider candidates for Federal Reserve Chairman who agree with his views on interest rates. He wrote, and I quote, "I want my new Fed chairman to lower interest rates if the market is doing well, not destroy the market for no reason whatsoever," end of quote. And speaking of tariffs, the US government is set to increase tariffs on Chinese semiconductor imports from June 2027. In an overnight federal filing, officials said that the initial tariff rate on the imports will be 0 for 18 months. The delay in tariff signals a cooling off in trade tensions between Beijing and Washington. Energy giant BP has agreed to sell 65% stake in Castrol to investment firm Stonepeak for $6 billion. The deal values the business at $10.1 billion, including debt. Post the deal, BP will retain a minority stake via a joint venture. Castrol India gained nearly 9% after the deal was announced, but ended the day at 2% in the green. Sonal Bhutra joins us now with all of those details. Sonal, take us through the contours of this deal.
It is a big deal which is announced because BP or British Petroleum has announced they will be selling 65% stake in Castrol to Stonepeak at an enterprise value of $10 billion. That is the enterprise value. The consideration here is $6 billion, which will include accelerated dividend payments and will be fully utilized to reduce net debt. The other things that will include $0.8 billion of prepayment of future dividend income over medium to short term, and also other adjustments that the company will have in its books. They add in their statement that a significant proportion of Castrol GV minority interests relate to Castrol India Limited, which is the listed entity, and the stock surged after that statement as well. And it is important because remember, Castrol Limited holds 51% stake in Castrol India Limited. They say that there'll be a joint venture now where 35% will be with British Petroleum and 65% will be with Stonepeak, and they do not rule out any further stake sale as well. They indicate that following the 2-year lock-in period, they can actually sell the remaining 35% stake as well in Castrol Limited. So that is an important statement coming in. The transaction expected to complete by end of 2026, subject to regulatory approvals, and the minority interests include the stake that they have in India, Vietnam, Saudi Arabia, Thailand, and other jurisdictions as well. This is a release which is coming from BP and Castrol Limited. But from Bloomberg, we are also getting details that Stonepeak has announced tender offer to Castrol India holders, and it will tender the process after the main transaction gets over, that is the 65% stake sale. So Castrol India Limited remains in focus because of this big transaction that's happening at the parent front and will be on our radar as well.
So BP sells stake in Castrol. Thank you so much for those details, Sonal. Coal India ended in the green after the company's board gave an in-principle nod to list 2 of its subsidiaries. The company said that the proposed listing of Mahanadi Coalfields and Southeastern Coalfields is still awaiting regulatory approval. The announcement comes just days after the Coal Ministry advised Coal India to take concrete steps to ensure listing of its subsidiaries in FY27. Bharti Enterprises and PE giant Warburg Pincus will collectively pick up 49% stake in home appliances major Haier India. Reports have pegged the deal at around 15,000 crore rupees. China-based Haier Group will retain 49% stake post the transaction, while Haier India's management team will hold the remaining 2%. Promoters of luggage manufacturer VIP has completed the transfer of their stake to Multiples PE in a large block deal. 3.68 crore shares changed hands in 2 large transactions today. VIP's promoters had entered into an agreement this July to sell up to 32% stake to Multiples PE and others. The stock rallied close to 18% in trade. Mangalam Malu is here with all of those details. Mangalam?
Indeed, VIP was a big mover in today's trading session as 26% equity traded hands this morning, and it was understood that it was Dilip Piramal's family selling that 26% to Multiples. Why is that? Because remember, way back in July, the deal was announced where VIP Industries promoters would sell 32% stake to Multiples and a bunch of others at 388 rupees per share. But after the first tranche of the deal was done with Dilip Piramal's family selling 6% stake to Multiples, and then there was the mandatory open offer for which 26% money was supposed to be deposited by Multiples in an escrow account. Once that amount was released and the entire open offer process was done, that left that 26% to be traded, and that's exactly what took place, where 26% of the Piramal family stake has now been transferred. So 26 plus 6, 32% as per the deal. The deal is now complete. What remains to be seen now is what is the turnaround plan for VIP by Multiples. At the same time, look at what they are going to do in terms of aggressive competition, in the face of aggressive competition, and will they invest more money in VIP? The stock has been an underperformer and they've been losing not only money for shareholders but also in the marketplace. What brings back the glory days for VIP is something that the street will be eyeing.
All right, Mangalam, many thanks for those details. Now, the war between Russia and Ukraine rages on. Kiev has accused Russia of launching a massive overnight attack using over 600 drones and 30 missiles. The strikes have killed at least 3 people and caused widespread power cuts ahead of Christmas. Meanwhile, Russia said it hit Ukrainian energy facilities and other transport infrastructure used by the military. 3 people, including 2 police officers, were killed in an explosion in Moscow. According to Russian authorities, 2 traffic police saw a suspicious individual near a police car, and when they approached him, an explosive device was detonated. Officials have launched a criminal case to investigate the incident. Libya's army chief was killed when the private jet he was traveling in crashed shortly after takeoff. The plane crashed near Ankara in Turkey. The crash claimed the lives of all those on board, including 4 senior Libyan military officers and 3 crew members. According to officials, preliminary findings have ruled out sabotage and suggested technical malfunction. On that note, it is time for us to head into a short break. But coming up, the survivor of the 2017 Unnao rape case, along with her mother, staged a protest at India Gate against the Delhi High Court's decision to grant bail to former BJP MLA Kuldeep Singh Sengar. More details on that in just a bit. Stay tuned. Welcome back. You're still with us on Business 360. Amid the national capital's pollution crisis, the Delhi High Court has directed the GST Council to consider lowering or removing the GST on air purifiers at the earliest. This comes after a public interest litigation filed before the court sought to classify air purifiers as medical devices. The plea argued that they are essential and not luxury items. Currently, air purifiers face a GST of 18%. The plea seeks to reduce it to 5%, citing the right to life and clean air. The court will hear the case again on December 26th. Speaking at an event, Union Transport Minister Nitin Gadkari said that he develops a throat infection if he stays in Delhi for 2 days.
आज सबसे बड़ा राष्ट्रवाद कोई होगा उदय जी तो देश के इंपोर्ट को कम करना और एक्सपोर्ट को बढ़ाना क्या परिस्थिति बनी है हमारी मैं 2 दिन मुश्किल से रहता हूं इन्फेक्शन हो गया ये दिल्ली पूरा प्रदूषण से त्रस्त है क्यों है मैं ट्रांसपोर्ट मंत्री हूं 40% हमारे कारण होता है
The 2017 Unnao rape survivor has said that she would move the Supreme Court against the Delhi High Court's decision to suspend the jail term of expelled BJP leader Kuldeep Sengar, currently serving life imprisonment. Speaking at India Gate, the survivor said the bail order has left her and her family shocked and terrified.
हमको न्याय चाहिए हम सरकार से यही गुहार लगा आपको रास्ते में क्यों उतारा ये सर पता नहीं क्यों उतार दिया रास्ते में हमको नहीं मालूम है कि हमको मरवाना चाहते हैं सिक्योरिटी वाले भी मिलके आप मदर हैं आप ऑर्डर के बाद सर आपकी लड़की कहाँ है लड़की मेरी गाड़ी में सीआरपीएफ कैद करके ले गई सर हम आपसे कोर्ट से यही गुहार लगाना चाहते हैं कुलदीप सेंगर को बेल मिल चुकी है सर कुलदीप सेंगर को बेल मिल चुकी है उनकी बेल कैंसिल की जाए नहीं हम सब लोग अपनी जान दे देंगे घर नहीं जाएंगे वापस होके
Archana Solanki joins us now to break down the Delhi High Court order. Archana?
Well, Arundhati, the visuals that the entire country witnessed this morning have actually created a storm. A rape survivor being dragged and pulled away by cops. This happened after the Delhi High Court granted bail to former BJP MLA Kuldeep Sengar in the 2017 Unnao rape case after suspending his life sentence. Well, the case is about the kidnapping and rape of a 17-year-old girl in Uttar Pradesh's Unnao. The then-sitting BJP MLA Kuldeep Singh Sengar was convicted of the rape and was also found guilty in the death of the girl's father in judicial custody. The case came to light after the survivor attempted to set herself on fire outside Chief Minister Yogi Adityanath's residence in April 2018, alleging the police had refused to register her case. Now, after the Delhi High Court's order yesterday, the survivor and her mother staged a protest at India Gate, during which they were first dragged and then detained by the police. The survivor has alleged that Kuldeep Singh Sengar has been released because of the upcoming elections. The Delhi High Court also directed Sengar not to come within a 5-kilometer radius of the survivor's house and not threaten her or her mother because there were concerns about their safety. The big question, why did the Delhi High Court grant him bail? The answer lies in the technicality of the POCSO Act, which is India's special law to protect children under the age of 18 from sexual assault and harassment. Now, Sengar was sentenced to life imprisonment in December 2019 by a Delhi trial court under Section 376(2) rape of the IPC and Section 5 and 6 of the POCSO Act for raping a minor. The case was probed by the CBI. The basis for releasing Sengar is the court's finding that the offence of aggravated penetrative sexual assault under the POCSO Act was not made out against him. Let me simplify. Section 5 of the POCSO Act defines the offence of aggravated penetrative sexual assault by an authority figure like a police officer or a member of the armed forces, basically somebody who's a public servant. The judges of the Delhi High Court said that this is not applicable in the present case as an MLA is not defined as a public servant and therefore cannot be sentenced for the remainder of his life or 20 years in this case as the punishment carries. The court also said that he has already served the minimum punishment of 7 years that a person can be given under Section 4 of the POCSO Act. As of November 2014, Sengar has spent around 7 years and 5 months in jail. Well, he's currently lodged in jail and will remain in jail as he's also serving a 10-year sentence in the custodial death case of the rape survivor's father. Her mother, the rape survivor's mother, has said that she will move the Supreme Court.
All right, Archana, thank you so much for taking us through all of those details. But moving on, it was a historic moment for India as the country's heaviest launch vehicle, popularly dubbed as Bahubali, has safely placed a massive 6.1-ton US satellite into the orbit. The rocket took off from Sriharikota in Andhra Pradesh. After a flight journey of about 15 minutes, the spacecraft Bluebird Block 2, riding piggyback on the rocket, got separated and reached its intended orbit. India has granted no objection certificate to two new airlines just days after the Indigo cancellation crisis left over 9 lakh passengers stranded across the country. Aviation Minister Ram Mohan Naidu tweeted last night that 2 new airlines have been given the NOC, taking the total number to 3. But this is only the first step, and these proposed airlines have no aircraft and face a long road to take off. Madhya Mujawar is here to explain why. Madhya?
Well, 3 airlines getting new NOC. Let me clarify the aviation minister's recent tweet, because that has created the impression that multiple new airlines are set to enter Indian skies soon. But the reality on ground is far more complex. Getting a no objection certificate or NOC is just the first step and not a clearance to start flying. Let me explain what the minister's tweet really means and why launching an airline in India is extremely difficult. Over the last week, the minister says he met teams from Shank Air, Al Hind Air and Fly Express. And so far in 2024, 3 airlines have received NOCs. Kerala-based Air Kerala was the first one to get a NOC in early 2024. Shank Air already has an NOC. Al Hind Air also had an NOC, but it registered as a separate entity for the airline and got a new NOC last week that the aviation minister was referring to in his tweet. Fly Express, based in South India, is the latest entrant to get an NOC. But an NOC does not mean that flights are imminent. These airlines are aiming, the airlines that got NOC in 2024 were aiming to start operations in mid-2025, but none has a confirmed launch timeline now. All 3 are still non-operational, and there's a reason for that. Paperwork alone doesn't get planes into the air. To actually launch operations, an airline needs aircraft and an air operator permit from the DGCA. And this is where most startups are getting stuck. One startup promoter has told CNBC TV18 today that they spent over 30 crore rupees already on offices and hiring key post holders, but they're struggling to get aircraft. Why? That's the key question, because lessors, the promoter told us, are demanding around 100 crores as security deposit and proof of 500 crore rupees in their bank as guarantees. So what these startups are expecting from the government is some backing so that the lessors become more confident about leasing aircraft to Indian Airlines. Now remember, during the Go First bankruptcy, lessors had a long legal battle with banks and other stakeholders as no one was releasing the aircraft due to pending dues by the airline. So that explains why leasing to Indian Airlines becomes risky for them. So while the government's intent to encourage more airlines is clear, and India doesn't have a shortage of aspiring airlines, it has a shortage of aircraft access, capital and lessor confidence. So until those challenges are addressed, an NOC remains just a document and not a takeoff clearance.
All right, Madhya, thank you for clarifying what it means to start a new airline in India. But with that, it is a wrap on this edition of Business 360. More news and updates coming up on the other side. Stay tuned. Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Tonbo Imaging, a defense electronics original equipment manufacturer, has filed its DRHP with SEBI. The company's initial public offering comprises an offer of sale of 18,85,246 equity shares of 2 rupees each. The firm reported FY25 revenue of 469 crore rupees with 65% from overseas sales. Multi-asset investment firm Anicut Capital has announced the final close of its third private credit fund, Grand Anicut Fund 4, at 1,275 crore rupees, surpassing its initial target of 1,000 crore rupees. The portfolio spans consumer, engineering services, SaaS, manufacturing, hospitality and shipbuilding, with Anicut writing average checks of 80 crore rupees per transaction. Paytm's parent company 197 Communications is expanding overseas by setting up new subsidiaries in Indonesia and Luxembourg and bringing in a new investor for its UAE payments arm. Paytm plans to invest up to 25 crore rupees in each of the 2 new subsidiaries. ServiceNow will acquire cybersecurity firm Armis for $7.75 billion. Move aims to bolster ServiceNow's AI platform with Armis's device scanning and threat detection capabilities. The acquisition is expected to be finalized in the latter half of 2026. Italy's antitrust authority has ordered Meta Platforms to suspend contractual rules that could block rival AI chatbots from operating on WhatsApp. The move comes amid an investigation into alleged abuse of dominant market position by the US. Tech giant Meta has called the decision fundamentally flawed and says it will challenge the order in court. Those were the headlines that we're tracking for you this evening. But on the hot seat today, as organizations scale, one of their biggest challenges isn't talent or technology, it's memory. Critical context, decisions and knowledge are often lost as teams change and tools fragment. Enter Buddy AI. The B2B first startup is building organizational memory intelligence so companies can capture, store and retrieve context across meetings, conversations and workflows. With paid enterprise pilots live, a growing revenue pipeline and a software-first approach to solving a multi-billion-dollar problem, we speak to the founder of Buddy AI about their product, traction and what's next for the company. Joining me now is Anit Patel. Anit, thank you so much for taking time out and being here with us on Startup Street. You know, as I pointed out, Buddy AI is sort of tackling a problem every organization faces, right? Loss of institutional memory. How big is this challenge today and how does your platform sort of solve it in a fundamentally different way? And take us through what you have on offer and give us some use cases.
Sure. Hey, Arundhati, thank you so much for having me here. So the core problem that that the world is currently going through is the organizational memory. Everyone is building the second brain and memory for normal users, but no one is really targeting brain for organizations, which we really want to go and solve. Because if we do that, if we have a first brain for any company or organization, everything will be there and there are going to be early signals pretty much in those companies. We are primarily having a hardware and software stack. So this is the hardware that we have. What it does is it keeps on capturing the conversations that we do. And once the conversations are captured, it goes to our state-of-the-art AI algorithms, and then it gives various analytics. It also stores in the database, transcribes the information, summarizes, such that it keeps on building an entire memory workflow. And over time, once we have lots of memory, it can also act as a brain.
Sure. And, you know, you're positioning Buddy AI as a software-first organizational memory company, not just another productivity or AI tool, right? So what makes your approach distinct in a crowded enterprise AI market?
So we are primarily targeting both hardware and software here. Even though we have all the innovation happening in software, we also feel that AI is not only should not be only restricted to softwares, but also should be having a physical intelligence capabilities, which we are enabling and which is different from all of our competitors. Most of the competitors are only software, but we are keeping a mix of hardware and software, such that any application which are off desk or anything that does not require any phone or wants to go away from phone, this makes it possible, and then it opens up lots of capabilities around that.
Sure. And, you know, you're at a very nascent stage at this point in time. You've got like 5+ paid B2B pilots live and around about $50,000 in ARR, right? So what kind of teams are sort of adopting Buddy AI and what early feedback are you getting from enterprises?
So in our case, field sales has been a power-packed use case where we are solving problem all the way from ground up till the organizations. So anyone doing sales on fields, they capture their conversation from customers, and there is a knowledge base building on top of that. So that field sales for field sales reps, we are documenting at ease. Field sales managers get overall understanding of what exactly is happening on ground on real time. Basically, it's called ride along. And then an organization can get understanding of what is really happening at the early stage, and also the revenue can be hampered. So we give analytics on top of that. So our power packed use case is field sales, and we are going to target that use case for a couple of years, and we are going to go deep down into that, and we are going to solve problem for that.
All right. And you've got letters of intent worth roughly $500,000, right? What is sort of driving this pipeline, and how confident are you about converting these into long-term customers?
So all of these LOIs are almost here to get converted. So we are expecting them to convert in Q1 itself next year. We are pretty much ahead in terms of integration. And January, we are just doing lots of live beta across teams in US, all the way from CPG, beverage, alcohol, medical representatives, and at the same time, real estate agents and so on across America. So it's going to be very fast paced. Right now, they are collecting data mostly that is territorial data, which is mostly by the competitors. But we also give them conversational intelligence on top of that. That makes this adoption very fast.
Sure, and your market opportunity is estimated at $3.6 billion, right? So where do you see the strongest demand coming from? Which geographies are you seeing demand coming from? Knowledge-heavy enterprises, fast-growing startups, or regulated industries? Where are you seeing all of this demand coming in from?
So in terms of geography, United States has always been forefront in terms of adoption of this tech. There were like early signals in terms of sales and revenue by early market establishment companies. At the same time, we also see this adoption very fast with the teams which are directly related to revenue. So say sales, anyone doing with marketing, anyone who is related to accounts, they are the one who are going to impact the revenue of the company. Thus the companies experiment a lot on that front. And those are the areas where we see fastest adoption. Fast growing startups, for sure, there is going to be an adoption, but anyone who is scaling the teams in terms of sales, in terms of their marketing or field sales, they are going to be the one who are going to be adopted very fast.
Sure.
In terms of highly regulated industries like medical, the adoption is going to be there, but it's going to take time in terms of conversion. So the conversion time over there is more than like 6 months.
So the conversion time is going to be an issue there when it comes to certain industries. But if you could quickly tell us in 30 seconds, you've also got your proprietary memory intelligence wearable, right? But you don't want to place yourself as the hardware being the main part of your revenue driver. So how does this device strengthen your software offering without changing your core business model?
So what this device does is when anyone is off the desk or on the field, they don't have to do anything or interact with any software. It just sits on your either label or it goes as a pendant, and it will keep on listening to the conversation. We primarily do transcription. We don't store any audio. So what will happen is, just imagine you just have a note taker buddy with you every time, and without doing any hindrance and just focusing on what is important, it ingest the data on real time to our databases. Thus, this takes away entire user interaction and experience hindrances with any software on real time.
All right, Anit, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much.
Moving on, one of the biggest challenges in girls' education today isn't enrollment, it's retention. As adolescent dropouts continue to worry policymakers and educators alike, new intervention models are coming into focus. At Nudge Charcha 2025, one such initiative, Launch Girls, outlined how life skills and agency building are being used to tackle the dropout gap at the most vulnerable stage. CNBC TV18's Aishwarya Anand brings you this report.
Across India, millions of girls enter adolescence with education, but leave without agency. According to global estimates, nearly 1 in 3 girls does not complete secondary school, often due to early marriage, unpaid care work, or lack of pathways beyond the classroom. Launch Girls works at this critical stage. helping adolescent girls build life skills, confidence and economic readiness before dropout becomes destiny.
So I've spent my entire life in social impact work. I started a first NGO where we worked skilling life skills for boys and girls using football. All boys in schools were signing up and principals were like, we'll need a boys football team, etc. And girls weren't signing up. That's when the problem started for me in 2011. Parents don't let girls continue in schools after 14, 15, 16. They're pulled back to go home and start working, or they prioritize boys. This is still the situation across our country, by the way. So when we started Launch Girls, we thought really hard about how do we reach every single girl, no matter how remote she is or how close to us she is, right? Cities as well as rural parts of India, rural parts of Kenya, rural parts of Rwanda.
While enrollment has improved, retention and readiness remain the real test. Launch Girls focuses on building 21st century skills and personal agency, tools designed to help girls navigate life beyond schools, not just pass exams.
We're able to work with girls studying BA, BCom, engineering, law, fashion design across colleges. And we don't select girls, right? We bring in all girls in our college, in government systems especially. Now, what they're missing, whether they do BA or BCom, is how do you think strategically? How do you problem solve? How do you think creatively? How do you really know what is change readiness in the real world? Those are the foundational skills. And we've built a competency framework of 7 skills. And then we apply entrepreneurial education and we deliver that as a package for girls across streams. In the past 5 years, we worked with 25,000 girls across 16 countries. We actually work with governments in India and we work with NGOs across Africa. And we train governments and train NGOs to deliver this program.
How do you ensure girls remain connected after the program ends, especially through their transitions like high school or college?
We've been very serious about building out a community, and we do this through simple tech like WhatsApp, right? We're connecting not only the girls as an alumni community to stay in touch because we can give them so many ideas, but they have a huge peer network. Second, we are really building out this database of we have technology in place tracking every girl who comes into the system. So let's say a girl came into Girl Boss and Launch Girls in 9th grade, and if she's continuing with us for 3 years, we're tracking what is happening with her with our program for 3 years and then where is she going. And this is all some of the new work that we're doing right now. But from 2025, we'll know everyone where they are in the system and what are they doing. Attendance has gone from 30% to above 50% in classrooms wherever we exist. In smaller work, in smaller countries in Africa, we're seeing, in every batch, there is 90% attendance of girls coming if girls weren't coming earlier.
What began as a grassroots program is now moving closer to the system.
We want to be able to work with millions, and we're building this movement of 1 million. We are actually partnering directly with governments in India, and we're trying to make it formal part of curriculum in colleges. So it's like course credit. We're starting a few of our AI boot camps as soon as 2026 now. So I think that's going to be one of the core kind of pillars where girls are learning AI, applying it for entrepreneurship, to their gig economy jobs, or whether they join corporates, or whether they start a really small business wherever they are.
By stepping in before choices narrow, Launch Girls is working to ensure education does not end at the classroom but translates into independence. For many families, this is the first visible break from intergenerational cycles of early marriage and economic dependence.
At least like 80% of our girls are proudly saying that we are the first girls from our village to reach college, continue college and finish college, right? So that's been big. And we are the first girls from our families to not get married before 18.
On that note, it is time for us to head into a short break. But coming up next, India's direct-to-consumer innerwear and shapewear startup Underneath aims to transform the innerwear and shapewear industry. We put co-founders Kusha Kapila and Vimarsh Razdan on the hot seat. Stay tuned.
Well, mass premium shapewear brand Underneath, which was founded just in April this year, has raised $6 million in a pre-Series A funding round from Fireside Ventures. The company claims it has crossed 150 crore rupees in annual recurring revenue while remaining EBITDA positive in less than 8 months since its launch. Now, these funds are going to be deployed for scaling operations, strengthening distribution channels across cities in India. On that note, let me invite the company's co-founders Kusha Kapila and Vimarsh Razdan for more on the brand's growth story. Vimarsh, Kusha, both of you, thanks very much for being here. Kusha, I'll start with you as to, what really got you to start Underneath, prompting that journey from being a content creator and actor to an entrepreneur. You started this Instagram series, of course, which we've all been seeing what to wear under, which has helped the brand gain some kind of early traction. How did you translate that into 150 crores of revenues?
Thank you so much, Ritu, for having us. This is a really exciting day for us. I think I knew how to make content. I knew how to tell a story. And this is a category I was extremely passionate about. I would go on sets and not find clothes in my size. I would feel extremely frustrated, and I then started making my own kit. I started finding out brands that could support me on a set so that I could feel my best and I could feel most confident. And I realized there's a huge gap, there's a huge market. And I remember this one time I shared a shapewear brand on my story, maybe 3-4 years ago, and there were 80,000 sticker taps on that brand. And that day I thought, we need to come up with better shapewear or better innerwear for the Indian women. And that's where it started from. I was so passionate about it that I never scripted these videos. I would just put the camera on, and Ghazal and Vimarsh were like, what? You anyway so passionate about it. Talk about it the way you talk about it in front of us. And then, I could make it funny, I think that's one thing I know how to do. So yeah, and I'm just so proud of the community we've built at Underneath. It's honestly really inspiring.
Well, Vimarsh, to you then, what has really helped you scale this quickly while you're also remaining EBITDA positive? Are there operational levers like, supply chain, inventory management, pricing, or something else that have enabled you to grow profitably?
First of all, thank you for having me. I think very important, my mindset always about business was always to have profitability from day one, because we are not a tech business, we are a consumer business where unit economics have to make sense from day one. Why we were profitable? Of course, there was a tremendous push from the community Kusha has built over the years. They trusted the brand. We didn't have to put too much marketing dollars into performance. There was a huge beeline when we launched on first day itself. There was tremendous amount of sales. We did a very good job with the product, where Kusha and I built the product for first 6 months when nobody knew what was happening in the background. And we, from month 2, we saw a huge repeat rate coming in.
Vimarsh, could you quickly give us a sense of the kind of monthly sales you're doing at the moment? At what pace is that growing, and the kind of customer retention you're seeing?
Again, coming back to when Kusha and I met for the first time, we always used to debate that we have to solve a large enough problem. We could always make a very good premium product, which maybe a very small percentage of Indians were looking for as a solution. So the focus was to reach more and more people, a problem which was faced by a large number of people. That is why the mass premium category was what we chose.
Kusha, I was reading that more than 2 lakh women provided feedback to Underneath. How are you prioritizing product decisions while scaling, and how much of that product roadmap is really shaped directly by these kind of community inputs you're getting?
It was difficult initially because as a creator, you take every bad comment to heart. And at that point, Vimarsh stepped in and said, there is a percentage that you need to look into. If only 1 or 2% people are not liking a particular product, that does not mean the product is not successful. So I think there was a lot of learning curve there. After a while, we started also taking very potent feedback. Our CRM team is, I think, one of the biggest pillars of this business. And you'll see this in our comment section also, where people are constantly talking about how helpful they've been and how we do have a follow-up strategy with them after they've made a sale.
Vimarsh, mass premium positioning is kind of tricky. How are you setting price points that appeal to Indian women while also keeping your margins healthy?
Definitely, distribution is one area in which we would like to invest. Any apparel business for that is very working capital heavy. Distribution needs that push of inventory. We are not going to have, our GTM doesn't define that we do all channels at the same time. We have very selectively chosen distribution channels in which we can penetrate and reach the customers we want to reach. Having said that, R&D is another basket in which we will put a lot of dollars.
Well, Kusha, what's the longer-term plan for Underneath? Are there adjacent categories that you're looking to enter?
I kind of sum it up in just one line. I want to take over the complete top drawer in a woman's wardrobe. I want to have every product there by Underneath. A woman's top drawer is a very, it's very foundational, because considering her outfit gets decided with what she has, with respect to in her top drawer. So I want to take over the complete top drawer first, post which there's definitely intent to get into more categories.
Okay, Vimarsh, the $6 million pre-Series A funding, how are you going to deploy it exactly? Can you walk us through your priorities and the kind of markets or channels that will see the biggest focus?
But definitely, distribution is one area in which we would like to invest. Any apparel business for that is very working capital heavy. Distribution needs that push of inventory. We are not going to have, our GTM doesn't define that we do all channels at the same time. We have very selectively chosen distribution channels in which we can penetrate and reach the customers we want to reach. Having said that, R&D is another basket in which we will put a lot of dollars. We would like to upgrade our product constantly, and the loop we have created with the customers in terms of communication, they define where we should invest on product upgradation. We have one of our departments in which we are strengthening by imbibing more technology, imbibing and recruiting more talent is the product development department. We are also wanting to do JVs across overseas JVs where this the R&D is evolved over the last many years.
Kusha, beyond this operational scaling, how do you plan to leverage this funding for, say, brand building, for marketing, and some kind of content initiatives as well to strengthen the market presence?
Definitely, for sure. Definitely going to the big ticket creative agencies to make campaigns. Of course, I will be fully involved in that, but it'll be great to work with collaborators who are making some of the best creative content, branded content in this country. I would love to hire more people, hire more faces. I would love to have Farah Khan be a part of Underneath. I feel like she reaches out to such an interesting audience and she's having such a great moment, online.
Kusha, as the brand continues to grow, how are you going to maintain your personal creative voice in marketing and storytelling while also ensuring some sort of consistency across the broader portfolio and managing the business part of it as well?
The whys and the hows of the brand are very clear in my head and how I want to scale it. There's not a lot of difference between what I am trying to say with this brand and the kind of women that I want to reach with this brand. And that's the same with my personal content also. I am about the girlhood experience. And as I am a woman now, I am into the womanhood experience. I always have created for the female gaze. Maybe if Underneath at some point has products for men, which by the way, we're getting a lot of requests for already, because through our series, a lot of men have had education on the innerwear section for women.
Okay, on that note, Vimarsh and Kusha, thank you so much for being with us here on CNBC TV18. It's been a pleasure having you both join us. Thank you.
Hello and welcome to Rewind 2025. I'm Shireen Bhan. The year has turned out to be a landmark for India's financial regulatory landscape. Under Governor Sanjay Malhotra, the Reserve Bank of India has rolled out one of the most far-reaching reform agendas in over a decade. Ritu explains what changed, why it matters, and how the RBI's regulatory philosophy itself has evolved.
2025 is going to be remembered as the year the Reserve Bank of India fundamentally rewired how Indian banks operate. Under Governor Sanjay Malhotra, the RBI did not just tweak rules, it dismantled and rewrote them, merging many and simplifying more. In all, we saw more than 80 regulatory changes in a single year, all aimed at the single objective to free up bank balance sheets, to revive credit growth and prepare the system for India's next investment cycle. At the heart of these reforms lies a clear shift in regulatory thinking. Governor Sanjay Malhotra has argued that Indian banks today are far stronger than they were a decade ago, better capitalized, better governed, and more resilient to shocks.
We have taken measures very balanced, calibrated, thought out, considered, and we'll continue to take more measures, as and when required. Always the aim will be to promote the stability while at the same time improving competitiveness, encouraging and enhancing growth of the economy.
One of the most consequential changes came in M&A financing. For years, banks had faced tight restrictions on funding acquisitions and promoter buyouts, which was a hangover from the excesses of the last credit cycle. In 2025, the RBI recalibrated those limits and opened the doors for acquisition financing by banks. The signal was clear. Consolidation and capital reallocation are now seen as part of economic efficiency, not excess.
So there was a period of time when we thought acquisition by one company of another company typically is a hostile route, and that the bank should not be an instrument in doing this. So this was long back. So I think that has now been set right in current context where everything is the market and everything goes through the marketplace. And now in a completely different context, I believe the Reserve Bank has done the right thing to open it up because it's an excellent avenue of business for banks.
Linked to this was a broader easing of rules governing bank loans against shares, IPO financing and structured credit.
These announcements are, I call them as banking reforms 3.0.
Yeah.
And these reforms are, for a long-standing demand from the banking industry.
Yeah.
And very proactively addressed by the RBI.
Yeah.
I believe that they're absolutely credit accretive.
Prudentially, the RBI chose sequencing over shock therapy. The expected credit loss framework was deferred, allowing banks 4 years' time to adapt systems and capital planning. Older project finance norms were withdrawn and merged into a simple, unified credit framework.
Circumstances change, times change, requirements change, and so nothing should be frozen in time. And so that's why we had earlier also said that we will be continuously reviewing our regulations. It's very important that we continuously revise, review, improve our whole regulatory ecosystem.
Another major cleanup came through the removal of overlapping and legacy frameworks. The RBI consolidated a total of 3,809 circulars into updated master directions and scrapped another 5,673 obsolete circulars to ease compliance. Liquidity coverage ratio norms were relaxed and external commercial borrowing norms were liberalized, giving firms greater access to offshore capital while retaining safeguards on maturity, currency risk, and end use.
The global discourse has been to move towards a principle-based regulation for reasons of simplicity over exhaustive specification, which may not even be possible. Not only is it not possible, but it can also lead to a very creative way of complying with the regulations adopting a tick box kind of an approach that, yes, we have complied with these, and these provisions of the various regulations, and not serve really, the outcome.
These reforms extended beyond large banks. Risk weights on lending to NBFCs and MFIs were restored, co-lending norms expanded, and priority sector rules eased for small finance banks. Parallelly, the RBI addressed the cost of credit. Through 2025, it delivered 4 rate cuts, taking the repo rate from 6.5% to 5.25%. Loan reset norms were reviewed to ensure faster transmission to borrowers. The governor exuded confidence.
Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period.
But the clearest signal of confidence showed through in bank licensing. After a long hiatus, the RBI granted a full-fledged banking license to AU Small Finance Bank and also approved Fino Payments Bank's transition into a small finance bank. The other significant shift came when RBI signaled greater openness to foreign capital, paving the way for Japan's SMBC to invest in Yes Bank and Emirates NBD buying a stake in RBL Bank. Taken together, the RBI's actions in 2025 mark a decisive shift from crisis-era regulation to growth-era regulation. Now, this is not deregulation without discipline, but the tone has changed. The RBI is no longer regulating for the last crisis, it is regulating for the next investment cycle. In Bengaluru, Ritu Singh.
Well, a significant year, 2025 for the RBI, many regulatory changes being ushered in. Now, 2025 has also been a landmark year for the goods and services tax in India, characterized by sweeping reforms, simplified slabs, strong collections and a major shake-up in how tobacco and sin goods are taxed. Timsy Jaipuria has the details on what changed. Timsy, the government finally gave the consumers and the industry something that they'd spent years asking for.
Well, let me take you back to Independence Day 2025. Since Prime Minister Modi took charge, he has reserved his 15th August speech for some big bang announcement. And this year was no different.
मेरे प्यारे देशवासियों, हम नेक्स्ट जनरेशन जीएसटी रिफॉर्म्स लेकर के आ रहे हैं। ये दिवाली के अंदर आपके लिए तोहफा बन जाएंगे।
The Finance Ministry went into hyperdrive after this, and Finance Minister Nirmala Sitharaman was able to deliver on what industry had been demanding for years: a simpler, cleaner rate structure, much ahead of schedule. She announced the changes on the 3rd September and set the 22nd of September for the biggest GST rate rationalization since the tax was launched in 2017. The old 4-slab structure of 5%, 12%, 18% and 28% was the first to go. In its place, we have a simplified 2-rate structure, a merit rate of 5% and a standard rate of 18%. We also have a special rate of 40% applicable only on sin goods. Of course, this meant a ton of goods had to be moved to new rates. So many key commodities like butter, ghee, biscuits, pasta, namkeen, etc., especially those categorized as basic and essential goods, were brought under the 5% slab. Remember, many of these were earlier taxed at either 12% or 18%. Goods like cement and paints, which were classified as standard goods, were moved to the 18% bracket. Most services remained to this rate slab. A major category here is basic 4-wheelers and 2-wheelers. These have been brought down from the 28% plus cess bracket to 18%, making them more affordable. Similarly, a bunch of consumer durables like TVs, refrigerators and washing machines have been moved down to the 18% slab from the earlier 28% slab. The council also cleaned up the list of items in the
luxury, sin and demerit goods category. Now this list is limited to a few items like aerated drinks and luxury cars. So in the case of aerated beverages, the tax incidence has been kept the same but made simpler. Instead of 28% plus cess of 12%, these attract a flat 40%. Similarly, luxury cars also attract a flat 40% GST instead of the earlier 28% plus cess. Medicines were the other big impact area of this exercise. A host of drugs were brought down from 12% to either nil or were zero rated. This made these drugs cheaper. GST on essential services like health and life insurance premia has also been brought down from 18% to nil. So that's the much needed relief for these insurance customers and a long-standing demand from both the populace and industry. The government's confidence in pushing through and implementing this major reform came from two sources. One is the fact that there was a need to re-energize the consumption cycle. The other was a trend of strong GST collections, which were averaging at nearly 2 lakh rupees a month for most of the financial year. As you can see on this chart, there is a slight dip in the number announced at the beginning of December to 1.7 lakh crore rupees. This is the first collection where the full impact of GST 2.0 was felt, and the government is of the opinion that it is still indicating overall GST revenues as remaining robust. And so that's a strong sign that the simplified slabs, a rise in consumption due to cheaper goods, and improved compliance under GST 2.0 are helping sustain tax buoyancy. But there's one area that's yet to see a change in slabs, and that's the levy on cigarettes, tobacco products and pan masala. The GST Council had held off making any changes to these products as the compensation cess these brought in was still being used to pay off the loans taken to compensate states for the losses due to COVID-19 pandemic. Currently, these goods attract 28% GST plus cess. But we do have some clarity on how these will change once the loans are repaid. According to two bills introduced by the government, the Health Securities and National Security Cess Bill 2025 and Central Excise Amendment Bill 2025, the government plans to replace the quantum of compensation cess levy on cigarettes, cigars, gutka and other tobacco products and pan masala. Under GST 2.0, these products are expected to fall under the new demerit slab of 40%, and the gap in the tax incidence will be made up by the new taxes. On pan masala, for instance, tax will be 40% GST plus Health Securities and National Securities cess. On cigarettes and other tobacco products, we are looking at 40% GST plus a higher rate of central excise duty. Effectively, this will retain the overall tax incidence on these products, preventing any sharp drop in government revenues while keeping prices steady. So, for the Goods and Services Tax 2025 has not been just a year of routine tweaks. It's been a year of evolution into a leaner tax with simpler slabs, stronger collections and sharper enforcement, while keeping consumer prices in check and setting the consumption cycle rolling again. In New Delhi, Timsi Jaipuria.
Well, 2025, the year that we saw that big GST rate rationalization. Up next on Rewind 2025, a year of top-level churn across the FMCG industry in India and around the world. That and more when we return. You're watching Rewind. Well, this is Rewind 2025. It's been a sluggish year for steel makers across the world. Weak demand, high energy costs, tariff tensions, and persistent overcapacity proved to be a heady cocktail for companies world over. However, the new year is bringing fresh hope for the industry. Nigel explains why steel makers are pinning their hopes on a turnaround in 2026.
Well, that's right. The big question is what's in store for steel in 2026? Well, in the near term, steel prices, they have weakened, and that's likely to weigh on margins for steel companies just in the near term. In India, the hot rolled coil prices, they're down by roughly around 8% from the September quarter. That's driven by lower Asian prices as well as the expiry of the interim 12% safeguard duty, which happened in early November. But that's where things start to get a little bit more interesting. Now, there are growing hopes that steel prices may be close to the bottom. And they say this because Asian steel spreads, well, they are at near 15-year lows, almost 40% below their long-term averages. At these prices, these levels, spreads, well, they look unsustainable. And part of the street is optimistic of a recovery, especially if China's anti-involution policy leads to production or supply cuts. Now, let's turn our attention to the largest steel producer, which is China. China's steel production is down by close to 3 to around 4% year to date. But exports, they're up by around 6.5 to around 7%, and they remain elevated because Chinese demand has been weak. In fact, Chinese exports have crossed 100 million tons in the first 11 months of 2025 itself, and that continues to put pressure on steel prices. Turning to India, well, India's steel consumption has grown by around 11 to around 12% CAGR over the last 4 years, and growth of around 7 to 8% is expected in the times to come. At the same time, Indian steel companies, well, they are adding capacity, which means demand needs to keep pace to avoid oversupply. And that brings us to a key policy trigger. With Chinese exports high and export options limited, well, steel companies are hoping for the reintroduction of safeguard duty that expired in November 2025. Earlier in 2025, remember, the interim 12% safeguard duty helped domestic HRC prices trade at roughly around 9% premium to landed imports. But once that duty expired in November, prices, well, they have quickly converged with import levels. If safeguard duty returns, well, they could provide the much needed support to domestic steel prices. So heading into 2026, steel, well, it faces near-term pressure, but the setup could hopefully slowly improve with spreads near the bottom. Policy support will be in focus, and demand growth, as always, will be the key swing factor.
Well, thanks very much, Nigel. Will it be a turnaround year for steel? One will have to wait to see. But it was a year of change for consumer companies world over. Unilever, PepsiCo, Diageo, L'Oreal all saw changes in the corner office. In India, HUL, Nestle, Britannia saw leadership changes as the FMCG industry transformed into a high-stakes battleground. Shilpa reports the message to FMCG CEOs from the boardroom is simple: perform or perish.
The corner offices at many FMCG firms saw new occupants through 2025. From Hindustan Unilever and Britannia in India to Nestle, Unilever to PepsiCo globally, 2025 had some of the biggest consumer giants seeing one of the most dramatic waves of C-suite churn in over a decade. Let's start at home. HUL, India's largest FMCG company, saw CEO Rohit Java step down barely 2 years in the top job. His exit came after muted sales, flat volumes, and investor pushback on the revival pace. Priya Nair, who served as the president of beauty and well-being at Unilever globally and has over 30 years of experience, has since taken charge and set HUL on a path that focuses on volumes to rekindle growth. Then there's Britannia. CEO Rajneet Kohli resigned in March and moved to HUL. He was replaced at Britannia by Rakshit Hargave, who was the CEO of Birla Opus. But then came the real shocker. Long-time MD Varun Berry abruptly announced his exit in November, with even his notice period being waived off. Markets reacted instantly, the stock slid over 5%, and all eyes are now on incoming chief Rakshit Hargave to steady the ship. There were also planned changes at Nestle India. That was a planned retirement. Manish Tiwari, who was heading Amazon India, has stepped in to replace Suresh Narayanan, who has been at the helm for a decade. Narayanan successfully steered Nestle through its biggest crisis, the Maggi ban, and then he focused on innovation and diversified Nestle's portfolio with expansion into categories like breakfast cereals, pet food, and more. Tiwari is now banking on digital growth, innovation, and a consumer-centric strategy to get the FMCG giant accelerating on the next leg of growth. L'Oreal India and Diageo India also saw leadership changes. Overall, 2025 have been a tough year for the FMCG industry in India, which struggled with rising inflation, muted performance, slowing urban demand. While income tax cuts, GST rates changes, and cooling inflation towards the end of the year, providing some relief, signs of recovery have begun to show. But the challenge is to keep the ship steady at the time of choppy waters on the global geopolitical and trade front as well. Now, while leadership changes in India were due to a mix of muted performance and planned transitions, the churn in the global FMCG landscape has been a lot more dramatic. Let's start with Nestle Global. Now, the company saw 3 CEOs change in less than 14 months. In August 2024, Mark Schneider was replaced with Laurent Fréchy as Nestle CEO to rev up the company's performance. But Fréchy was ousted less than a year later over an undisclosed personal relationship, and Philippe Navratil was then appointed CEO. Nestle's then chairman, Paul Bulke, too, first announced that he would retire in 2026, a year earlier than his scheduled retirement. But then he exited even earlier in September this year, and Pablo Ayala has taken over from the 1st of October. All against the backdrop of the company's worst growth in 2 decades, with volumes being flat or even declining and sales shrinking as well, and the boardroom losing patience quickly. Unilever also threw a curveball. CEO Heinz Schumacher was out in less than 2 years, and the company was looking to turn around, but the board wanted faster change, and they handed over the reins to CFO Fernando Fernandez, who has now taken over as the CEO. Diageo also has multiple faces that have occupied the corner office through 2025. In the middle of a multi-year cost-cutting reset, it saw CEO Deborah Crew step down. Nick Jangiani took over as interim chief, and now the firm is looking forward to welcoming Sir Dave Lewis as its new CEO in 2026, tasked with turning around the maker of Johnnie Walker, which has been plagued with declining sales and high debt. Even Coke and PepsiCo are both pivoting as they struggle to swallow weak beverage demand worldwide. Henrique Brown, who worked at Coke in various leadership roles for 30 years, is now set to take over as the next CEO from March. Rival Pepsi is also in the throes of reorganization. It has elevated its North America CEO to a newly created EVP and vice chairman role, and it has appointed new CEOs, one for North America and one for Latin America Foods, and it soon also unveiled a new plan to accelerate sales and also improve margins. Now, in the global FMCG space, there's a clear pattern to the cause of this churn. Sluggish volumes, discretionary slowdown, rising competition, rising input costs, and geopolitical uncertainty. But most of it all, investor impatience. Boards and investors no longer want 5-year or 10-year plans. They want visible action, and they want it fast. 2025 has seen the FMCG world transform from slow, steady, and predictable to high-stakes, high-pressure battleground where even industry veterans can be shown the door if numbers don't impress. In today's FMCG boardrooms, the message is brutally simple: deliver growth or move aside.
Well, 2025 turning out to be a year of churn for the FMCG sector. Will 2026 beckon better days? With that, it is time for us to wrap up this edition of Rewind 2025. Here's wishing all of our viewers a very Merry Christmas and a very Happy New Year. Keep watching CNBC TV18. We promise to keep you updated on everything that matters to you. Stay with us. We're back after this break.
Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League Season 3, A Glorious Decade, A Century of Service.
Hello and welcome to Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League, Season 3, a platform where pioneering minds come together to shape the future of law, business and society. In this edition, we turn our lens to a defining question. What will India look like at 100? As one of the world's fastest growing economies, India stands at an inflection point where industrial strategy, regulatory innovation, trade resilience and generational change in business leadership will collectively determine the next century of progress. Joining us today is Mr. Sajjan Jindal, Chairman and Managing Director of the JSW Group, a global business leader who has helped shape India's steel, energy and industrial capabilities. From strategic global collaborations to the shift towards renewable energy and green hydrogen, his views offer a window into how India is building competitive strength in an evolving geo-economic landscape. Alongside him is Mr. Cyril Shroff, Managing Partner at Cyril Amarchand Mangaldas, a legal voice who has consistently driven conversations on governance, sustainability, and the legal frameworks needed for India's transformation. Together, they explore how India can secure its supply chains, strengthen strategic sovereignty, accelerate green industrialization, and prepare for generational transition in business so that industry and policy move in tandem. Gentlemen, thank you both, Mr. Jindal and Mr. Shroff, for being here and being part of this special conversation. Mr. Jindal, if I can start by asking you, sir, and maybe just setting the stage for the next 30 minutes or so, what is your vision for India at 100? What I mean is our economy, businesses, what changes would you like to see to enable this vision?
So first of all, thank you very much for having me on this program, and thank you, Cyril, for this very important program that CNBC airs. India at 100, it's very clearly defined. Prime Minister Modi has very clearly defined India at 100, where India would be a $30 trillion economy, and where India would be a Viksit Bharat, a developed country. So I think these are very important statements that Prime Minister has set the agenda, set the goal, that how the country should be at in 2047 when India turns 100. So these are very ambitious goals, and I think we, as an economy, as a country, we need to really look at how to get there as a third largest economy and most populous country in the world when India is 100 years old.
Mr. Shroff, same question to you, sir. How do you see it, India at 100?
No, I echo everything that Sajjan said in terms of Viksit Bharat, an economy that is in the top 3 economies of the world. Slot number 3 is what we are all expecting. A lot of trillions, whether it's 30, 40, 50, whatever it is, but there's still a lot of trillions. But I sort of want to approach it from a slightly different lens, that if you are a developed economy and if you're playing at that level of the game globally, I think there is a certain business culture and a civilizational culture that also goes with it. And approaching it from that angle, partly because of kind of what my profession is, I want to see India becoming a kind of global rule of law leader as well. Part of the problem that the world faces with us is that we're seen as very unpredictable. We don't enforce contracts. Anything can happen anytime in India on a policy front as well. So I want to be seen as India to be seen as an economy that is stable, a civilization that is stable, a system that is stable and predictable as well, which preserves the entrepreneurial spirit and ambition. I mean, not many countries have the ambition that we do have, and what Prime Minister Modi has spelled out. And I want that all to be enabled by a culture and a system that supports it. So there is no point being a rich country where nothing works in terms of policy and others. So the policy, the enforcement, the legal and the civilizational framework that goes with with being a leading economy is what I would look forward to. then you can say that you are a mature and rich economy.
Just to talk about that globalization bit, right, and taking it to your sector, Mr. Jindal, steel demand is strong here in India. But you've in the past warned against the risk of India becoming a bit of a dumping ground for subsidized Chinese steel. And this kind of is not just steel, but as this strategic competition between US and China perhaps picks up and is going to be there for many years to come, excess Chinese capacity is going to find home elsewhere. So just your thoughts, Mr. Jindal, on this important issue.
No, so if we talk specifically on steel or actually on any product, China today, the big challenge that the global manufacturing industry faces is that China has huge overcapacity in every field. They have over the years built large overcapacity, and because of that, they are highly competitive within China. Their margins are very low, but because of they have a lot of government support and stuff like that. So when they start to sell at a depressed prices, with an idea to kill the industry in another country, then that is something which every country in the world will try to protect. Case in point is that there was a time when Chinese were selling penicillin, which is a bulk drug which goes into manufacturing antibiotics and other drugs. And China just dropped the price, and India had two plants which both were in the public sector, and they could not survive because of the under the dumping pressure of China, and government of India did not, because it was pharmaceutical, it was a drug, they did not put any anti-dumping or control that, and both our Indian manufacturing companies got shut. So that and then they jacked up the prices, and India is now paying higher price for the penicillin which we still import. So there are many such instances, and therefore we should have a very viable or very effective system where we can control these dumping.
So it is necessary as well, without wearing into protectionism, as you said, right? But important to protect strategic national industries against excessive dumping. I mean, sometimes because they're finding markets, sometimes with the specific aim, as you pointed out, maybe to take competition out of the market. Mr. Shroff, if you want to come in, I mean, how do you do it without, as I said, veering into protectionism? Because it's necessary to do. What's the legal side to this?
So let me just sort of step back a bit in terms of what the world is experiencing, and is kind of experiencing it on steroids in this calendar year, is a geopolitical risk. Whether it's the two wars that are being fought, or whether it's the uncertainty of tariffs, or the way US is kind of repositioning itself in global politics, and as well, it's like the perfect storm. And it has made it very difficult for other nations to really find a spot and be stable about it in terms of their outlook or their domestic politics as well. And so I think this is what we are experiencing now. And I don't think the story is going to probably continue for a bit. We'll see a lot of this happen in 2026 as well, which involves not only how you reposition your relationship with other countries or companies in other countries in terms of the contracting of the business framework, but also domestic politics as well, and the policies that you evolve to change that. On the domestic side, you need to become much more competitive. Coming back to, how should business resilience being built in this time of great geopolitical, geolegal uncertainty? I think it's a complex, cocktail of many factors as well. And, this is the number one conversation that is facing corporate boards at this point of time, or, entrepreneurs as well, in terms of how they navigate the future. But with these challenges, this is also the moment of great opportunity as well. So if you're nimble enough, and if you can see some of these changes coming down the pike, this is probably one of the greatest periods of opportunity for Indian businesses as well. And there are many who are embracing that opportunity. Even I think fortunes are being made. Well, it is not an accident that India's capital markets is one of the most vibrant in the world. 25% or so of all IPOs which were made last year came from India, and there's a reason for that. A lot of multinational subsidiaries are being listed in India as well. So in all this uncertainty and ambiguity, I think India is shining out as an example, as a kind of almost like an oasis of hope. And we have all the underlying factors in our favor. We've got political stability, we've got demography, we have democracy as well. So to succeed at this scale in a rule of law based democracy is not easy, and I think we're doing it.
Mr. Jindal, Mr. Shroff, stay right there. We're going to pick up on some of the points you made and address more issues on the other side of this very quick commercial break.
Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League Season 3, A Glorious Decade, A Century of Service. Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League Season 3, A Glorious Decade, A Century of Service.
Welcome back. You're watching Cyril Amarchand Mangaldas presents The Thought League Season 3. We're in conversation with Sajjan Jindal and Cyril Shroff, exploring how India can build geo-economic resilience, scale and sustainable industrial growth. Let's continue this conversation. Mr. Jindal, JSW's entry into defense production marks a sharp diversification and, in a way, alignment with what is needed in terms of national ambitions to build out industries like that. I mean, how are you thinking about India's strategic resource security, especially in critical minerals and defense manufacturing through an industrial lens, sir?
No, so, all these years, India's defense production was very limited and mostly driven by the public sector, mostly the ordnance factories of which were owned by the defense itself. So they were not good products, not competitive, and it was not an industry which was thriving. So I think what this government has done in the last 10, 12 years is that they have brought in a new energy into the defense manufacturing, not only for Indian defense services, but also for the global markets. And that's really working. And many business houses have got into manufacturing defense for the defense, and whether it is drones or guns or cannons or whatever you may call it, the vehicles and all of all of them are being manufactured in the defense field. And especially given the geopolitics now, defense is becoming more and more important. And even EU, there's a huge amount of spend that is after the Russia-Ukraine war. There's a huge spend on defense, even the EU. So this is an industry which I believe can be a very big industry coming out of India, because it needs a lot of manufacturing, a lot of different types of things which India is very good at.
No, absolutely. Mr. Jindal, just to continue on that point, right? I mean, given, and as Mr. Shroff said, geo-legal risks and geopolitical uncertainty is the big one, which perhaps continues into 26 as well. Given rising geopolitical competition over energy security and green tech, what kind of industrial diplomacy or resource alliances would you like to see India pursue? Because this is going to be state-led in that sense. Example, I mean, the lithium triangle, Africa, Middle East partnerships. I mean, what would you like to see happen here, sir?
Yeah. No, so you asked, the second question was the India's reliance on the critical minerals. So, you know, because because India is a large country and we have a huge resource of critical mineral within our land. Unfortunately, we have not explored them, and we have never really used them. These critical minerals. It is only now, when China is threatening to block the critical minerals, or, for example, magnets or lithium to come into India, we need to. We have never, as a country, we have never looked at it from a global strategic point of view, like China has done. So we need to really go out there and acquire assets, whether it is in Chile, in Argentina, in Africa, in Australia. For our critical requirement. I mean, India is a very large country with huge population. So we would need all these assets. Not only we should explore within India, but we should also acquire assets globally. And these discussions has happened in the government. I have myself discussed these points, and government is very keen, and there are now new PLI schemes being launched by the government, where permanent magnets or the material for the magnets should be manufactured, the rare earth should be used within India, and government is giving support for these kind of things. So I think these are very essential.
Mr. Shroff, as a renewable and sort of green energy, green hydrogen investment scale, what legal tools can be deployed to, in a way, sort of de-risk these build-outs, infrastructure build-outs, particularly land permitting and project financing, sir?
So these are all very complicated projects with a very intricate contractual framework as well. So you need to have your under policy underpinning as well as contractual frameworks to support this. So, like, for example, take a green hydrogen plant as well. Both the technology as well as the contracting framework is mind-boggling. But you need to, these projects have to be set up in India. We are committed to certain green goals as well. So India will go down that path, but you need a framework, policy framework that will support it. And I think the government is doing its bit in terms of thinking through a lot of these, changes that are required. On renewables, I think already India is a leader. I would say that we are sort of well on our way to becoming the renewables capital of the world as well. With America probably going down a slightly different path on ESG, but Europe and other parts of the world are quite committed to this, and so are we. I think we are seeing the impact of environmental degradation in our part of the world as well. So the sort of environment and ESG theme and green themes are very relevant for us, and I think India is well on that way to make that possible. And what we need, therefore, is a enabling policy framework, contracts and enforcement systems that work, and the financing. I think our financial markets will have to support this kind of long-term project finance, where project risk is spread over, it's not short-term, it's not balance sheet financing. These are all project financing which, stretches to 20, 30 years.
Yeah.
That's what we need.
Yeah, absolutely. Some is happening, others like developing deeper corporate bond markets in work in progress for a long, long time. Hopefully, things will change for the better. Well, Mr. Jindal, I began the show by saying, well, there's all kinds of things which go into the mix into the 2047 vision. One important aspect is going to be generational transition, right? How do you view this transition in India's legacy businesses, combined with transition of businesses into emerging sectors themselves, emerging newer industries themselves?
No, I think so. One, let me talk about the generational shift or the new generation that's coming into the country, which is going to really reap the benefit of India at 100. So the good news is that the new generation is now highly charged. Whatever I see, they're very smart, and they're highly charged, as well as they are really raring to go. So that's something which is a real good news, because as our country grows, we will certainly require a very a highly educated and very able leadership. So the new generation is coming up there. On the generational shift, in the sense on technology and on modern facilities to create, I think India is learning very quickly and really coming up on the technology front. And today, the new generation plants that are being built in the country are not second to any plant in the world. In fact, we are fortunate that we are building these facilities in this time when the technology has really changed, with the lots of AI being introduced and lots of robotics being introduced in our industry. So probably in 10 years' time, we will be a much more modern economy compared to the European economy or the American economy. This is what I believe. Though America is modernizing fast, but still we will be building from scratch something which will be far more modern than anywhere else in the world.
Well, that's good to hear, sir. Mr. Shroff, when you advise on generational transition, what factors do you bear in mind?
So first, I just have I'm sort of in Sajjan's camp on this. There are two views just now in corporate India on the next generation. There's one view that the next generation doesn't have fire in the belly; they're all trust fund kids and all of that, and that they don't have that entrepreneurial energy to drive it forward, just like the older generation, like Sajjan or people like that. So I completely disagree with that. I'm in the same camp as Sajjan. I believe that the next generation has fire in the belly. They have ambition, but they're going to do things in a different way. So I am in the camp that I think there is a lot of hope in the next generation, that they will do interesting things, but they're just going to use a different playbook. Now, the generation transition you have to view from 2 points of view. One is transition of businesses, and then the second is transition of the ownership class of the promoters. So it depends on where you start. For kind of the old-fashioned traditional businesses, you might start in the 1950s, when India sort of became free, and that we are roughly in the 75th to 80th year of this, and 2-3 cycles have gone. The other way of looking at it is, when did India really get economic freedom, which was in 91. And there's a whole new generation of businesses which were kind of formed and born at that time. We are in the 35th, or somewhere between 35 and 40 years, and they're going through their flip as well. A lot of new businesses and many large cap businesses today are falling in that. There are businesses which were created, entrepreneurs who came into the business for the first time in that period. So there are 2 generational transitions of businesses going on, and also 2 generational transitions of business families going on as well. Some are moving from like the 3rd to 4th or 4th to 5th. And there are some which are moving from 1st to 2nd and 2nd to 3rd. And they all are coming in different shapes and sizes. So that generational transition has to be well managed. I think there is a kind of an operational technical toolkit of family constitutions and this and that, which is kind of the easy part. There is now art and science to this, but it is more the transition of the entrepreneurial mindset. I think that is the biggest thing where I think the next generation of leadership needs to be given hope. They need to be given mentorship. And I think they need to be given the governance toolkit to be able to manage what is now emerging as New India, which is a very different thing from what it was 30, 40 years ago.
That's all for this edition of the Thought League. A big thank you, Mr. Jindal and Mr. Shroff, for your insights on India at 100 and the future of industry, sustainability and business leadership. Thanks for watching. Thanks for staying with us. More conversations shaping the future coming up in the coming episodes.
Cyril Amarchand Mangaldas presents CNBC TV18, The Thought League Season 3, A Glorious Decade, A Century of Service.